future is examined and reimagined. In January 2026, NDTV will be at the heart of
Welcome. You're watching NDTV Profit. This is Ask Profit, the afternoon edition. For viewers who are tuning in, you can ask all your stock-related queries on this show on the numbers that will be flashing on your screen up there. You can either call us or WhatsApp us. Before we do that, let's take a quick look as to how the markets are doing. Well, probably the expiry playing its part, and the Nifty 50 is now below the 26,000 level, well beyond the 26,000 level, almost 70 points below that 26,000 level is what we are seeing on the Nifty 50. And largely, if you can try to pull up the heat map, I think it's just 5 or 6 counters which are in the green. Apart from that, everything is a sea of red with regards to where the Nifty 50 is concerned. And even the counters which are in the green, there's hardly any movement happening there. And heavyweights like Reliance, seeing pressure down by about 2%. Dr. Reddy is down 2% as well. Your IT names like Tech Mahindra, TCS, Wipro, all down by about 2 to 2.5% each. You have Hindalco, ONGC as well as Geo Financial, which are also down anywhere in that range to 3 to 3.8 odd %. So that's with regards to where all of these heavyweights are concerned, which are actually pulling down the Nifty as we speak. But the Bank Nifty is also almost in tandem with where the Nifty 50 is down by about 0.6 odd % on the Bank Nifty. And if we can try to quickly pull up the sectoral heat map to see as to how sectors are looking like right now, because overall we've seen the entire day we've seen as to how the pressure has built up in terms of where the advanced decline ratio stands, and you have all your sectors in the red right now. It's red across that chart. Metals losing almost 3% in trade today. Oil and gas down almost 2.7%. Nifty Energy down 2% as well. PSU banks also feeling that heat, down by about 2 odd %. Nifty IT again in the red, down by about 1.7%. So yesterday there was a slight relief for the Nifty IT, but today it's again down and back in the red. But let's quickly pull up the advanced decline ratio before I go on to Puneet to discuss as to how the broader markets are doing, which by the way are also under pressure, and that gap has been widening for the advanced decline ratio as well, and widening by the day, and that is a problem, and that's reflected, Puneet, in the mid cap and the small cap indexes as well.
Yeah, it just seems to be a bloodbath, as you rightly highlighted, and that consistent pressure that we are seeing on the indexes is concerning right now, because those levels that we've seen on the Nifty 50 broken down yet again, and largely visible on them. So let's pull up the mid cap small cap index very quickly, give you that perspective. So Nifty of course down below the 26,000 level and down 200 points. In the morning, when me and Mahima did the Ask Profit, the morning edition, it was down 100 points, consistent pressure. The mid cap 150 is down 1.4%, small caps down 1.5%, and the BSC 500 will reflect the pressure that we're seeing across the board today. So Avanti feeds after a really long time is down almost 7.8%. So is Hindustan Zinc. Maybe finally some pressure being taken off, in terms of that on the stock price. So it has been inching up on a daily basis right now. Both that and Hindustan Copper is also down 4.6%. Both those counters have been in focus. But Mahima, the first query for today, largely what are you picking up?
Well, before I take the query, of course, let me welcome in our guest for the day, Chandan Taparia, Head Technical and Derivatives Research at Motilal Oswal, and Gaurav Shah of Geojit Invest joining us now. Welcome to both of you, gentlemen, and a very good afternoon to the both of you. I think before I take the stock query, Chandan, I think your quick view on markets will make absolute sense right now.
Good afternoon. Thanks for having me. So Nifty index has been making lower top, lower bottom from last 3 days. Just on Monday, it made an all-time high at 26,373, and now is struggling to hold 50 DEMA. That's near 25,880 marks. So we have seen some decline, but major trend is range mode as of now, because we have noticed that in last almost 9 to 10 weeks, the index remain consolidative between 25,700 to 26,300. So I believe somehow support-based buying could emerge. However, we have seen decline in last 4 days. Concerns are there. many heavyweights and small cap counters are finding pressure. But index per se, I believe on further decline, 25,700 could act as a major support to play the range between 25,700 to 26,250, 26,300 levels.
So that's the view coming in with regards to where the benchmarks are concerned. But let's go on to the first query. Ram Singh Tiwari is asking this question and asking about BSE. Wants a view as to where charts are concerned. So Chandan, I'll stick with you for this as well. BSE, what are the charts indicating?
So overall, we have noticed that selective exchange or capital market themes are doing well in this market scenario. MCX is doing well. That is also because of the huge participation in the gold and silver. BSE also looks good. The interesting fact is just 5 to 6 days back, it took support near 2570, and that earlier used to be a key hurdle. So role reversal kind of pattern were formed in BSE near 2570. Now it has been forming the higher base. It's slightly down, but I believe buy on decline could continue. If someone is looking for medium-term point of view, 2570 can be used as a key support for an up move towards 2950. If looking for very short-term point of view, then I believe 2640 needs to use as a key support. So in both the scenario, buy on decline is advised. Count is likely to see positive range-bound bias going forward.
Got the view, Chandan, and a very good afternoon to you. But let's go across to the first caller for today. It's coming in from Bengaluru, and Mohan has a stock query for us. Mohan, good afternoon. Welcome to Ask Profit. What's your query?
Good afternoon. I just want to know long-term view on this Gokuldas exports in KPR mills.
Okay, and you are looking to enter this counter for the long term?
I want to enter the long-term counter. Why? The reason behind, I just want to know, I saw a 500% US tariff. Both the stocks have been crashed to maximum or no more than 13%.
Yeah.
So I just wanted to know whether can I buy this for a long-term view.
Got the view, Mohan. But let me take that across with our guest as well. Gaurang, very good afternoon, and thanks so much for joining in today. What do you make of the export plays? Now, of course, the specific query is on KPR mills and Gokuldas export, but that 500% tariff largely on the US Russian oil, and we are still awaiting details from that. But what do you make of the move today, down almost 10% as Gokuldas today?
Thank you, Puneet, for having me on the show. Good afternoon to all the viewers of NDTV Profit and to all of you all. A small disclosure before we go any further that all recommendations that I'll be sharing this afternoon on your show, Puneet, are a part of our fundamental research team long-term recommendations. Our company, Jiyojit or myself, we do not have any kind of interest, financial interest, investments, no conflict of interest. But we give similar advice to our clients that they might have their investment interest. So I think the entire export-related plays are down and out because of the statements made by the President of the United States of America, 500% tariff on all the countries which have a relationship with Russia as far as energy requirement is concerned, that is crude and natural gas. Remains to be seen how the entire story unfolds as we go into the next week. Tomorrow, I believe, Puneet, is the date for the outcome for the case which has been filed with the Supreme Court of the United States of America. And I think the judgment on the order is going to be passed tomorrow. That will be also interesting to watch as to what the stand over there is. But with this export-related play and the concern and this advice, Puneet, purely is to all the investors who have elevated risk appetite. We have coverage on one export-related play which has got a focus in not only in US but also in rest of the world, and that is Avanti Feeds. This is, of course, an aqua and fishery kind of a business, largely into shrimps, export of shrimps. This is one company on which our fundamental research team is positive. On Gokuldas or KPR, we don't have any standalone reports, so I won't be able to comment on that.
Okay, all right. So that's with regards to where some of these names are concerned, which are of course exposed to tariffs, coming into picture. But moving on to the next question, which is from Vanita Bala, who's writing us from Kuwait and asking about CAMS. She wants to know the considerable price at which she can make an entry for a fresh buy. She's already holding 25 shares at the levels of 740. Can she accumulate more at the current levels or maybe the levels that you're watching out for? Chandan, on the charts, what would you recommend?
So CAMS has been consolidating from last couple of weeks. In fact, the momentum is missing on both the side. The good part is that multiple supports are visible near 720, but at the same time, supplies are continuously shifting lower. So I believe range bound bias is there as of now. If someone is holding the position with technical view, 720 has to be applied as a key support. On upside, we believe slow and steady it can head towards 800, 810 kind of levels.
All right, so that's with regards to where CAM stands. The next question that we have is from Raj, who is writing us from Karnataka and asking about CMS Info Systems. He's holding 250 odd shares at an average price of 535. He wants to know, he's already sitting on a loss of 35% by the way. Wants to know if he can exit, continue to hold or average out from a medium term perspective. Gaurang, I'll take this up with you. I think the stock has been buzzing on the back of the big order win that has come in for them from SBI for around 1,000 odd crores with a visibility of 10 odd years. But your view with regards to CMS Info Systems?
Well, firstly, I would advise the viewer and the investor that don't let your capital erode 30-35% or more, because then the recovery of your capital itself becomes a big question mark. Forget about profit on the investments. Now, yes, I also read that news and the order that CMS Info System has got from SBI, 1,000 crore order for 10 year for cash management and distribution. No specific comments, Mahima, because we don't have any coverage. But my sense is that autos should be a place where you could definitely look. NBFCs is another sector wherein companies have performed well, and the growth and earnings visibility is very, very clear. So, alternative, of course, I'm not saying that you should exit from the stock, but alternatively, you can look at Ashok Leyland, L&T Finance, Eternal, Bharat Electronics Limited, which is a defense play and has been holding out quite well despite of the kind of correction that we've seen in the market.
Okay, all right. So that's the view coming in with regards to where CMS Info Systems stands. The next question that we have is from Parth Sarthi, who's a senior citizen who's writing us from Chennai, asking about NMDC, and he wants a technical view on this one. He's bought at the levels of 72. His holding period is for the next 6 months. Chandan, your view on the charts?
So NMDC and selective metal mining counter were doing well in last 3 to 4 weeks, led by strong buying in metal sector. But now it formed a bearish candle in daily chart. Already it has seen a decent run up. So we need to keep in mind that major trend is positive, but on immediate basis, due to the global concerns, I believe some profit booking could be there. So approach is to utilize the decline towards 78, 79 for bargain buying. And with that level, I believe 75 can be used as a support for a swing towards 84 to 86. So immediate structure is negative, use the decline because the medium term outlook is positive.
Got the view, Chandan, but we have another caller now coming in from Bengaluru, and Karthik has a stock query for us. Karthik, very good afternoon. Welcome to Ask Profit. What's your query?
Yeah, good afternoon, Puneet. I have a query on Sandhar Technologies. I wanted to know, I have around 15 shares, but I wanted to add more, another 50.
Okay.
So is it a good time to enter, or I'm looking for a 1 year view?
1 year view, got it. And Karthik, do you hold any other auto ancillary company in your portfolio apart from Sandhar Tech as of now?
No, I don't.
Okay. We very interestingly, we also had the management yesterday on small cap buzzers. Was sounding off very positive as well. But Gaurang, you have a quick view or coverage on Sandhar Tech, anything that you can offer, Karthik right now, and if not, any view on your top pick in the auto component space?
Well, so we are positive on the auto component, and put it, look, one thing is very, very clear. If auto sector is going to do well, then auto components, tire manufacturing companies, battery manufacturing companies is likely to do well. Uno Minda, Endurance Technologies, CIE Automotive, Samvardhan Motherson. These are some of the names in the OEM segment on which we are positive. JK Tire is from the tire manufacturing sector that we are positive on. From the automobile battery stroke industrial batteries, we are positive on Amara Raja Mobility and Excite Industries.
All right, okay. So that's with regards to where some of these auto anchors are concerned. The next question that we have is on NCC, and Noel John is asking this question, wants to know as to what are the prospects for this particular counter in the next 1 year. Chandan, what are you viewing on the charts for NCC? He's got 2,000 odd shares, but he's not given his buying price. But for the next 1 year, do you think it's a good counter to continue to hold?
The structure of the counter is weak. It has been making lower top, lower bottom on the weekly and the monthly chart. In fact, an invert cup and handle pattern is visible, which has the bearish implication. It gave the breakdown below 170, and after that, the supply is shifting lower to 165 or 160 marks. So till it doesn't surpass 160, I believe some more profit booking decline could be seen, which can take it towards probably 140, 135 kind of level. So I believe 10 to 15% more profit booking or corrective move cannot be ruled out in this counter, given the recent price structure, which is negative.
Got that view, Chandan. But another query that we're getting in, and we have been getting in quite a bit on the EMS space, and this one's on Kaynes Technologies. Now, Chandrasekharan from Chennai is writing in this query. He's holding 50 shares at 5725, so sitting at a loss right now. He's asking, and he can hold it for the next 1 year. So he's asking if we should wait or sell or book the losses right now. Gaurang, the correction in the EMS space has been quite steep across counters, probably triggered by Kaynes Tech. And yesterday I did speak about, and I did a piece on Kaynes Tech, the next 3 years, the cash flow, net cash flow is going to be negative, almost 2,000-4,000 crores. What is your view, firstly, on this correction, specifically on Kaynes Tech, as well as, if any, top picks in the sector?
So we are positive, Puneet, as a sector, that is EMS, chips, semiconductor, PCBs. Two names that feature on our fundamental coverage from this particular sector. One of them is PG Electroplast and the other one is CG Power. Kaynes Tech, not only the negative cash flow, but also there was a concern with respect to some accounting principles, if I'm not mistaken, Puneet. I tend to forget exactly what the news item was. But yes, the correction in this particular sector has started with Kaynes Tech, and the way the stock has been losing ground and the kind of selling that it is witnessing. I think unless and until you have clarity in terms of improvement in numbers, I think one should basically be a little bit cautious. I won't give any specific comments on Kaynes Tech because again, we don't have coverage. And once again, I will say that don't let your capital erode 30, 40, 50%. Wherein the recovery of your capital becomes a big question mark.
Gaurang, you said PG Electroplast, and what was the other company?
CG Power.
CG Power, got it. We have another caller now from Chennai again. Swaminathan has a stock query for us. Swaminathan, good afternoon and welcome to Ask Profit. What's your query?
I have purchased Dixon Technology, 16 shares at the rate of 15,000 rupees. Now, can I average it or I have to book a loss?
Got it. And Swaminathan, you got into, do you have like Dixon Tech only in your portfolio, or you have any other EMS name as well?
No, I am having a portfolio.
Okay, only Dixon Tech. Got it. Gaurang's actually given his view of what he thinks is and his picks are. So, Chandan, in terms of Dixon Tech, do you think the current correction gives an opportunity for someone who's already holding shares like Swaminathan at 15,000 to average down on the charts, or do you see some more pressure right now?
I believe the immediate structure is negative. Even the market recovered, but this stock has been making lower top, lower bottom from last almost 16 weeks. However, we have seen a decent cut from higher levels, corrected from 18,400 to all the way to 11,500, and that is huge. But the trend is not changing as of now. However, the major trend might be positive, but medium term and the short term trend is negative. So if someone is looking for average out, I believe let it correct further towards 11,000 or 10,500. That can be again bargain buy level with the view that he's ready to hold for 1 or 2 quarters, and then it can head towards 13,500 to 14,000 marks. So recent corrective move may continue, and then some bottom out approach could be seen for a rebound.
Got that view, Chandan. Another query that's coming in right now, it's on HUDCO, and Venkatesh is actually asking this question. He's bought at 224. Currently, he is sitting at a loss. So he's not mentioned his buying quantity, but he said that he's sitting on a loss of almost 19,000 rupees, asking for any kind of reversal. Chandan, on the charts, does it signal anything that could help Venkatesh recover some of his losses?
So HUDCO has been moving in a range. In fact, buying is also not visible, but absence of buying is not allowing the counter to move on higher side. If I look at the price behavior of last almost 6 to 8 months, multiple supports are visible near 203, 205. And I believe 3 to 4 times in last 9 months, it tested the same level and turned higher. But on the upside, hurdles are visible near 245, 250. So we have to be with the product trading range. So roughly 202 to 240 is going to be the product trading range. And he needs to play that range as of now.
Okay, all right. So that's the view coming in for HUDCO. The next question that we have is from Aswini, who's writing us from Chennai again. He's bought around 2,000 shares of Bellrise Industries at the rate of 148. Wants to know a short-term target on this one. Chandan, enough data on the charts to give a view?
Yeah, so this counter really did well at the time of its listing. In fact, it's been now almost 8-9 months. Trend is intact to positive. It has been making higher top, higher bottom. Levels are gradually shifting higher. Earlier, it took hurdle near 172, consolidated, then surpassed that level. I believe now higher base is clearly visible. So if someone is holding the position, use the support near 173. Can buy the dip or can keep the 173 as a trailing support. Overall, I believe it can head towards 190 to 194 kind of levels.
Got that view, Chandan. The next question that's coming in is on 5-Star Finance. Now, our viewer has actually bought it has bought 490 shares at 618. Since then, stock's down by almost 100 rupees from his buying price, so he's sitting at a loss. Karthik is asking what he should continue to do. Gaurang, do you have coverage on this stock and any view?
There are better, strong fundamental names, Puneet, if you really want to look at this particular sector. No specific coverage on 5-Star, but like I mentioned, L&T Finance, M&M Finance, Shriram Finance, which has actually been a stellar performer and is in the spotlight for all the good reasons post that particular deal. Bajaj Finance is the other one that we are extremely positive. So look at niche and marquee names and look at the track record and the performance. I think that should give you guidance whether to invest or not.
Got the view, Gaurang. But the next question that we're getting is from Ahmedabad. नितिन हमारे साथ जुड़ रहे अभी एक स्टॉक क्वेरी के लिए. नितिन, वेरी गुड आफ्टरनून. आस्क प्रॉफिट में आपका स्वागत है. कैसे मदद कर सकता हूँ आपकी?
गुड आफ्टरनून सर. सर मेरे पास मैंने आज ही लिए हैं जमुना ऑटो के 500 शेयर्स एट द रेट 130 पे.
ओके.
और मेरा टाइम हॉरिजन 3 से 6 महीने है.
अच्छा, 3 से 6 महीने है. ठीक है. ठीक है, मैं आपका क्वेरी चंदन से था. चंदन, नितिन ने आज ही जामना ऑटो में एंट्री की है. उन्होंने 130 रुपए पे लिए 500 शेयर. 3 से 6 महीने का व्यू क्या लगता है आपको हो सकता है शेयर के साथ?
जी नितिन जी नमस्कार. देखिए, आप इस काउंटर को होल्ड कर सकते हो. देखिए, मेजर ट्रेंड पॉजिटिव है. बाजार की प्रॉफिट बुकिंग की वजह से यहाँ पे 2 दिनों से मुनाफा वसूली देख रहे हैं. बट ओवरऑल वीकली और मंथली चार्ट में हायर टॉप हायर बॉटम के सेटअप इंटेक्ट है. ओवरऑल निफ्टी ऑटो में हमारा पॉजिटिव है. ऑटो एंड्स भी यहाँ पे बेटर लग रहे हैं, तो अपनी पोजीशन को बना सकते हो. इनफैक्ट बाजार की वॉलेटिलिटी की वजह से नीचे आता है तो थोड़ा बहुत एवरेज आउट कर सकते हो. मेरा मानना है कि 117-18 के मेजर सपोर्ट से पोजिशनल पॉइंट ऑफ व्यू 150-155 तक के टारगेट जमुना ऑटो में बनने चाहिए.
Okay, all right. So that's with regards to where Jamna Auto stands. The next question that we have is on Hindustan Copper. I think everybody who's been a part of the rally that Hindustan Copper has seen probably is asking this question today. And the viewer Jain is holding. He's from Kerala, by the way. He's holding 300 odd shares at the levels of 367. The stock is currently trading at 523. So he's sitting on significant gains for sure. Wants to know as to what should he do next. Gaurav, what's the view like on Hindustan Copper? Should he book his profits completely, partially?
Mahima, the way investing is an art in the stock market, I think booking profit also is an art, right?
Absolutely.
And if you're going to have greed, then even your profitable investments are going to turn loss-making, to be very honest. So I think investors, I would humbly request investors to use their wisdom and fine sense of judgment. If you're getting profits, never shy away from booking profits or at least booking part profits. Now, when it comes to metals, we remain positive at Geojit Investments, both on ferrous, non-ferrous. We are positive on zinc, we are positive on copper, we are positive on aluminium, we are positive on steel play, we are positive on diversified play. But unfortunately, I think as your colleague was mentioning a while back, with the kind of profit booking that we've witnessed, for all the reasons, whether be it LME prices or whether be it 500% threat to countries by President Trump in terms of hike of tariffs, the outlook for the sector looks quite robust.
Got the view, Gaurang, but Jain definitely was much smarter than both of us to buy into it at 367. But time now for a rapid fire round. Gaurang as well as Chandan, request you to keep your answers on buy, sell and hold so that we can take as many queries as possible. The first one's on Clean Science Technologies. Our viewers bought it at 1692, so it's down 50%. Gaurang, any view?
I'm sorry if we don't cover this stock.
Chandan, any view?
Sell.
Okay, NLC India is the next one. From a long-term perspective, Gaurang, should the viewer continue to hold? Siva from Chennai is asking this question.
Sorry, which is the
NLC India.
No, sorry, we don't cover this.
Alkyl Amine, Chandan, any view that you have on the counter?
Hold and buy on decline.
Okay, ITC is the next one. Abhijit from Kolkata is holding 119 shares, bought at the levels of 396. Buy, sell or hold? Your view on this, Gaurang?
Hold and add.
Any view, Gaurang, in the hotel space? Any one stock to add for the next 5 years?
Indian hotels.
Okay, Oberoi Realty is the next one. Akash from Kolkata wants to know as to what are the charts indicating. Chandan, your view?
Mixed cues, range bound bias.
Ram is a retired government staff and he wants to invest 2 lakhs. He's new to the markets. Gaurang, any stock recommendations?
He's retired and he wants to invest in the stock market.
Yes.
It's a threat. But yeah, if you have the high risk appetite, you can definitely look at State Bank of India. You can look at Bajaj Finance.
Okay, Netweb Technologies is the next one. Raj from Hyderabad wants to know as to what are the charts indicating. Chandan, your view?
So Netweb, yeah, he can hold the position.
NSDL bought at 1061. Gaurang, any view?
No, I'm sorry, we don't cover this.
Okay, Indus Towers is the next one. Maheshwaran from Chennai wants to know if he can continue to hold Indus Towers. And Chandan, your view on this?
Yeah, can hold, can add more. It can further see the rally of 15-20%.
Vishal Megamart, our viewer Navya has bought it at 78, which is the IPO price. Chandan, what should he do?
It's a recent listing, better to hold and wait and watch.
Okay, Indigo Paints. Can I buy now? Gaurang, any view? If not this, any paint stock that you like?
Prefer Berger and Asian Paints.
The next one's again an Alkyl Amine. Chandan, any quick view on the charts?
So like here, the suggestion is can accumulate now, as already seen a corrective move.
Okay, Nalco is the next one. Can he book? Sanjay from Thane wants to know if he can book profits now. He's holding since the level of 95. Chandan, what's the view?
If holding from 95, better to book half because still major trend is intact.
Shriram Finance, Manju is in a profit of 18,000. Gaurang, should she continue to hold?
Hold and go to sleep.
Hold and go to sleep. Okay, got the view, Gaurang. But that's all the time we have on this edition of the Rapid Fire as well as Ask Profit, the afternoon edition. Gaurang as well as Chandan, thanks so much for joining in and helping us with all your stock related answers on the queries that we've gotten. But viewers, that's all the time we have on this edition of the show. Stay tuned to NDTV Profit. Lots more action on the other side.
Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network. New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network. The nerve center of the maximum city, the BMC, a contest that will shape Mumbai's next decade, its identity, its legacy, its future. NDTV brings you the battle for Mumbai, asking who will hold the keys to India's richest civic body and what would it mean for Mumbaikars. BMC Power Play, only on the NDTV network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, thanks so much for joining in. You're watching India Market Close on NDTV Profit. My name is Alex Matthew and with me in studio, of course, is Sharad Dubey and Hiral Daria. We'll take you through the next 1 hour of trade. It's not looking like a very pretty picture and let's get straight into that. This is the story right now and we're at the low point of the day for the benchmark index at 25,900. So we've broken well below that 26,000 mark and you're probably wondering what has come to pass. Well, it is probably the news of a bill being introduced in the United States that will give more power to Donald Trump to have a say about the use of Russian oil. So specifically, China and India have been named. And so the fear and the worry on Dalal Street is that that trade negotiation between the US and India is really going nowhere. Pull up the heat map for the Nifty 50 and let's take a look at what is causing most of the damage. And if you saw the start of trade, you would have noticed that it was pretty much even Stevens between the green and the red. That's a very different picture right now. ICICI Bank controls the roost. It continues to do so. And remember, the last 3 or 4 sessions where this has been the case, it's proved to be a little bit of an anchor or a support at the start. It's up about nearly 1% or so. Eternal, SBI Life and a few other gainers, not too much really to speak of. A sea of red on the screen. Everything on the bottom end of the screen is what you need to look at. Reliance Industries down another 2%. Can you imagine the kind of impact that that has on the benchmark? You don't have to imagine it, we'll actually pull it up for you. Hindalco losing 3.6% and the entire metal pack under pressure as well. Pull up the contributors chart and you'll see what I'm talking about, right? So you'll have the heavyweights, Reliance Industries, TCS, L&T. So Reliance Industries pulling the most weight on the downside. ICICI Bank on the other end is up just a tad bit. Before I hand it over to Hiral to take a look at individual stocks from the broader end, I do want to pull up those indices, the mid-cap index and the small-cap index. That's where most of the pressure is visible. Take a look at this. We're at the low point of the day, down about 1.6% for the mid-cap index. Similar move for the small-cap index as well, 1.6% or thereabouts. The question is, what stocks are moving? Hiral?
Thank you for that. In fact, absolutely, the broader markets are seeing that kind of pressure. and it's sharp cuts that is coming in on that aspect as well. In terms of individual names, all your companies which are probably going to see an impact on the back of tariffs are the ones which are trading under pressure. So the entire textile pack is what you're watching out for. Names like Gokuldas Exports, one of the top losers, over 10% is the kind of cuts that you're seeing on this one. Your Vardhman Textiles also, which is trading under pressure. So major cuts coming in terms of where the entire textile play goes. With that, you have the animal feed, cattle feed, those kind of companies also which are trading under pressure. You have names like Avanti Feeds at the day's lowest levels, 9% cuts coming in there. Godrej Agrovet is another one that you should be watching out for as well in trade today. Apart from that, Signature Global is seeing some pressure since morning, 10% downtake. PGIL is under pressure. Moil is also on the losing end. What's holding on? All your amines companies, Balaji Amines and Alkyl Amines, on the back of the government grant, is seeing some smart moves. Trident is in the green. What's interesting about the Trident is that in spite of it being a textile company, that move is pretty strong and it's holding on to the gains that it saw in the morning session. India Cement, Inox India, a few of the other gainers that we see in terms of individual counters. A few other names where you're seeing your good turnover: ICICI Prudential, Apollo Hospitals, ICICI Bank, Reliance Industries. The volumes are pretty okay on these stocks, and few stocks which are trending in trade today, from an Anantraj to a AU Small Finance Bank. You have a BASF, Cummins India, Hindalco, HDFC Life. So your life insurance companies, your general insurance companies are also in focus. Your entire metal pack is something which is in focus as well. But what's leading to all of this, and what is it that you should be watching out for in this last hour of trade to prepare yourself for the next day? Let's ask Sharad that. Sharad, interesting factors that we should be looking out for, right? Because the session is very interesting. We are seeing cuts. Now, whether this is profit booking, whether markets are already in an oversold zone, that is what investors will now need to understand.
And see, there is no domestic cues as such. The Q3 earnings, the IT earnings which is supposed to start, all that needs to be factored in and well. And remember, the pre-budget positioning, that trade has also been missing in the markets. But the key triggers is, of course, the geopolitical stress which is coming in. US-India trade tariff concerns are there. That's impacting the markets. But go into the granular part of the Nifty index, it has found a support, the 50-day EMA level, and from that level onwards, the Nifty index is trying to make a recovery. Of course, the recovery won't be very sharp as such, but going ahead, there are important other key factors also to watch, especially the option data suggesting that the market is oversold. The PCR levels are lower. Technical rebound is likely, at least in the end of the session we can see, or maybe in the next session. Also, Nifty Bank is better placed in a positive technical setup as compared to Nifty, so a long trade might be sustaining now also. Apart from this, the global risk on sentiment, they have seen a pause after two sessions coming in, and interestingly, the European markets also, which have opened up with cuts as well. Also, let's look at the key levels which should be important, and we discussed this important point as well, but let's just fire the key levels. The critical level support is 25,913, that's the 50 EMA from the bounce which has happened, and if that falls, the support level comes in between 25,800 to 25,900, but the strength is definitely there in Nifty Bank if you take a positional view, and a long trade does remain. The 10-day EMA is still elusive of, despite the crack which is happening. It's at 59,727 odd levels. Over to you.
Absolutely. In fact, let's talk about some of those levels in more detail. We're joined this afternoon by Sameer Dalal of Natvarlal and Sons Stockbrokers, as well as Rajesh Palvia, who's a Senior Vice President, Technical and Derivative Research at Axis Securities. What we're going to do, gentlemen, is I'm going to come first to you, Rajesh, on the charts. And first of all, good afternoon. Thanks so much for taking the time. I'm going to come to you on the charts. We're going to talk about your individual picks, and then we'll talk about a sector that is in focus, and we'll get a view from Sameer on that. So first, the levels that you're seeing on the screen, are we in oversold territory? Is there a possibility of a bounce? And what stocks do you like?
Good afternoon, everyone. Yeah, so Nifty is in oversold trajectory. It's PCR is at 0.66, and we have seen the sharp cut, especially in today's session. The way Nifty is now hovering around 50-day moving average, which is very important and critical at this juncture, 25,950 is the important level to watch for. If we are able to defend this level on closing basis, then yes, some pullback we cannot rule out, as we are already trading at oversold trajectory. Though it's broad-based selling which we are witnessing throughout the day in the market. So that is creating some negative sentiment on the street. So 25,950 is the first level to watch for. If he crosses those level, then 26,050 would be the another hurdle for the Nifty, as major call writers are now shifted lower to 26,100, 26,000 strike. So that may create a more pressure for any pullback around these levels. So we believe that it's going to be like little weaker trade setup for another couple of days, as we have already broken the important support area of 26,000. We are trading below to 20-day moving average. Below 25,900 we could see more liquidation. So one needs to be cautious at this juncture for Nifty, but Bank Nifty structure is still showing sign of little buying interest at lower levels. So 59,650 one needs to keep close eye. If he breaks that level, then we may see major liquidation in Bank Nifty. Till 59,650 is intact, I think some buying action we could see in some of the select banking stocks.
All right, let's go on to the sector of the day, and we are talking about the metal pack, a massive profit booking coming in the entire segment. And interestingly, there are some key reasons for it. Globally also, the prices are seeing a kind of a profit booking happening. Nifty Metal Index, that's down almost 3% in the trade. And also there are key reasons include that this is the biggest intraday fall since April 2025. Now the question remains is this rally over? Also, an important point to note is that the Nifty Metal has snapped its 2-week gaining streak as well. Well, there are certain key reasons for it, be it the ferrous or the non-ferrous. Those entire stocks are tanking in trade. They are down between 2 to 5%. And interestingly, let's pull out the key reasons also. What's leading this decline? The beneficiaries of rising silver and copper prices, that's what was going up in trade, but now there's a profit booking happening. There's a decline led by the cool off in these prices. Overnight the prices fell between 2 to 3% globally, and silver prices has corrected 9% from its highs in the last 2 odd days. Faster they have gone up, now faster they are coming down as well. As regard to the prices, the LME copper prices, they are down almost 3% as well. Also, let's look at the other key factors for this non-ferrous segment. Profit booking is coming in, and that's what the numbers are stating. So this is the entire setup looking like for the metals, and this is the numbers which we are looking at. But I want to get in Samir right now. Samir, what will be your views on metals? Good time to take a profit booking, or stay put?
Hi. Thank you for having me on the show. And I've actually been a little negative on the metal space recently, especially after the run-up that's happened. And my simple reason is, when there is momentum and you start buying in, which everyone seems to follow, what eventually ends up happening is you become the greatest fool, right? Somewhere down the line. These are all cyclical sectors. So right now we are seeing commodities rally significantly. The stocks which are mining those products or refining or making those products is standing to benefit. But you don't want to be the last one buying in and holding the stock for the next 3 years, 5 years. Now, I'm not saying that the entire metal rally is over, but what is the pricing you're paying for these, given that some of these prices at higher levels may not be sustainable? Now, for example, silver has run up by about 200% over the last year and a half, or is it possible that silver may start consolidating to going down? It is, right? So then if you bought Hindustan Zinc and zinc prices and silver prices do correct, then obviously the profitability gets impacted, and then you are holding a stock which you bought at a very, very high level. So for me, I would be saying if you are making money, this is the time to take money, a little bit of money off the table. These are not structural stories. These are cyclical stories. In cyclicality, there is always accidents that happen. And secondly, whenever commodities rise the way they are currently rising, it leads to a price increase, and that price increase by itself is inflationary and leads to a demand decrease. I'm not saying we are already there where you'll see a demand decrease, but if they remain at these levels and price hikes get passed on, I think there is a problem. So for me, if there's any play that has to be had, is probably Hindalco, not because we are bullish on aluminium or anything like that, but we believe aluminium demand is quite strong. the users of aluminium is constantly rising, which means companies making that like Hindalco, Nalco will do well. Just the problem is the stocks have run up far too much in the near term. So your expected returns are also going to be muted. From that angle, we remain slightly cautious on metals. Yes, cycles are long, but we've seen in the past, whenever metal prices go up, they kind of kill their own industry. So be a little cautious when you invest in commodities.
Be cautious when you invest in commodities, and Tata Steel is one that you should be watching out for as well, because both Tata Steel and JSPL are trading under pressure. In fact, if you talk about Tata Steel, their India production volumes have gone up around 12%. What HSBC has come out and said is that it's surprising underperformance that they've seen versus the other European peers as well. And Tata's underperformance is surprising given the European footprint that they already have. Rajesh, let me come to you in terms of charts, because you're seeing some bit of profit booking that's coming in after such a good rally in metals. What are charts indicating so far according to you? And then you can give us your top picks as well.
So again, in a whole metal pack, there is a sharp supply pressure witnessed by the market, and looking at the near-term, short-term structure, we believe that some more profit taking we could see for next couple of days. Though we have seen very strong rally in most of the ferrous, non-ferrous stocks, I think Tata Steel as now stock is trading around 180 level, which is very important and critical for Tata Steel. If any breakdowns happen below 180, 178 zone, we could see more, profit taking, and then possibly stock may correct further towards 174 level also. So that level needs to watch closely. 178 is the crucial for Tata Steel. But if we analyze other metal stocks like, Hindustan Copper or Hindustan Zinc, if we analyze the medium term to long term structure, still stock has corrected. But looking at the medium term structure, I think if Hindustan Zinc comes around 570, 575 zone, which is again buying zone for the counter, as the breakout is still intact on the weekly as well as on the monthly chart. So 575 needs to watch closely in this correction for Hindustan Zinc. If stocks settle around those levels, then some buying interest we could see in this counter. Moving to the stock picks, the stock idea which we are initiating here on the short side, that is Hind Petro. If we analyze the structure, stock has broken its upsloping channel trend line on the downside, and stock is now trading below to 20-day, 50-day moving average. Short built up is there. Looking at the breakdown, we believe that furthermore down move we could see in this counter. We are projecting target of 445 to 440 in the continuation of this down move. One can short with stop loss of 462. Another stock where we are focusing on the short side is BHEL. Sharp supply in today's session, and short built up is there. Looking at the breakdown on the near term chart, we believe that if it's sustained below 286 level, we could see furthermore down move towards 272 to 270 zone.
BHEL, we are seeing a sharp, downtick coming in the stocks. The stock is down 8% in the trade. Media reports are suggesting that India is planning to allow Chinese firms for power projects, and that's why BHEL is seeing a kind of a beating in the trade. Now, India plans to scrap these curbs on the Chinese firms bidding for the government contracts. And interestingly, as per media reports, a high-level committee headed by a former Cabinet Secretary Rajiv Gauba has also recommended using these restrictions. So, of course, this is a negative development coming in for the stock, and it's nosediving. It's down 8% in the trade as well. Samir, your views on this? It's a very interesting development coming in, but a big negative for BHEL.
So I'm all in favor of allowing international companies to operate in India, because what it does is it kind of helps you in getting better pricing. But unfortunately, we are working on like an inverse kind of a structure, where you put an import duty on steel prices, which is a raw material to a large extent for a lot of the things that AL buys for its making its unit, and then you're allowing imports to come in of the finished product. So it kind of hurts the overall prospects for companies that do this kind of business. So either you scrap import duty altogether, or you levy it across the board. But if this news is to be believed and it's true, of course, companies like GAIL and all the others that are doing power equipment manufacturing or even downstream of many other products, if they start opening them up, would stand to lose. Now, is it going to happen? Most probably it's not. There's a lot of noise right now in the market on a lot of things. But I don't think the government is going to allow imports from China. They will be allowed with certain conditions, restrictions, maybe tie-ups with domestic companies. So we need to see what comes out. Just to react on a news article, fundamentally, that's not how we do our business.
That's what we were discussing. In fact, L&T also, let's just pull up our L&T on the screens as well. A 8% cut coming in terms of where BHEL goes. And you have a L&T also, which is nosediving on the back of the media reports that have come in so far. 2% downtick on that one. I'm just going to reiterate as to what the lines actually say. What they've indicated is that India is probably planning to allow Chinese firms when it comes to power projects. And they're planning to scrap the curbs that were put in when it comes to Chinese firms bidding for government contracts. Now, if this happens, obviously the competition for Indian players increases, and that's the reason why we are seeing both the counters which are under pressure. In
Siemens
fact,
and ABB as well. Let's
yeah,
pull those
so
up.
let's pull up a Siemens and ABB as
all
well
of
on the
those
screens and see what those two counters are also doing in trade. Siemens has also nosedived at the day's lowest levels as we speak, and ABB has nosedived as well at the day's lowest levels. Rajesh, let me come to you. I mean, yes, these are media reports that we're talking about right now, but on the back of the media reports, all these four counters have nosedived in trade. Would you use this opportunity to advise investors to buy, or what are charts indicating?
No, I think at this moment I'll advise to sit on the cash itself. Don't buy in this fall, because if I analyze the Siemens now, it's trading at a crucial support area of 3,000. If it's break below, then we could see major sell-off to come in this counter, and then possible down move towards 2930, 2900 we could see for Siemens. The kind of supply which we are seeing in the whole sector, like BHEL, L&T, ABB, all these stocks are continuously attracting more supply pressure. Short built up is taking place in this segment itself. So I think we could see further more follow-up selling in the coming days. So wait for this supply pressure to settle down, then only one should buy it. Siemens structure is still weak. We have seen some recovery took place, but still the way now stock has retesting its critical support area of 3,000, I think there is a high possibility of breakdown from the current level.
All of these stocks that are related to that power and power equipment space are taking a bit of a knock. Remember, however, that these are unconfirmed reports, and we will reach out to the government and stakeholders in order to get clarity on some of that. But it is past time on the show to get heard on the street ongoing, and this is where, of course, Soumit Sarkar gets you all of the chatter from the dealing group. Soumit, there's quite a bit of action, and we're trading very close to the low point of the day. Quite a bit of pressure on account of the tariff fears.
Yes, tariff fear is something that has been keeping the market under pressure in trade. But dealers are still confident that there could be a bounce from the current levels. So we need to wait and watch, because we are still holding that crucial level of 25,900 is what dealers have highlighted. Few stocks that are on the dealers' radar. Firstly, it's CG Power. The stock is trading near the QIP price today. In the morning, we had seen an uptick of around 3% The stock is down right now because of the overall market pressure that we are seeing. But dealing rooms are suggesting this stock to their clients as a value buy at the current levels. For Equitas Small Finance Bank, the stock was under pressure of late, but dealers are now indicating that the selling is likely to get over very soon and the stock could bounce from the current levels. For IEX, a large FII is said to be a seller in trade today. In the past couple of days, the stock had bounced nearly 15% from its lowest level. So some profit booking coming in on the FII counter. For Kotak Mahindra Bank, the buzz on the street is that Fairfax might win the bid for IDBI Bank, and dealers believe if this comes true, then it would be quite positive for Kotak Mahindra Bank, and hence, despite the pressure that we're seeing in market, the stock is just down 0.4% in trade. And when it comes to TCS, the stock is down in trade. In fact, even before the market started to fall, TCS was one counter which was down around 2.5%, even before the even before the market fall. And this is largely because of the buzz that the third quarter numbers could be on the weaker side. In fact, dealers are expecting that the Q3 numbers will be much weaker, even compared to what the analysts have estimated for the third quarter of FY26.
For that, in fact, Rajesh, we just have probably a couple of seconds to get your response on that. Equitas Small Finance Bank stock is under pressure. You have IEX also, where FI is selling, and TCS, which is in focus ahead of the numbers. Your strategy for the three.
IEX, we have seen some buying action in last couple of days. Now stock is consolidating after this rally. Stock is still able to defend its breakout of 148, 149 zone. So 148 needs to keep as a stop loss for IEX, those who are already on the long side of trade. Any breakout above 155 can give some more pullback action towards 162. Moving to the Equitas Small Finance Bank, stock is showing sign of strength on the weekly daily chart. Stock is now negotiating with its previous swing high, which is important and critical for this up move. 68 is the important level to watch for. If it crosses above 68, then we could see further more buying action to emerge in this counter, and possible extension of rally towards 75 we could see on a short term to positional perspective. But at this juncture, I would advise to keep a stop loss towards 64, those who are already on the long side of trade. Moving to the TCS, stock has attracted some supply pressure in last couple of trading session. Now stock is negotiating with its last few week support area, which is placed at around 3190, which is very important and crucial for TCS. Looking at the data setup, we believe that until the stock not crosses above 3250, trend is still on the weaker side. Any breakdown below 3190 may attract more supply pressure towards 3140, 3120 level.
So keep an eye on all of those stocks. There's lots of stock specific action. And one of them actually that is reacting is Panacea Biotec. It's completed the phase 3 clinical trials for its dengue vaccine, marking a key milestone in its development journey. Varsha joining in to talk about the significance of this and what matters for the company going forward. Varsha, key details here.
Well, thank you so much for that. The enrollment, that is phase 3 trials enrollment, has been completed for their brand, that is Dengue All. Now 10,335 participants have been enrolled across India. And why this is important is because the company is working since 2008 on it. What Zenix did for Walk Hard, maybe Dengue All will do for Panacea Biotec. Now why this matters, because dengue affects nearly half of the world's population, and there are very limited global vaccine options and only one widely in use, and the existing vaccines, if you see, have safety and coverage limitations. And what makes Dengue All different according to company, one is this is a single shot dengue vaccine which targets all 4 dengue serotypes equally, and which are designed to offer broader protection with fewer side effects. Now this is expected to be India's first indigenous dengue vaccine and only second single shot dengue vaccine globally, which is yet to launch in 2027. So overall, yes, this is a very big news for the company, and this will be the growth driver for the coming years.
The stocks of the day. Varsha, thanks so much for that. 12% higher, but stocks are taking a bit of a knock, and we'll talk about all of them after this very quick break. Do stay tuned.
Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network. New year. New power panel, India Market Open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network. The nerve center of the maximum city, the BMC, a contest that will shape Mumbai's next decade, its identity, its legacy, its future. NDTV brings you the battle for Mumbai, asking who will hold the keys to India's richest civic body and what would it mean for Mumbaikars. BMC Power Play, only on the NDTV network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned. Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most.
Welcome back to India Market Close, and today we are seeing capital goods, taking a beat in the trade. Media reports are also suggesting that important development has come as India plans to scrap curbs on the Chinese firms. And to give us more details, Anushi is joining us. Anushi, what are the media reports suggesting?
Thanks for that, Sharad. So it's a big setback that we are seeing for a couple of these capital good companies, which includes the likes of BHEL, L&T, Siemens in focus, along with something like ABB as well. And this is after India is now considering that they'll be scrapping these curbs that were imposed on Chinese firms in 2022 after there were border tensions between the two and increasing conflicts as well. So now if you just look at that, Chinese companies may be bidding for these government projects that we are looking at. So this would increase the overall landscape of the competitive intensity which is there, which could have an impact on a couple of these players that we are seeing. Do note that if you just take the account in terms of what has happened from 2021, there has been a 27% of dip in terms of how these projects have been awarded to Chinese firms. So it's an important development that we are seeing. Earlier this plan is being considering that have been shortages and as well as project delays. So they want to fast track a couple of these projects that are there. But even coming to what the media report is suggesting, this is also addressing that India is on path to expand its thermal capacity expansion, and to expedite the speed of this, it wants to focus on this particular area that we are looking at. So this is the overall picture that we have. Now do note that earlier that Chinese firms from competing for Indian government contracts were estimated to be worth between $700 billion to $750 billion. So this was the overall size that we are seeing. So if this big particular size will now come back, there would be some bit of that margin impact as well on these companies that we are seeing. So this is the current stance that we have so far, but we'll keep on awaiting the developments in terms of what's happening in this particular space.
Okay. All right, Anushi, do stay with us. I want to come back to you on another stock, but before we do, Samir, you've already kind of weighed in on this, but I want to ask right now, since we got your view on it, the stock is down now. BHEL now down 10%. And there is quite a bit of a knock on these other extended companies as well. So you look at ABB, you look at Siemens, you look at Hitachi Energy, all of them taking a knock. Like you've mentioned, it's unconfirmed as of now, and we don't know what the impact will be. Would you hold, if you currently hold these stocks, or use them as an opportunity to buy more?
So I'll continue to hold on to the stocks for sure. Would I buy more? Probably not. For simple reason that if this news gets confirmed, then obviously these companies would have it a lot more difficult. Profitability would get impacted. And then, the premium valuations that all of these stocks are trading at are not going to be able to be justified. So for buying, I would wait to see what comes about. I'm sure there will be some relaxation, but it will not be like 100% relaxation. So what it will do is it will force some of these Indian companies to work on slightly lower margins. But having said that, look, India still has a long way to go for its power space, whether it's for transmission, distribution, generation, all of this. Now, there are very limited companies like GAIL and L&T who do the boilers for these large thermal projects. So for them, it would be a negative impact. But across the other space, I think there's still a lot of opportunity that opens up. So you can't look at everything just as is when is. It's still too early for me to decide, but I would definitely not sell.
Wouldn't sell. All right. Anushi is still with us. Transformers and rectifiers, we saw the earnings come through, but I think the stock is reacting primarily to the resignation of the chief executive officer. And of course, there's an announcement that a replacement has already been found and that has been made. But what can you tell us about what the implication of this is?
Right, so Alex, if we just look at the face in terms of the numbers that are there, we are looking at healthy growth metrics across this key parameters that we are addressing. That's revenue up around 31%, while margins also have seen about a 180 basis points of an improvement to 17% versus 15% last year. And net profit also seeing about a 35% of an uptick. So on the demand growth trajectory, it continues to be on the healthier side compared to what had happened in second quarter also, where it failed to meet those expectations that we looked at. So Q3 kind of made up for that, but it's mainly on in the terms of managerial change that we are looking at this sharp fall in terms of how the stock is reacting. Your resignation of Mr. Mukul Srivastava as CEO has been notified by the company, but in place of that, Satyan Mamtora has been assigned as the managing director as well as CEO. Of course, he's from the promoter group company, but still this continues to build on some bit of that investor cautious approach that has been a topic that we've been addressing for this particular stock, especially after the World Bank notification. Just on that, just reiterating the whole story about that, World Bank had removed the company from its list of debarred firms. Earlier, they had put this imposition in terms of them bidding for its finance project, in terms of there being irregularities and even in terms of there being fraud ties attached to that. So while that, even though this notification had come off, the stock has not recovered so significantly from this, because if you look at the 6-month return, that is on the negative side, 39% of an downtick is what we are seeing, while in this 1 month we did see some recovery coming back for the stock. 28% of an up move is what we are seeing, but still investors continue to remain cautious in terms of the overall structure, in terms of the management and the corporate governance as well. So this is something that we should be seeing for transformers and rectifiers.
So I think it's earnings plus the key management changes and the recent updates, all of them have come together, and that's where the profit booking has come in after that 28% run up in the last 1 month. Samir, quick view when it comes to transformers and rectifiers, because Overall, let's look at the earnings which have grown, but I think it's the management change which has put pressure, as well as there is some bit of profit booking as well.
Yeah, obviously there is some. Look, the stock had seen a massive correction after that negative news flow that had come in, and then you saw a bounce back. But even if today we look at the valuations, if I do forward projections, it's still trading at about 24, 25 times consolidated basis 1 year forward. Although that's not very, very expensive, if there is some amount of restricted growth going forward, I'm not saying that they're not barred anymore. I mean, they're barred anymore. They can bid. But obviously, there's going to be a little bit of an overhang on them getting these orders and winning them. So if that happens and fresh order flow reduces a bit for whatever reason, it could mean that the stock stagnates for a while. And that's why even on the back of these strong earnings, you are seeing the price correct. I believe there is value long-term for Tarrell. We've been quite positive. Little surprised to see the CEO resign, but well, I guess somebody new comes about. They have new strategies. We have to see, but we remain positive on it. We think the next 2-3 years, the stock could do well.
Okay, so that's with regards to transformers and rectifiers. One stock that I want to mention is a Meesho. Now, on the 7th of Jan, which is yesterday, around 11 lakh crore shares, I beg your pardon, were 2% equity, actually became tradable because the lock-in actually opened up after the 1 month lock-in expiry. 39.1 crore is the free float shares which are available when you talk about Meesho, and the average daily volume since listing has been around 54 crore shares, which is almost 1.4 times the free float when you talk about Meesho. If you're talking about the average daily delivery volumes since listing, that stands at around 8.6 crores. And this number crunching, if you do, it actually is showing you that the volatility is largely caused by the multiple intraday trades that are being taken when it comes to Meesho. And if you talk about the daily volatility as well, we are talking about a 7% movement between the day's highest and the lowest price on an average basis. So free float, just to be noted, is your shares that are available for trading, and that's what is causing these kind of cuts. Plus, you have a managerial change that has happened at a Meesho as well now, but the pressure has started to build in since the time the lock-in has opened up. Quick view, Rajesh, on the charts. I know, it's a fairly recent one, but anything that you're picking up?
No, trend is on the weak side. Stock is now approaching towards its a previous swing low, which is at around 158 zone. Any breakdown below 158 can register new all-time low for the counter. Stock has attracted the supply pressure from the higher level, and now stock is moving in down sloping channel on the daily chart, which is a sign of sustained liquidation of position is happening. So I think one should avoid at this juncture. Break below 158 can take this stock further lower to 140 zone also.
Right, looking at this bulls and versus bears scenario, Balaji Amines is in focus. And of course, it's become an outlier in a day where most of the stocks are cracking in trade. The stock has surged in after its arm received a subsidy from Maharashtra government. To get in more details and what lies ahead for the chemical industry, especially in the amine segment, it's an interesting bulls versus bears scenario by Varsha.
Well, thank you so much for that. This is a one-time gain that you're seeing in Balaji Amines on the back of incentive of 258 crore. But, this will actually reduce tax outgo and cost till FY30. But the near-term demand remains weak when it comes to Balaji Amines, especially for pharma and agro. Now, moving on, the 258 crore subsidy and the tax refund aid will help in long-term cash flows for the company. But the Chinese competition still persists, especially in one of the products called DMF. Now, moving on, if you see the DMF plan, talking about DMF plan, which they are most bullish on, the plant is near commissioning and is key driver for H2 FY26, but the regulatory approvals have been delayed, which has the DMF for volume ramp up. Talking about the battery chemical battery chemical segment where the company is most bullish on it and is the next leg of growth for the company. So the capacity is ready, trials are underway, but we all know the delay in EV battery projects by Ola also. So the demand ramp up timing is still uncertain, which will actually impact the financials for Balaji. Moving on, if you see, the management is confident when it comes to 8 to 10% of volume growth in H2 FY26, but the recovery is tied up to the approvals and the customer offtake timings. And also, though they are confident when it comes to volume growth, there's still pricing pressure still persists in the overall chemical industry, especially in agrochemicals, which may impact the financial, that is revenue and margins for the company. So overall, the gain that you're seeing is on the back of the news, the subsidy that the company will receive, but overall the pricing pressure still persists when it comes to chemicals.
Yeah, Rajesh, that's why I want to get you on this. Seems like a bounce is there, but I think it might not sustain fundamentally. That's what Varsha was maintaining as well. Rajesh, just do a chart check on this and the other amine players as well. Balaji Amines, Alkyl Amines, these are the counters. Largely, these counters have seen a significant price and time correction.
If I analyze the Balaji Amines, structure is weak. Series of low top, lower bottom formation is taking place across all time frame. Stock is weak on the monthly chart also, though there is some recovery from the lower level, but still until the stock not able to sustain about 1350, 1340 zone, I think any minor pullback should be used as a exit opportunity in this counter. So we believe that on the breakdown below 1160 would attract again supply pressure in this counter. So for some as pullback is already taken place, so 1160 needs to follow as a stop loss those who are already on the long side of trade, but in pullback try to exit around 1280 1300 zone if it comes. Alkyl amine, again the similar structure, stock is moving in down sloping channel on the weekly chart. After a brief consolidation, some pullback attempt is taken place in this counter, but again not able to give breakout of the consolidation range. Until the stock not crosses above 1650, a trend is likely to remain on the weaker side. On the other hand, if it breaks below 1570, we could see continuation of downtrend, and then stock may slide further to 1520 also.
Let's close the loop, because I saw Samir have a reaction to this. Usually I can tell which way it's going, I think, based on his expression. But Samir, what's the view on Balaji Amines?
Yeah, so I remain very constructive and positive long term. I'll tell you why. Simply put, look, we've seen 2 years of terrible pricing in chemicals, especially. After a point of time, what you see is some players, who are highly leveraged start going out. So chemical prices rebound. Then you also have these new products that they are launching. One is a replacement for LPG in India, and the other one is a replacement for chemicals that are used in the EV battery. They are only going to replace what we are importing from international markets. The whole Mr. Modi's Make in India theory, this is what it is all about. And he's put in the capacities, he's putting in, the capital is not very large for a company like this. But once the revenue stream starts flowing through, which is maybe 2 quarters, which is 6 months down the line, what you will see is the numbers will start looking a lot better, and then people will start valuing this company a lot more. And then once you already have your foot in the door, when you're the only player doing this kind of product, and you can scale that up quickly because you have the know-how and the ability, and he has the land available. I think this is a counter that is ready for a turnaround. This was just a trigger that was required to probably get interest back in, but I am long-term very positive on Balaji.
Got it. Okay. All right. So that's a comprehensive view on Balaji Amines. It's that time of the show. We're drawing to the close of today's session, and Rajesh has been a pretty volatile one, quite a bit of selling in evidence. But do you have any BTST ideas?
It's not BTST, it's STBT.
All right.
Yeah. So Nykaa is looking weak, and now stock is negotiating at 50-day moving average, and looking at the fall and short built up, we believe that furthermore sell-off continue on the tomorrow's session. So Nykaa, one can go short on the future. On the downside, it could slide further to 252. That's the target we are projecting. On the higher side, keep stop loss towards 264. And another stock where one can initiate short, that is Premier Energy. Series of low top, lower bottom formation. Again, since this stock has entered in the derivative segment, again, supply pressure is taking place. So looking at the breakdown on near-term, short-term chart, we believe that, furthermore down move can extend 700, the target where we are projecting. So one can go short with stop loss of 740.
Let's look at the trending stocks of the day which have been buzzing in trade. Trident, the first stock, the volume's 29 times its 30-day average, a strong up move coming in. And also they recently approved the acquisition of mytrident.com. It's a wholly owned arm as well. That's a focus in stock. Camlin Fine, second straight day of gains in a row. Incred has seen a price hike and an interesting 236% upside potential was there. Interestingly, Gokuldas Exports stock is down more than 10% in the trade. Textile stocks, the volatility is continuing due to the uncertainty of the trade deal. Hindustan Zinc, the strong profit booking coming in, a strong rally was there for silver space, and now Signature Global. Also, let's get in that stock. Volumes are 13.2 times its 30-day average. Management reiterated their FY26 guidance. And lastly, Avanti Feeds, another export play that's down 7% in the last 5 days. The tariffs have exposed the stocks under the pressure.
Okay. So, yeah. These are the interesting names. In fact, a quick view with Rajesh on these names. Rajesh, Sharad has just taken us through stocks which are trending. Anything that you like on the charts?
So Avanti Feed is available near to its support area, which is at around 800, 790 zone, which is important for this up move. If stock able to defend this level in this volatile market, some pullback action we could see in the near term perspective. But on the higher side, 840, 850 is the key level to watch for. So those who are looking for some pullback trade should follow a stop loss of 790. On the higher side, 840 is the key resistance area where one can book profits.
Okay, so that's with regards to Avanti Feeds that we are watching out for. But let's head across to my colleague Varsha, who's standing by to tell us everything that's happening in the pharma space, because lots of moves coming in on this sector. Though there is pressure today, but Varsha, what have you been picking up in terms of pharma as a sector right now? Because there is some bit of strength somewhere, some bit of weakness somewhere else.
Well, absolutely. I would say two reasons mainly why the pharma was in focus in the last 2 days. One is, of course, yesterday there was the IPM data which had come, which was very strong. The market grew almost 10.6% in December month. Now, if you see, the growth was led by pricing, new launches and volume recovery. Now, the companies also are entering Q3 with momentum. Now, this is true for the domestic pharma companies, though there will be some pressure into US generic segment as well. But the domestic companies will do good when it comes to Q3. And in the new product launches, especially the complex generics will actually add support. Now, talking about the India pharma market, let's see which all companies grew. So, Torrent Pharma had a growth of around 17%, followed by Cipla at 15% and Sun Pharma at 15.2%. Also, Lupin, Zydus and Dr. Reddy's and Mankind Pharma also grew well when it comes to India pharma market. Now, talking about the next, the other reason why the pharma was in focus is the rising flu cases across US. 45 states are actually reporting high activity. A dangerous strain, that is influenza strain, has been spreading rapidly, and doctors expect the worst in Jan and Feb, and the higher demand for flu. So this will lead to higher demand for flu-related medicine. Now, what does this mean for pharma? The acute segment, the companies with more acute segment will see their sales improve, and this will lead to, so antivirals and antibiotics will see a higher demand when it comes to flu season. Now, which all companies have an acute portfolio, strong acute portfolio? You have Zydus Life Sciences, you have Ajanta Pharma and you have Lupin, which are very strong when it comes to acute portfolio and will actually aid good growth on the back of flu season. Now, but overall, what what is the risk? Now, one is, as I was saying, the US generic pricing pressure still persists, and we'll see this going forward in Q3 FY26 as well, and margins may remain uneven. So overall, the pharma sector will actually do good when it comes to Q3 on the domestic side, but there are certain risks which investors should watch out.
Okay, so that's with regards to what investors should be watching out for. Samir, what do you think of the data that, Varsha has just analyzed for us and told us what's happening across, though there is some bit of pressure today?
Yeah, so it's actually good for the pharma companies, but it obviously tells us that the health situation in India is not good when you have sales constantly increasing. And given the kind of pollution that has been there, I'm sure people in the respiratory field are going to get a beautiful time in Q3 and Q4 for that medicine. Having said that, we still think the larger opportunity for the pharma sector still resides in the US, as long as Mr. Donald Trump doesn't come in and put in certain restrictions on generics or exports from India on the pharma space. If that doesn't happen, we think there are still a lot of huge launches that Indian companies can make over the next 2 to 3 years. You'll see a great growth in revenue. This is one space one can remain positive long term. The opportunities there. Valuations are a little bit on the higher side, but I guess when growth is expected to remain strong going forward, valuations will be high. So for me, I think this is a sector, if you have already hold on, any corrections in Sun Pharma, any corrections in a Torrent Pharma, any corrections in a Dr. Reddy's are good buying opportunities.
Okay, so that's with regards to where pharma names go. Now, Macquarie has put out an interesting report when you talk about the Indian restaurants. They've maintained their ratings. However, they've gone ahead and cut the target price on counters like Jubilant Food, Devyani, Westlife and Sapphire Foods. What they've indicated is that the demand recovery is pretty much back-ended. And there is some near-term weakness that one should be watching out for as well. And they've cut the EPS estimates in that range of almost 7 to 23%, given a delayed recovery that could be in store. Their top preferences, however, are Devyani, Sapphire, Westlife and a Jubilant Food. Rajesh, how are you looking at these four counters if you talk about the Indian restaurant industry?
Jubilant Food is clearly in downtrend. Series of lower bottom formation, lower top, lower bottom formation is taking place. The way stock has broken the weekly support area, I think if it continues to trade below 540 zone, we could see further lower level towards 500 also. So there is no as such sign of recovery, despite stock has corrected significant from the higher level. So we believe furthermore down move could be there. If we analyze Devyani, again the similar structure, though there was some attempt of recovery, but still on the higher side. 145, 150 acted as a major supply zone for this attempt. So until the stock not able to surpass 150 level on a weekly closing basis, trend is likely to exhibit on the bearish side. On the breakdown below 132 can take stock further lower to 120 also.
Right, and the Morgan Stanley has also come out with its report on the India internet plays. It includes Eternal, Swiggy, Delivery and Urban Company as well. Let's pull up these charts. Morgan Stanley has stated that the earnings downgrade cycle continues and further consensus estimate cuts are expected to kick in. And Eternal valuations seem reasonable, but there is a lack of near-term catalyst. A strong execution seen offsetting the competition concerns as well. I would like to get Samir on this. This internet plays, Eternal, Swiggy, Delivery, Urban Company. Which of them are finding or giving a good risk-reward ratio in current levels?
So if you're giving a good risk-reward ratio, is none of them, to be very frank. I'll tell you what, everyone talked about the quick commerce space picking up pace and, that will start turning around. But what people forgetting is the competition in the space is just doubled. So from being a Blinkit, Swiggy has Instamart, and there was a third one, Zepto. Now even Amazon is doing Amazon. Now we know JioMart is pushing hard to get its instant delivery, and Flipkart has just hired the resigning CEO of Blinkit, which will ensure that they get into that space. Now with the 6-player market, does that mean competition stays on a lot longer, which means they're not able to charge that delivery fee, or they are having to give some discounts to ensure that they retain their customers versus customers moving to another player? And if that happens and profitability from the quick commerce space gets pushed back, then how does one value these companies because yes, the food part is doing relatively okay, but this is the second part which was everyone was factoring will start doing well, which was now pushed back. So that becomes a question mark. Second, you also have something like a Rapido, which is working on lower margins from restaurants for delivery of food. If that model starts seeing an uptick and more demand starts coming there, then does that mean that they have to roll back some of their benefits that they've been getting and they've built over a period of time? So for me, right now, risk reward is not in favor, and which is why you're seeing a selling on these stocks at the moment.
Thanks a lot, Samir and Rajesh, for your views on both fundamental and technical perspectives. But coming back to the markets on the closing front, Nifty below the 25,900 mark and down 1%, 280 points cut. And of course, the selling has intensified in the last 1 hour of trade. Nifty Bank also, the story remains the same, but technically it is still well positioned as compared to Nifty. Advanced decline ratio, you see there's a significant downtick coming in favor of the bears. Let's pull out the stocks in the Nifty constituents to see where the action has been there. Largely it has been a sea of red, and we have seen that happening. Only slight companies, like Eternal, SBI Life, ICICI Bank holding the fort in the green, but majority of them are in the red. But big significant cuts coming in the metal, IT, ONGC, and even you could say Reliance also giving up the gains as well, which we have seen over the last 3 sessions. Also there was a pain. Most of the sectors are also seeing profit booking happening and selling pressure intensifying. Let's pull out the sectors which would be in focus, and we see there isn't a single sector which is in the green. All of them are in the red, and that's where the concern comes in, because the key levels of Nifty has actually come down and the concern in the broader markets also remain. Let's pull out the advanced decline ratio to show you how the markets have actually panned out. The advanced decline ratio is the huge variance is coming in, and that has been maintained across the day. Let's pull out the Nifty mid cap and the Nifty small cap index to see what has the broader indices done. Largely they have ended near the day's low level. The Nifty mid cap index, if you can just show, yes, it's at the day's end level. And another important trend is the Nifty small cap index. That's also at the day's end level. After 5 days of value buying, we are seeing this change happening. Let's pull out the BSE 500 contributors to see where the actions are taking place. And largely Balaji Amines stock went up 4%. Some value buying definitely happening in these stocks. Sobha and India Cements also holding up. That's interesting. And Dixon Tech and Trident, they are also there in the green, and that's showing strength in a market like this. Amongst the losers, BHEL, of course, the recent news flow was there, Hitachi Energy, all of them cracking in trade and profit booking coming in your metal counters as well. So this is the entire picture for BSE 500, but let's see what to watch next. That's also very much important. Tomorrow is the last trading session of the week. US initial jobless claims will be coming in. That will be determining the macro strategy for the US Fed rate going ahead. And apart from this, we look at 2 important anchor lockings coming in, Nephrocare Health and Bansal Wire. That's where the anchor lock-in comes in, supply comes. Board meeting, the earnings season starts. Globus should be in focus, so will be IREDA. And from next week onwards, we become more busy with IT earnings in focus. And these are the important earnings which you should be watching out for. Amongst the IPO, it's the first IPO of 2026. The IPO date from January 9 to 13, Bharat Coking Coal, Coal India's subsidiary, would be coming in. So of course Coal India would also be buzzing in trade. So these are the important triggers which you should be following for tomorrow, and of course planning for the next week as well. That's all folks for India Market Close. Stay tuned to NDTV Profit. Up next is Market Express by Himangshi.
Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Sandhar Sharma and I am your automate.
Ignition. Liftoff. We want to become the Uber for space. What we do is that satellite companies book the rocket, just like you book a cab, and then go to wherever they want.
So tell us the origin of this entire journey.
Just quit my job, start the company along with my friend Bharat. We both were at ISRO, joined together, so we were flatmates.
So these roommates decide to start their own company. Are you a big fan of the Big Bang Theory?
Of course, who is not?
Who do you identify with most?
I think Sheldon is good.
Do you want to be the Elon Musk of India?
I've been a big fan of Elon. He's a phenomenal, human being, great achiever, wonderful engineer, right? So I was really inspired by him.
How did your family and your ecosystem react to your decision that I'm going to quit my job in ISRO and start a private space company?
When we started the company, there was no policy, there was no funding environment. Like every family, our family is shocked, what's happening to my son.
What do your parents do?
In fact, I told them after resigning the job.
How do you go about looking for funding?
He messaged Mukesh on LinkedIn.
Are you kidding me?
Yeah.
Your first pitch was on LinkedIn. There'll be room for people in your space cabs?
Aspiration is 5 years down the line. So we want to make space flight as easy as air flight.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better.
Hello, good afternoon and welcome to Market Express. I'm Himakshi Bahugna. Markets have wrapped up trade for the day and we are now bringing you a clear snapshot of what really moved the Dalal Street, the key stocks in action and also the global cues that could shape tomorrow's session. Let's get straight to the top stories and let's see how the markets have fared today first. Firstly, looking at the markets, they've fallen for the fourth straight day. Nifty has given up, 25,900 levels. And moving on, the US-Indian tariff concerns have impacted, the markets as they have, extended these losses. And also, if we look at the sectoral picture, so it was a sea of red across the sectors today. And this was led by metal stocks, which witnessed a technical sell-off in the trade today. The IT and export-themed stocks have also tanked in trade on tariff concerns as well. And metals have lost their shine in today's trade, with the Nifty Metal Index slipping 3.35%, its steepest intraday fall since April 2025. Now, the index is now set to snap a 2-week winning streak. Now, pressure is also mounting on the ferrous metals as expectations for, the third quarter earnings remain weak. Analysts are seeing EBITDA declining for the steel companies, weighed down by a $5 per ton rise in the coking coal cost quarter on quarter. So on the flip side, the outlook for non-ferrous players appears strong, offering some sort of respite to the sector. And if we talk about the defense sector, so that was in focus as India is planning to scrap the restrictions on Chinese firms bidding for government contracts. Now, the move is, coming after ministries have flagged shortages and also project delays under the current curbs. Now, report is indicating that projects awarded to Chinese bidders have fallen 27% year on year in 2021. And this is easing the restrictions, that could really accelerate the stalled defense and infrastructure projects, though it may raise some sort of strategic and security considerations. Now let's talk about a few stocks that were in the spotlight. TRIL has tanked despite a strong third quarter. Now, in a major leadership shake-up, Mukul Srivastava has stepped down as CEO, with Satyen J. Mamtora taking charge as the managing director and also the chief executive officer. So, on the earnings front, the company has delivered a robust performance and revenue has jumped 31.7%, which is nearly 32% to 737 crore rupees from 559 crores. And EBITDA has also soared 47.4% to 125 crores. And this is lifting the margins to 20% from just 15.2%. So net profit has also climbed 35% to 73.9 crores against 54.7 crores last year. So strong numbers there, but the stock is under pressure as investors are weighing the impact of the top level change. And Balaji Amines has secured major incentives from the Maharashtra government for its unit expansion under the mega project scheme. Now, the company has received an eligibility certificate paving the way for benefits including an industrial promotion subsidy of 258 crores, 50% SGST refund on eligible sales within the state, complete stamp duty exemption and also electricity duty waiver. Now, these approvals significantly strengthen Balaji Amines' expansion plans and also reinforce its position as a key player in the specialty chemical space. Next up, we have Gland Pharma that has received US FDA approval for olopatadine hydrochloride ophthalmic solution, which is a generic equivalent of Patadine-1's, daily relief by Alcon. Now, the product is indicated for treating ocular itching caused by allergic conjunctivitis. Now, this approval strengthens Gland Pharma's ophthalmic portfolio in the US market. Now, the drug had an estimated annual sale of $22 million in the US as of April 2024. Next up, we have Larsen & Toubro that has secured an order from the Indian Army for Pinaka multi-rocket launcher systems. Now, the contract includes supplying spares, supporting, subsystems modernization at Army bases and also undertaking a pilot overhaul of the Pinaka launcher. Now, this move strengthens L&T's defense manufacturing footprint and also supports the Army's efforts to upgrade its artillery capabilities for enhanced operational readiness. In fact, let's look at some brokerage notes. So, Citi has maintained its sell rating on Dr. Reddy's Laboratories with a target price of 990 rupees. The brokerage is seeing growth and also margin risk ahead, citing limited generic opportunities due to lower price innovator brands. It also flagged negative implications for Dr. Reddy's generic semaglutide and noted a complete response letter in Canada delaying the approval. Now, Citi is estimating only $50 million revenue from the semaglutide in FY27 to 28, well below the street expectations. In fact, HSBC has also maintained its buy rating on UPL while raising the target price to 925 rupees from 850 rupees. Now, the brokerage is seeing Advanta, as a long-term value creator with strong delivery and also growth delivers in place. Reports are suggesting that the company is also exploring capital market options for Advanta, which could unlock value and also help reduce the debt. Now, HSBC is expecting these moves to support sustained growth and also value creation for the shareholders. In fact, HSBC has maintained its buy rating on Tata Steel with a target price of 215 rupees, and the brokerage highlighted the stock's surprising underperformance compared to European peers, especially after the implementation of CBAM, which drove a sharp rally in European steel companies over the past 6 months. Now, HSBC is expecting European steel prices to rise further, creating upside risk to Netherlands estimates. Now, the underperformance is notable given Tata Steel's significant European footprint of 7 million tons. Now, D Development Engineers has delivered strong execution and healthy inflows. The company's order book stood at 1,302 crores as of December 2025, with cumulative orders worth 793 crores already executed. Now, for the first 9 months of FY26, overall order inflows came in at 867 crores, reflecting robust demand and also execution momentum. Now, these numbers underscore the engineer's solid positioning in the engineering and infrastructure space. In fact, Panacea Biotec has hit a major milestone in its dengue vaccine journey. Now, the company has successfully completed phase 3 of clinical trials for its indigenous single-shot dengue vaccine, enrolling over 10,000 participants across 19 sites in India with ICMR support. So this breakthrough positions Panacea Biotec to target a 2027 launch, offering a potential game changer in dengue prevention. Let's look at some brokerage notes again. Citi has maintained a sell rating on ICICI Lombard with the target price of 1,710 rupees. Now, the brokerage cites risk-adjusted growth amid elevated competitive pressures as a key concern. Now, while it expects a motor third-party rate hike in FY27 and remains confident on reinsurance pricing, Citi believes that these positives are not enough to offset the near-term challenges in the general insurance space. In fact, Citi has maintained its sell rating on Info Edge with a target price of 1,300 rupees. The brokerage is noting steady billings growth in the Q3, but highlights that non-recruitment verticals remain more competitive compared to recruitment. Now, while there's modest improvement in these segments, Citi is saying that cautious, given the weak outlook for, its hiring, which continues to weigh on the overall growth prospects. In fact, Macquarie is remaining cautious on India's restaurant sector, flagging a back-ended demand recovery and also weak near-term trends. Now, the brokerage is noting subdued demand across the industry, with delivery continuing to outperform the dine-in formats. Now, it has also cut the EPS estimates by 7 to 23% on the delayed recovery expectations, but stays hopeful for a rebound in the second half of calendar year of 2026. Macquarie is saying that demand uptick remains the key driver for sector performance going forward. Next up, we have GR Infra's arm that has successfully completed its road project in Chhattisgarh. Now, the project has been declared fit for operation, and this is marking a key milestone for the company. Now, the bid cost for the Chhattisgarh project stood at 1,527 crores, reinforcing GR Infra's execution capabilities in the large-scale infrastructure development. Next up, we have Meesho, and its shares have slid 5% as the post-IPO lock-in period has ended. Around 11 crore shares, representing 2% equity, became tradable, taking the total, free float to 39.1 crore shares. Since listing, average daily traded volume has been 1.4 times, the free float, and also that's fueling the volatility. In fact, multiple intraday trades have driven sharp prices swings, with daily moves averaging 7% between the high and low. For context, free float refers to shares available for trading in the open market. And next up, we have HUDCO. So, Housing and Urban Development Corporation has signed an MOU with Chhattisgarh government to provide financial assistance worth 11 lakh crores over the next 5 years. Now, the funds will be used for executing various housing and infrastructure projects across the state. Now, this partnership aims to accelerate urban development and also improve the housing availability in the state. Now on to some more corporate action there. India's market regulator, SEBI, is alleging that employees at Bank of America has shared non-public information internally linked to a block deal in 2024. Now, according to sources, SEBI has sent the bank a show-cause notice, also flagging that BOFA allegedly, provided incomplete details when the regulator first sought the information. The notice outlines the allegations and also seeks the bank's response. Now, Bank of America, meanwhile, is preparing its reply but has declined to comment publicly. SEBI hasn't responded outside the business hours. Now, viewers, from regulatory scrutiny to worker safety concerns in the gig economy, a tragic accident in Hyderabad has once again spotlighted safety risk faced by the gig workers. A 25-year-old Zepto delivery partner, K. Abhishek, has lost his life late Monday night while rushing to complete, a delivery. Police is saying that Abhishek lost control of his two-wheeler on a busy stretch near Mehdipatnam. So, after which a private bus ran over him. Now, the incident has triggered outrage among the gig worker unions who blame the high-pressure, ultra-fast delivery timelines. And police is saying that an investigation is underway and have urged delivery partners to prioritize safety. In fact, turning to global tech giants and a reshuffle at the very top, Google parent Alphabet has overtaken Apple to become the world's second most valuable company. Alphabet's market capitalization has climbed to about $3.89 trillion after its stock has jumped over 2%. Now, Apple now slips to third with a valuation of roughly $3.85 trillion, while the Nvidia continues to lead the pack. Alphabet's sharp rise has been powered by its aggressive push into AI, especially with its Gemini assistant, even as Google search retains its dominance. And Apple, meanwhile, continues to face investor skepticism over delays in its AI rollout. Now, staying with the big tech, but this time on the jobs front, Microsoft is reportedly preparing for another major round of job cuts, with estimates ranging between 11,000 and 22,000 roles later this month. Now, if confirmed, this would be the company's largest layoff exercise so far and the 4th January in a row with, workforce reduction. So these cuts are being linked to soaring AI-related costs, including the massive spending on data centers and chips. Microsoft has spent over $80 billion on AI last year alone. Now, analysts are saying that the headcount reductions may be needed to offset the rising depreciation expenses. Now, from AI cost to AI capabilities, OpenAI rolls out a new health-focused feature. OpenAI has launched a new ChatGPT Health tab, following users to ask health-related questions, upload the medical records, and also connect wellness apps like Apple Health and MyFitnessPal. Now, the company is saying that the health and wellness is already one of the ChatGPT's most popular use cases, with over 230 million users globally seeking such information every week. Now, the new feature aims to help the users understand the test results, also prepare the doctor for visits, and manage diet or fitness goals. Now, the launch is coming even as regulators are reassessing this oversight of health tech tools. Now, viewers, Samsung Electronics has projected a 208% rise in fourth quarter operating profit from a year earlier, significantly beating the analyst expectations here. The South Korean tech giant's forecast reflects sharply higher memory chip prices driven by strong demand for artificial intelligence hardware. And Samsung has estimated its operating profit for the October-December period at about 20 trillion won, which is the highest quarterly figure on record. Now, revenue is also expected to climb around 23% year on year. So the company will release the detailed quarterly results later this month. Now on to some national news. External Affairs Minister S. Jaishankar has said that he can fairly confidently predict a major upswing in India's relationship with Europe in 2026. Speaking during an interaction with the Indian community while on a visit to France and Luxembourg, Jaishankar has said that global volatility is forcing the countries to rethink the partnerships. He has added that it's no longer just about de-risking and about building deeper, trusted relationships, something that is bringing India and the European Union closer. Jaishankar has said that New Delhi will invest far more time and attention in Europe going forward. And from diplomacy to justice, a key development in a Manipur violence case. A special CBI court in Guwahati has framed charges against 6 men in one of the most horrific cases linked to the Manipur violence of 2023. Now, the case relates to the incident on May 4 where 3 women were stripped and paraded naked, and 2 were allegedly gang raped in public view. Now, the charges also include, the alleged killing of 2 relatives of one of the victims. The CBI has told the court that there is sufficient material to establish a strong prima facie case. Now, defense lawyers, however, have contested the charges. Now on to some election-related updates from Maharashtra. The Maharashtra government has declared a public holiday on January 15, 2026 across areas voting in municipal corporation elections. Now, the move is aimed at ensuring voters can cast their ballots without work-related disruptions. And the holiday will apply in 29 municipal corporation jurisdictions, covering government offices, banks, semi-government bodies, and also undertakings in the notified areas. Importantly, the order also applies to the registered voters working outside their voting jurisdictions. And political temperatures are also rising in West Bengal. The Enforcement Directorate has conducted raids at the Office of Political Consultancy IPAC in Kolkata. as part of a probe into an alleged fake government job scam. Now, the searches are underway at multiple locations across the country. West Bengal Chief Minister Mamata Banerjee has reacted sharply, alleging that Trinamool Congress party documents were taken during the raid. Now, accusing the ED of targeting her party ahead of the elections, Banerjee has questioned the seizure of what she called party files and data. And now news of a major loss to India's environmental movement. Renowned ecologist Madhav Gadgil, known globally for his work on the Western Ghats, has passed away in Pune at the age of 83. Gadgil has chaired Western Ghats ecology expert panel and also played a pivotal role in shaping India's environmental discourse. Last year, the United Nations has honored him with the Champions of the Earth Award, its highest environmental recognition. And Gadgil's work has highlighted the fragile balance between development and conservation in one of the world's richest biodiversity hotspots. And the Supreme Court has postponed its hearing on petitions challenging the Election Commission's special revision of electoral rolls. The matter will now be taken up on January 13. Petitioners argue that the revision violates established norms and also could impact the voter list ahead of the upcoming election. The EC has maintained the process is routine and necessary for the accuracy, and the court's decision could influence the electoral preparations in several states. Now on to some global news. A controversial US sanction bill that could hit countries buying Russian oil, including India, has received President Donald Trump's backing. Now, Republican senator is saying that Trump has greenlit the bipartisan Graham-Blumenthal bill, which allows the US president to impose tariffs on up to 500% on nations that knowingly purchase the Russian oil or the uranium. Now, the bill is aimed at economically squeezing Moscow as Washington pushes for an end to the Ukraine war. Graham is saying that a vote could come as early as next week, though the timing remains uncertain given the US legislative calendar. And staying with the Washington, the Trump administration is also pulling the U.S. out of major global bodies. Donald Trump has signed a memorandum directing the United States to withdraw from 66 international organizations and United Nations affiliated entities it says are contrary to U.S. national interest. Now, the list includes 35 non-UN groups and 31 UN bodies such as the UN Framework Convention on the Climate Change and agencies focused on gender equality. And this development, the White House is saying that the move will end U.S. participation and also funding in these organizations. And this reflects Trump's broader strategy of prioritizing sovereignty and reducing the engagement with multilateral institutions. Critics are warning that this step could diminish the U.S. influence in key global areas like the climate negotiations and humanitarian programs. And now to the Arctic, where Washington's interest in Greenland is back in focus. U.S. Secretary of State Marco Rubio is saying that he will meet Danish officials next week amid renewed U.S. interest in Greenland. Now, the talks comes as the Trump administration doubles down on its view that controlling the strategic Arctic island is critical for U.S. security, particularly with growing Chinese and Russian presence in the region. Now, Denmark's foreign minister and Greenland's leadership had sought the meeting after earlier requests went unanswered. Now, Rubio has also told the US lawmakers that Washington prefers purchasing Greenland rather than using military force, which is a stance that has already stirred the diplomatic unease in Europe. Now on to some sports news. Australia has sealed a 4-1 series victory by beating England by 5 wickets on the 5th day of the 5th Ashes Test in Sydney. Chasing 160 for victory, the hosts have reached targets with the 5 wickets down, ending England's resistance late on day 5. Travis, the head, anchored the chase, complimenting the contributions from Weatherland. And earlier, England were bowled out of for 342 after resuming at 302 by 8, with Bethel's 154 failing to prevent their defeat. Now, the victory is marking Australia's 4-1 Ashes triumph and also brings Khwaja's Test career to a fitting farewell. And with that, viewers, we wrap up Market Express. We'll keep tracking all the developments that could really set the tone for next trading session. Thanks for watching. I'm Himakshi Bhagna. Stay tuned.
Ignition. Liftoff.
want to become the Uber for space. What we do is that satellite companies book the rocket, just like you book a cab, and then go to wherever they want.
So tell us the origin of this entire journey.
Just quit my job, start the company along with my friend Bharat. We both were at ISRO, joined together, so we were flatmates.
So these roommates decide to start their own company. Are you a big fan of the Big Bang Theory?
Of course, who is not?
Who do you identify with most?
I think Sheldon is good.
Do you want to be the Elon Musk of India?
I've been a big fan of Elon. He's a phenomenal, human being, great achiever, wonderful engineer, right? So really inspired by him.
How did your family and your ecosystem react to your decision that I'm going to quit my job in ISRO and start a private space company?
When we started the company, there was no policy, there was no funding environment. Like every family, our family is shocked, what's happening to my son.
What do your parents do?
In fact, I told them after resigning the job.
How do you go about looking for funding?
He messaged Mukesh on LinkedIn.
Are you kidding me?
Yeah.
Your first pitch was on LinkedIn. There be room for people in your space cabs?
Aspiration is 5 years down the
Really?
line. So we want to make space flight as easy as air flight.
Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network. New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Market ends lower for the fourth straight session, with Nifty falling below 25,900 and Sensex losing around 800 points. All sectors closed lower. Mid and small cap indices underperformed the benchmarks. Metal index bleeds as a top sectoral loser to close over 3% lower. Jindal Stainless, Hindustan Copper fall over 5%, and Hindustan Zinc loses over 6% in trade. IDFC First Bank gains close to 3% after cutting its savings account interest rates, lowers headline rate by 50 basis points and reshuffles balance slabs. PVR expects Q3 to do well on the success of Dhurandhar. Executive Director Sanjeev Bijli tells NDTV Profit plans to expand premium screens in other cities. India and the European Union are set to make a final political push to break deadlocks in the long-pending free trade agreement. Commerce Minister Piyush Goyal will reach Brussels today for a crucial India-EU FTA talk. Russia slams US over seizure of oil tanker in the Atlantic Ocean, says no state has the right to use force against vessels lawfully registered under another state's jurisdiction, adds it received temporary permit to sail under the Russian Federation flag in accordance with the international law. Trump allows a bipartisan Russian sanctions bill. It targets the countries doing business with Russia, is expected to impact China, India and Brazil. Republican Senator Lindsey Graham says the Congress will vote on it next week. US withdraws from 66 international organizations. Secretary of State Marco Rubio calls them anti-American, useless or wasteful. Says the administration will stop subsidizing globalist bureaucrats who act against America's interests. Hello and welcome viewers. A very good evening. This is Profit 360 on NDTV Profit and I'm Malika Mishra. Along the next half an hour, we'll give you 360-degree perspective into markets, national as well as international news. Let's begin with checking how the markets fared today. The Indian stock markets closed lower for the fourth straight session today. The Nifty slipped below the 25,900 mark, ending around 25,877 after falling over 260 points, while the Sensex dropped sharply by 780 points to close near 84,180 odd levels. A combination of factors such as tariff pressure and consistent FII selling seems to be dampening investor sentiment. Heavy selling was also seen in the metal and oil and gas sectors, dragging down those indices as well. But let's get my colleague Varsha to explain how the market action was fair today.
Markets are under pressure for the fourth straight session. Nifty, lose below 25,900 mark. Hindalco Industries and ONGC fall over 3%. Top losers when it comes to Nifty. Metals, oil and gas drag the Nifty. Hindustan Zinc, Jindal Steel and Hindustan Copper fall over 5%. Broader market indices, if you see, fall over 2% for the day. All sectoral indices fall in trade. Nifty Metal fall over 3% for the day. Nifty IT, if you see, fall over 2% ahead of the Q3 earnings. Signature Global, Avanti Feeds, NMDC Steel fell over 6% for the day. Signature Global, Avanti Feeds and NMDC, if you see, are the top losers when it comes to Nifty Small Cap 250. BHEL, Siemens India, L&T and ABB falls as India plans to scrap curbs on Chinese firms. BHEL hits a lower circuit as India plans to scrap curb on Chinese firms.
Thanks so much for that, Varsha. And just ahead of the Q3 earnings season, viewers, that starts tomorrow, by the way, Gautam Duggar spoke first to us on his constructive stance on earnings growth. He is the Director and Head of Research for Institutional Equities at Motilal Oswal Financial Services, and he believes that the cumulative impact of policy reforms will finally start reflecting on corporate results this quarter. Let's listen into his view.
We are slightly more constructive than we've been for last few months. The single driving force behind that is the improvement in earnings that we're expecting. If you recall, last 5-6 quarters, we've literally done nothing on earnings. In fact, the entire FY25, we had a very flat year, 3-4% earnings growth. The first of FY26 was also slightly better, but nowhere near what we had gotten used to between FY20 to FY24, which was a period of 20% plus earnings compounding. So as we start CY26, the cumulative effects of the actions that the government and regulator has effected over the last 7-8 months, be it the GST cut, income tax rate cuts, interest rate cuts, the liquidity infusion, and various reforms that the government has announced, I think the impact will start getting felt from this quarter onwards. And hopefully, as we move forward in the calendar year 2026, it will strengthen further.
And IDFC First Bank has changed its savings account interest rates, and the new rates start from January 9, 2025. That's tomorrow. The bank has lowered the top rate to 6.5% from the earlier 7%. Now, interest works on a progressive basis where different parts of your balance earn different rates. For balances up to 1 lakh rupees, you get 3%. Above 1 lakh to 10 lakh rupees, it's 5%. Above 10 lakh to 10 crore rupees, you earn 6.5% for even higher amounts. And above 10 crore to 25 crore rupees, it's 6%. Then 5% up to 100 crore rupees and 4% beyond that. Now, this change mainly affects larger balances, while smaller savers up to 10 lakh rupees will see little difference. But moving on, Union Minister Piyush Goyal is in Brussels for high-level talks as India-EU FTA negotiations reach a crucial stage. Piyush Goyal will meet EU Trade Commissioner to resolve key issues and push for a balanced and ambitious trade pact. Officials describe this as a historic juncture in the long pending negotiations. While Goyal also chaired a business roundtable with Liechtenstein companies highlighting India's commitment to deeper economic ties. He said that the India EFTA TEPA is more than a trade deal. It's a framework for investment, technology, collaboration, skill development, and building resilient value chains. Negotiations for the India-EU FTA were first launched in 2007, but stalled in 2013 due to differences over market access. Talks were then revived in June 2022 after a gap of over 9 years, and that's why this is so important. My colleague Rishabh Bhattaker joins us with more details.
Absolutely. This is yet another very important round of talks that is set to take place starting today in Brussels, Belgium, which is the headquarters of the European Union. This is between Commerce Minister Piyush Goyal and the EU Trade Commissioner Maroš Šefčovič. Now, remember, what is expected is that January 26th is when the EU leadership is expected to be in New Delhi as Republic Day chief guests. There is a January 27th India-EU summit that is supposed to take place in New Delhi. So the expectation is that the FTA is seen as a key deliverable for that particular event. So this particular set of talks is very, very crucial in that run-up. What we're seeing is that India has pushed for zero duty access for its labor-intensive products. Those include leather, apparel, footwear, gems and jewelry, handicrafts, while what the EU wants is tariff cuts on cars. They want cuts on medical devices, poultry, and all of those things. Where talks are stuck are on cars, on EU's carbon border adjusted mechanism, the carbon tax that EU wants to levy. That is something that India wants to get out of. There's also steel that is proving to be a sticking point between both the sides. So a lot of negotiations are already done. These are very much in the final stages, and what we'll see currently happening in Brussels over the next 2 days is some sort of a final political push coming in from Commerce Minister Piyush Goyal as well to finally get EU to also sign on these dotted lines, and thereby concluding what will be one of the most ambitious free trade agreements that India would have done with a developing set of countries.
And moving on from the agreement, the trade agreement with the EU, PM Modi chaired a roundtable with 12 Indian AI startups shortlisted under the AI for All Global Impact Challenge at the India AI Impact Summit 2026. Now, these startups working across sectors like healthcare, LLMs, material research and simulations highlighted India's growing leadership in AI innovation. The PM called them co-architects of India's future and urged the creation of ethical, inclusive and locally relevant AI models. PM Modi stressed promoting regional languages and indigenous content while ensuring transparency and data privacy. PM assured full government support to help these startups succeed and scale globally in the AI ecosystem. And meanwhile, Russia is talking tough after US seizure of its oil tanker. Russia has said that the US seizure of a Russian-flagged oil tanker in the Atlantic was a violation of maritime law, and a senior lawmaker described it as an outright piracy. In a statement, Russia said, and I quote, "In accordance with the 1982 UN Convention on the Law of the Sea, freedom of navigation applies in the high seas, and no state has the right to use force against vessels duly registered in the jurisdictions of other states." End of quote. The United States had seized an oil tanker, the Marinera, linked to Venezuela in the North Atlantic. My colleague Jagruti in Washington shares details on oil tanker seizure and, of course, also the Venezuela crisis.
US President Donald Trump's pressure campaign on sanctioned oil is showing no signs of slowing down. The head of Homeland Security, Kristi Noem, detailed the pre-dawn operations on X. She said the Coast Guard conducted back-to-back meticulously coordinated boarding of 2 Ghost Fleet tanker ships, one in the North Atlantic Sea and one in international waters near the Caribbean. The former, the Bella 1, is believed to have set off from Iran to pick up oil from Venezuela. But after being pursued by the US military, it altered course, changing its name to the Marinera. The US Southern Command accused the vessel of violating US sanctions. The UK confirmed it had assisted the US operation. Britain's Defence Secretary calling the Bella 1 tanker part of a Russian-Iranian axis of sanctions evasion. Moscow, an ally of Caracas, has accused Washington of violating international law. In her first briefing on Venezuela since Nicolas Maduro's capture, Press Secretary Caroline Leavitt didn't give clarity on whether the seizure risks flaring tensions between Russia and the United States.
And as the US and Russia are now entering a phase that really marks a tensed relationship, US Secretary of State Marco Rubio outlines a 3-step US strategy for Venezuela: stabilizing the country, rebuilding its economy, and transitioning to a new government. The plan comes as the White House says it now holds maximum leverage over Venezuela, including control of millions of barrels of oil. Let's listen in to his comments.
Well, there's a lot of operational details that can't be discussed publicly, obviously, for obvious reasons. So as we move forward, we'll describe our process, which is a 3-fold process in Venezuela. I've described it to them now. Step 1 is the stabilization of the country. We don't want it descending into chaos. Part of that stabilization, and the reason why we understand and believe that we have the strongest leverage possible, is our quarantine. As you've seen today, 2 more ships were seized. We are in the midst right now and, in fact, about to execute on a deal to take all the oil. They have oil that is stuck in Venezuela. They can't move it because of our quarantine and because it's sanctioned. We are going to take between 30 and 50 million barrels of oil. We're going to sell it in the marketplace at market rates, not at the discounts Venezuela was getting. That money will then be handled in such a way that we will control how it is dispersed in a way that benefits the Venezuelan people, not corruption, not the regime. So we have a lot of leverage to move on the stabilization front. The second phase will be a phase that we call recovery, and that is ensuring that American, Western, and other companies have access to the Venezuelan market in a way that's fair. Also, at the same time, begin to create the process of reconciliation nationally within Venezuela so that the opposition forces can be amnestied and released and from prisons or brought back to the country and begin to rebuild civil society. And then the third phase, of course, will be one of transition. Some of this will overlap. I've described this to them in great detail. We'll have more detail in the days to follow. But we feel like we're moving forward here in a very positive way.
And in another bold move, the US Senate has introduced the Sanctioning Russia Act of 2025, setting tough measures if Russia undermines peace in Ukraine. And here's what it calls for. First, visa and property sanctions on Russian leaders, military commanders, and foreign suppliers of defense items. Second, a steep tariff hike, at least 500% on all Russian imports. Third, the same 500% duty on goods from countries trading Russian uranium or oil. And fourth, Treasury to block assets of Russian banks and any institution dealing with them. Fifth, Commerce to ban US energy exports and transfers to Russia, a sweeping plan aimed at tightening economic pressure on the Kremlin. For more on this, I have my colleague Vishal Vivek joining us. Vishal, what else can you add to this?
Well, this will take some time to clear Congress. Some reports suggest that this could be in the matter of the next 4 or 5 days, which is pretty soon when it comes to the whole the overall scenario of the Russia-Ukraine war and also relations of India and the US. What Indian authorities are going to do on this, that remains to be seen, because 500% would mean 10 times the tariffs that India currently, attracts from the US side, which would be, a new low in the relations between both the sides, which has already been quite rocky in the last 1 year or so. There have been some amendments on that front. There have been many meetings which have resulted in some sort of an agreement, but an official deal between both the sides is still to be done. this would be a dent to the whole operation. So we'll have to wait for what happens now, because as I mentioned, 500% tariffs would be the highest in the world, 7 to 8 times more than the highest tariffs that are being levied by the US from anyone in the country, anyone in the world. So we'll have to wait for this bill to be passed by the Congress.
Exactly. 500% tariffs is definitely a big number to put your attention on, and in fact also questions the probability of continuing trade. But Vishal, US President Donald Trump also signed a proclamation withdrawing 66 organizations. And US White House said that it includes 35 non-United Nations organizations and 31 UN entities that operate contrary to US national interests. The White House said they promote radical climate policies, global governance, and ideological programs that conflict with US sovereignty and economic strength. Since beginning his second term a year ago, Trump has sought to slash US funding for the UN, stopped US engagement with the UN Human Rights Council, extended a halt to funding for the Palestinian Relief Agency UNRWA, and quit the UN Cultural Agency UNESCO. He also announced plans to quit the World Health Organization WHO and the Paris Climate Agreement. Vishal, what else do we know on this particular exit, and how important is this as one of the world's largest, most powerful countries makes such a bold move?
Well, this hardly comes as a surprise, but the number of organizations that the US is withdrawing from, that is a surprise. The intent is not a surprise, as I mentioned, because US has already been, withdrawing from a lot of these UN bodies. We've seen, as you rightly mentioned, from the US, from the WHO, the US has withdrawn funding. A lot of these organizations depend on US funding to function, and we've seen the cascading effect on a lot of these functionings, because some of these nations, some of these agencies work in embattled areas such as Gaza, which have been stopped funding. So the effect will be seen across the globe. 66 agencies, most of them under UN. Most of these are humanitarian agencies, population agencies. These work at the grassroots level. So the level of impact can be seen across the globe. And we'll have to see how far the US administration is willing to go on this, because the US is practically off the map of all of these NGOs, these big governments, non-government organizations that help in functioning of the world. So the funneling needs to begin again to a lot of these humanitarian agencies to start functioning again. And now that he has withdrawn funding from 66 agencies, that will be another blow to the whole UN atmosphere, whole UN environment. So this will be closely watched by humanitarian agencies. What they are willing to do to appeal to Trump, that remains to be seen.
Exactly. Thank you so much for giving us those details. Of course, as Vishal highlighted, it's important to see how the US takes this step ahead. To what extent will it actually go and exit itself? Because it really affects the global synergy that has tight-knitted the world for so long. But let's now bring you a special conversation with Sanjeev Kumar Bijli of PVR Inox on how he expects the third quarter numbers to pan out after Dhurandhar, which, by the way, garnered about 1,200 to 1,300 crore collection internationally. Take a look.
We've obviously been elated by the response that we've got this year. Last year was a bit muted, but this year has ended, calendar year has ended on a very high note. With Dhurandhar, it's going to be, finishing at about 900 plus crores in Hindi. And internationally, it's done more than that, about 1,200, 1,300 crore. And it's so gratifying and so reassuring to get a movie like this, which has done so well at the box office. Because there's been so much chatter about people not coming to the theaters. But of course, this entire year we've had films which has brought people back to the theaters, be it Sayyara, Kantara, Thama, War 2, and now Dhurandhar, and Avatar as well to some degree, and of course a lot of other English movies. So we're very happy and excited that these movies have brought people back to the cinema. So ended the year on a good note.
Mr. Bijli, talking about the sort of traction you've had for 2025, what is how is dynamic pricing done? Are you seeing more acceptance for that as you've seen more of these movies and halls getting sold out?
Yes, we've always sort of like been a company that has practiced dynamic pricing, and pricing is also a function of the formats.
And on that note, viewers, we've reached the end of this edition of Profit 360, but do stay tuned to the channel as we continue to bring you a lot more news and updates. Thanks so much for your time. Keep watching NDTV Profit. This is Malika Mishra.
Ignition. Liftoff.
We want to become the Uber for space. What we do is that satellite companies book the rocket, just like you book a cab, and then go to wherever they want.
So tell us the origin of this entire journey.
Just quit my job, start the company along with my friend Bharat. We both were at ISRO, joined together, so we were flatmates.
So these roommates decide to start their own company. Are you a big fan of the Big Bang Theory?
Of course, who is not?
Who do you identify with most?
I think Sheldon is good.
Do you want to be the Elon Musk of India?
I've been a big fan of Elon. He's a phenomenal, human being, great achiever, wonderful engineer, right? So really inspired by him.
How did your family and your ecosystem react to your decision that I'm going to quit my job in ISRO and start a private space company?
When we started the company, there was no policy, there was no funding environment. Like every family, our family is shocked. What is happening to my son?
What do your parents do?
In fact, I told them after resigning the job.
How do you go about looking for funding?
He messaged Mukesh on LinkedIn.
Are you kidding me?
Yeah.
Your first pitch was on LinkedIn. There be room for people in your space cabs?
Yeah, aspiration is 5 years down the line. So we want to make like space flight as easy as air flight.
Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. The nerve center of the maximum city, the BMC. A contest that will shape Mumbai's next decade, its identity, its legacy, its future. NDTV brings you the battle for Mumbai, asking who will hold the keys to India's richest civic body and what would it mean for Mumbaikars. BMC Power Play, only on the NDTV network.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
A very special moment for us as we announce NDTV Masterstroke, the NDTV Art Awards.
NDTV presents the Masterstroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Let's start the show, but I'm going to tease and give you some hints about the company which will be coming to KYC today. The first hint is it's a Mumbai-based company and it deals in the IT infrastructure space. What is the product profile? That's something which we'll look out for. The key clients also we'll look at that, and the stock that's up 21% in the last 1 month. Key clients, they include Oracle, Microsoft and Apple. And looking at the recent order flow, almost a 250 crore order has come to the company from RBI. So let's guess the company, what it is. And just to give a smaller hint, on the social media we did tease you a bit early in the morning. There was a dinosaurus photo as well, but the company in focus is Dynamite Tech. Let's put this company out on screen, and this is the one, Dacon Systems and Solutions. This is the company which we will be talking about, but there are the reasons. Why are we calling this company? Why is this not discussed amongst the analysts? And this is one of the major reasons, why we are calling this company is it's largely untracked by analysts and there is literally no institutional participation. Let's pull out the reasons for why we are bringing the company. And this includes recent order wins coming in from RBI. We will be asking the management on that. Apart from that, also let's see which other segments are they actually working for, and let's see another point is that the exact business model, what it is. Is it a service-based company? Is it a product-based company? A lot of concerns are there because the company is all over the place. So we need to understand what the company is actually all about. What are the benefits coming in from cloud adoption? Is there a second order effect at play? That is something we'll watch out for. Of course, AI transformation, is this a big industry trigger? And if that's there, is company at an inflection point because of that? That is also something which I'm wondering about this character. Also the margin guidance that's ahead for 2027. Will that remain as what a normal SaaS product or an IT related company has, or is there a difference here? So we need to check on that. And of course, it's a very interesting analysis lined up on the valuations and its peers as well. On the show today is Dharmesh Anjaria. He's the director of the company, and interesting details about him. Of course, he's a CA and a cost accountant, but 28 years in this IT industry as well. So that is something which is very much important. And also talking about that, we will be also talking about his key other details also, and that of course is that a good support is coming for his street credit. But moving on, let's just talk about the company. What's so much important? It's incorporated in 1995. Dynacons. This is the company. It's a Mumbai-based company. Also, it provides IT infra and related activities. Looking at the services, they include infra designing, consulting, turnkey system integrations, which are very much important, and they have secured a prestigious software project from RBI as well. So that's something very important update coming in. And going ahead, these are the key clients which will be important: Oracle, Microsoft and Dell. And apart from that, the network and security, Cisco, McAfee also make it to the list, and you could see a large amount of players are there in this space as well. So 3 business categories and 3 different types of clients which are there for Dynacon's system as well. But just explain you the entire rating process, how these things happen: the income statement, balance sheet, cash flow, return ratio. These are the 4 parameters. Apart from this, the other 4 parameters include shareholding, street cred, which is nothing but the stock reaction which has happened 1 month, 3 month, and also the you could say 5-year basis. Apart from that, valuations, we compare them with the peers, and the outlook, which is very much important for the stock. So totally 8 rating parameters are there where we'll judge the company. Okay, so the first one is of course the income statement. That revenue is almost 1,000 odd crore rupees, but it has been significantly growing up, and 3-year CAGR is very decent. It's at around 25%. Over there itself, EBITDA also, if you have a look at it, that itself has also jumped almost 50%. Net profit, that's a significant up move coming in, and that's where the strength is coming in. I checked the H1 numbers also, and they were on the stronger side. So net for the income statement, I will be giving this a positive outlook. Also, let's just show you how the balance sheet actually comes out for the company itself, and it's very important to see 2 important factors. Actually, the book value, that has actually significantly gone up from 105 crore rupees to FY25, it's around 231 crore rupees. Another important ratio is the cash bank balance, and that has also gone up. That means it's showing some good liquidity as well. So it's a thumbs up coming in. Also, another category is the cash flow segment. Out here also we are seeing that the PAT, that has significantly done well from 33 odd crore rupees for FY24. It's moved 54, then 72. That means the important number, the PAT number, that is doing really well. And there's an interesting segment called the cash flow conversion to PAT. That has also been growing up very nicely. The net cash flow, that's also done really well. So it's a thumbs up when it comes to the cash flow statement as well. So overall, looking at the entire picture, I would say that the first 3 ratings from the financials front, they have done really well. And that's why 3 thumbs up has come. But now, will this sustain? That's the question. And now more questions are coming. The ROC numbers, generally the ROC numbers have been growing up, and now it has plateaued but actually come down also. So of course the criteria remains. So when a company is having this strong ROCs and they're on the upside, that gives more alpha in the future. But let's pull out the ROE numbers also and see what's happening. Is it same as ROC? Actually, this is the return on net worth. This is also actually kind of plateaued around 31 odd %. So of course at times the seasonality also comes in and issues come, but net I would still give a neutral rating because it's still on the higher side for an investor. So that is a good point, but it's plateauing, and that's the reason why I've given a neutral rating. Apart from this, let's move on to the shareholding segment, and that's where my concern starts coming in the company. Promoters are holding 61%, we know that, and the public is there 39%, but the real stress, or you could say that the discovery of this stock has not happened amongst the analyst community or even the fund managers, and of course the market cap is also on the lower side, is there is no institutional support. So in case an institutional support comes, then there might be a re-rating also in the stock, but as of now, since there isn't, I have given a strong thumbs down to the stock for the shareholding pattern segment. But apart from that, the shareholding pattern segment, I would like to talk about the other segment also, which would be in focus, and that is the street cred. The stock is up 21% in the last 1 month, and that's where our interest came in to call this company in our KYC show. 6 months, nothing much has happened. Stock has largely been flat, and over the last 1 year also, we see the stock is still down 30 odd percent. Some kind of a technical breakout also coming in the last 2 to 3 odd months. But 5 years, you see, stock has been a multi-bagger. It's up 1400 odd percent. But the stock, 1 year basis, 2 year basis has taken a rest. But net, it's a neutral rating. And when it comes to the valuations, there's a lot of concern. You must be wondering why so much, differences in the valuations. That's the query. Market is also confused regarding this stock, whether it's a product company, service company, or it's a SaaS company where most of the valuations have actually corrected down. So I've taken the nearest companies which are there, and of course Agility, Affle on the higher side, and other peers also, if you can show, they are also on the higher side if you compare that with Dynacon. So it seems like there is some mispricing in this counter, or is it that it's not commanding the premium which its peers should do? So that's my concern as well. But net, it's still cheap. If you look at the stock, it's 12 months trailing PE at 18 times. So it's a neutral rating when it comes to the valuations. But apart from valuations also, let's see the outlook. That's very much important for the company, and that is something in the future. AI would be very much important. Each segment I'd like to point out the security and the networks order in outlook, what it is going ahead. People need to understand what the company is actually doing. It's a very, very broad definition which the company claims that it's there in that business. Also, let's see the data center and the large scale network. What is company doing here? What's the potential going ahead? And if they can quantify that, then it will make a lot of sense, to have that company in the discussion. Also, the revenue margin growth guidance for 2027, where does it stand? Does it go past that 10% mark for the margins on the consolidated basis? That's what we'll ask Dharmesh. And AI adoption. Company has mentioned in their annual report, a big paragraph was there, I was reading that, and AI adoption is likely to accelerate. And when this happens, there is a huge jump which can happen in most of the company's dynamics. But will it happen to this company or not? All those details we'll ask Dharmesh Anjaria. And of course, let's give you the total, outlook currently of what I have given of the company. And largely we see, the revenue, income statement, cash flows are very good. So I've given a strong thumbs up over there. Return ratios, they need some more time when things start coming in. Also, let's pull out the other parameters, what numbers we have given. And this includes shareholding. That's where my biggest concern is. There isn't any institutional participation there. Street cred, decent enough, and last 1 month it has done well for the investors, 20% up. Valuations, cheapest amongst all. But does it, require a premium on these levels? That's what the street is confused about. And outlook is very strong. Maybe an proxy play to the AI, the second order effects, but largely undiscovered stocks. So net, on a higher side, on our KYC ratings, we have given 5.5 out of 8 when it comes to Dynacon's system. Apart from that, now let's move on to get the management in. And of course, we are having Dharmesh Anjaria. He is having 28% years of leadership experience in the IT segment. He's a qualified CA and a cost accountant. And interestingly, he has represented India at the World Summit of Young Entrepreneurs in Brazil as well. So one man wearing a lot of hats, and joining in is, of course, Dharmesh here. A warm good afternoon to you, Dharmesh. And I'd just like to ask, about the company itself, largely undiscovered, and that's mantra of our KYC show, one of the first channels in media to get these companies to understand what's missing or what's actually there. First of all, just explain us what your company is. The market is very confused. It's a product company, tech company, all-in-one company. What this company is actually?
Hi. Thank you for having us over here. And Dynacons, we are committed to empowering digital transformation among enterprises. We are a system integration company. We enable the IT infrastructures for large enterprises. There, under our system integration, we cover 4 areas: data center and cloud, network and security, covering cybersecurity as well, workplace solutions, and managed services, covering all these areas. So this is, what our business encompasses.
Right. Dharmesh, apart from this, there was a recent order win from RBI as well. It's a roughly 250 crore order coming in. Just like to get your view on that. Overall, what's your order outlook looking like going ahead? Are we going to see more? Because I'm thinking in the month of December itself, the order flows have started coming in. So that continues in Q3 also?
So we've had a decent order pipeline and good order visibility, where we are confident that the momentum and the growth that we have showcased in the past, as you have shown in your show, that we've grown on a CAGR of 25% year on year. We are confident that the growth momentum will continue there, and we are seeing significant orders coming in. We have three major customer segments: BFSI, public sector, and global customers. So these three customer segments are all, really empowering the entire digital transformation that India is going through currently. That, as you know, BFSI is leading in this entire digital transformation spree there. So this is where we are very confident there. And what we have done is, while we do under system integration, we cover everything from data center to workplace. We specialized in certain areas like core banking as a service, private cloud solutions, SD-WAN deployments across the country, their
Yeah,
IT lifecycle management
Dharmesh,
services.
that's an important point you had mentioned about it. But Dharmesh, speaking of these three segments, which is the segment which is having a high margins? I presume around 9% margins have been there on a long-term basis for the company. In the high margin way, are we looking at next 2 to 3 years changing your product profile, or if itself the work is so huge for all the three segments which you are stating about the company, what would be the overall margin profile looking like? I want a margin revenue guidance. Maybe a range would do.
Yeah. So the data center and network and this security business and cloud business is growing for us, and these are high margin projects there. So hence, we have already been growing our margins by the large projects that we have undertaken, and we expect this margin profile to improve further.
So this margin profile, it can touch the 9 to 10% mark also in 12 to 18 months.
Yes, we expect a double-digit EBITDA margin profile. Yes.
All right. So from 9, it comes into the double digit. Okay. That's an interesting take. Your clients have also, kind of moved up. Marquee clients you have. I checked your annual report. There was Oracle, Microsoft, Apple, IBM, all over the place. But are these contracts the larger ones or these are smaller ones? I just want to know that.
So our contracts, our customers, are the large BFSI companies like State Bank of India, LIC, Reserve Bank of India, Union Bank, Punjab National Bank, ICICI Bank. Then we have global customers like Meta, Amazon, S&P, Gartner. Also, we have large public sector enterprises like GNFC, Mumbai Municipal Corporation, CRIS, which is Central Railway there. So we have a whole large set of customers which encompass all, whether it is BFSI, public sector or global customers.
All right. But Dharmesh, apart from the customers themselves, looking at how the momentum is happening in the global order schemes, client budgets are also being made in the year end. Already 2025 has passed, so the new budgets are coming in. So the inquiries, how are they actually coming in from the global markets, especially the US market?
So the India is, you are all aware that how the Indian economy is shaping up, and the Indian economy is doing very well there. Both BFSI and public sector is growing. Global customers are increasing their presence in India, in either sell to India or growing their GCC presence in India there. So those are all large opportunities for us. AI implementation and cybersecurity and cloud, these three pillars will also drive the next wave of growth for us there, which they are already doing.
Dharmesh, I'd like to pick you on the cybersecurity front as well. A lot of government initiatives have started coming in, and even the regulators are taking a very, very serious look into this going ahead. So now this segment as a whole, earlier it was a very commodity type of a segment. How much it is getting specialized into, and how your company is benefiting from it?
So, security is, I think it's the entire landscape is changing there as far as security is concerned. It's a very, very important parameter that every enterprise needs to look into. The amount of security threats that we all are getting, and especially with AI around, there is a lot of data which is getting into all the AI models there, which is increasing the security threats that are open, that enterprises are open to. So today, Dan, for us, this is a very, very big opportunity. We have a AI-enabled knock and sock where we are able to use AI to help customers mitigate these threats, and we can provide a comprehensive coverage to enterprises around the same.
That's interesting, Dharmesh. But AI is, at the inflection point of a lot of industries. We saw that in US. Interestingly, I read a paragraph also in your annual report as well. Generally, a product-based company doesn't talk about a lot of AI as a separate, because it's a part of it, but you have given it separately as an inflection point as well. So if that inflection point comes, second order effect kicks in, how does the company benefit, and will it be like just one shot a big move, or will it be something like a gradual work which you'll be getting due to AI?
No, see, the entire AI, infrastructure, AI is going to help us in a lot of ways because of all the AI implementations that enterprises are going to take up. There is a lot of AI infrastructure that IT infrastructure that these would be requiring in terms of workloads, in terms of the GPUs, in terms of all the mandates that they would need to cover all the AI infrastructure there. Plus, with the DPDP Act and the RBI mandates, enterprise would need zero trust, micro-segmentation, and data sovereignty solutions, which are all integration heavy. All of these would require system integrators like us to help provide the required solutions.
All right. And Dharmesh, a question is, what's the normal timeline, for the payment, the moment, you get an order, and just you can divide it between the domestic and the international clients. Domestic, the B2G ones might be at having a higher payment cycle. So just give us those numbers, the payment cycles of your customer profiles.
So for the domestic customers, we generally work on large scale projects, and these projects are all milestone based projects there. So typically there is a go live period, and then there is a O&M period where these projects are typically over 5 or 7 years. So the go live period is typically around 9 to 12 months for the project there. And these are milestone based. So there could be certain milestones on implementation, certain milestones on go live, which is there. And then balance would be on operational, on O&M basis. We also have core banking as a service project that we have won for RBI. We are doing a lot of as a service projects. These are, annuity based projects there, where the revenues will, come in over a period of 5 years.
All right. Dharmesh, just to simplify it for our younger audience, especially Gen Z, they generally want things in a very simple manner. Like suppose your company is there and I am an Indian MNC company in front of you. What kind of services you are actually giving? Now you enter with multiple services, multiple arms around you. So if you have to just give, if you have to pitch yourself that, hey, I am coming to an MNC, these are the services from my arms, what would that be?
Yeah. Well, we are a one-stop IT solution provider for any organization. We will help you set up your data center, help you in your cloud strategy, help you, define your network there, and help you build your network and connectivity across India. We will devise the entire enterprise security for you there, and also manage the entire security over the entire life cycle. We also provide managed workplace solutions where we will help you with the entire journey through the IT life cycle. And we provide all kinds of managed IT services and professional services. So in short, we are a one-stop IT solution provider for any organization looking to expand their IT infra. And we will help you through your AI journey as well as your cybersecurity journey.
All right. So it's a one-stop solution for the IT infra space and the AI journey as well, because AI journey is something which all the young viewers of KYC keep on asking me, and that's one of the first questions that's my duty to ask. And of course, the AI journey is there, the India's IT infra journey is there, but the market has not discovered this stock. And now let's just discover it, where it's actually standing. And we have taken out from our research team's analysis, we have given a rating to the stock for Dacon Systems. Income statement, balance sheet and cash flow are really strong. This is the past data which we have analyzed. So I've given a strong thumbs up to all these three criteria. Shareholding, that's the biggest concern coming in, as there's a lack of institutional participation. Perhaps more discovery can happen on this stock when we discuss them. So net, I have given 5.5 out of 8. The valuations are very attractive, it seems, for this counter, but the company has to show, whether it's a commodity side of the IT business or the specialized side of the IT business. And if the company claims that it's the one-stop solution for IT infra, then we should be looking at larger orders also. Right now also they have started getting large order. Roughly the market cap is 1300 odd crore rupees, and they got a recent 250 crore order as well from RBI as well. So let's see what happens overall, and net it's a 5.5 out of 8. Dharmesh, that's all for today. Thank you very much, Dharmesh, for joining in, giving the entire views and perspective about Dacons, and wishing you and your entire team a happy Merry 2026. So that's all, folks. Thanks for tuning on to KYC today, only on NDTV Profit. Stay tuned.
Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
3, 2, 1. 0, ignition, liftoff.
We want to become the Uber for space. What we do is that satellite companies book the rocket, just like you book a cab, and then go to wherever they want.
So tell us the origin of this entire journey.
Just quit my job, start the company along with my friend Bharat. We both were at ISRO, joined together, so we were flatmates.
So these roommates decide to start their own company. Are you a big fan of the Big Bang Theory?
Of course, who is not?
Who do you identify with most?
I think Sheldon is good.
Do you want to be the Elon Musk of India?
I've been a big fan of Elon. He's a phenomenal, human being, great achiever, wonderful engineer, right? So I was really inspired by him.
How did your family and your ecosystem react to your decision that I'm going to quit my job in ISRO and start a private space company?
When we started the company, there was no policy, there was no funding environment. Like every family, our family is shocked, what's happening to my son.
What do your parents do?
In fact, I told them after resigning the job.
How do you go about looking for funding?
He messaged Mukesh on LinkedIn.
Are you kidding me?
Yeah.
Your first pitch was on LinkedIn. There'll be room for people in your space cabs?
Aspiration is 5 years down the line. So we want to make space flight as easy as air flight.
New year, new power panel. India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Sandhar Sharma and I am your automate.
The nerve center of the maximum city, the BMC, a contest that will shape Mumbai's next decade, its identity, its legacy, its future. NDTV brings you the battle for Mumbai, asking who will hold the keys to India's richest civic body and what would it mean for Mumbaikars. BMC Power Play, only on the NDTV network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Sandhar Sharma and I am your automate.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. This show, like the name suggests, gets you actionable insight on everything personal finance related. Today, we're going to talk about what it takes to buy a house if you're trying to sell an existing house or another asset. What are the tax laws that come into play? For example, if you are selling a house, how many houses can you buy with the proceeds? Can you buy one? Can you buy two? And what are the rules that govern buying under construction properties? What are the tax laws for selling of gold, selling of equity, or any other asset class when you use the proceeds to buy a house? We're going to talk about all of that and more with Nitesh Buddhadev, who is founder of Nimit Consultancy. Nitesh, thanks so much for taking the time, and happy 2026 to you. It's a good time to consider buying a house, particularly because your interest rates are near the lows, and it's much more attractive at this stage. But a lot of people tend to fund that initial purchase by selling an existing property. So first, let's talk about selling of real estate to buy more real estate. What are the rules?
Sure, Alex. Thanks for having me. Always a pleasure to be on your show, and happy 2026 to you and all the listeners. Alex, Of course, it's a good time. It's always a good time if you want to buy a house for consuming, for staying in. But like you rightly said, it's quite a big decision, and that's maybe once in a kind of a lifetime decision when you are making. So if you can make the best use of tax laws available, it can be very significant tax saving. So if I am holding any property, which is a long-term capital asset, let's say if I'm holding any property which is more than 24 months, that's considered as a long-term residential house property. Now, if I'm selling that, there would be some capital gain. And if I don't want to pay any tax on that, and if I'm buying another residential property, I can claim it exempt under Section 54. So it's very simple. If I'm selling a residential house property, which is a long term, and now I'm buying another residential house property, I don't need to pay any tax, provided whatever is the capital gain I'm investing into the new house. It's as simple as that, Alex.
But then there was also, if I remember correctly, a Piyush Goyal budget where he talked about buying of two properties if you're buying it for your child or children. Is that correct?
Right, Alex. So that's once in a lifetime option given. If I'm selling one house property, but now it's like that, even it's for just for me or not just for my children, it's a once in a lifetime. If I'm selling any house property, but now let's say that house price is quite higher if you're selling in any metro city like Mumbai, okay? And let's say the capital gain is not more than 2 crore, okay? Then you can actually buy two houses, okay? So Alex, I would like to clarify here that the purchase price of the house can be anything, but the capital gain should not be more than 2 crore. And if you are utilizing this provision, you can do it once in a lifetime. And by selling one house property, which can be a bigger house property, and you have up to 2 crore rupees of a capital gain. And if I buy now two houses, that's allowed. You're right.
Okay, so that's allowed. That's cool. Let's talk about buying of under construction properties, because there's a window, Nitesh, within which you have to utilize the proceeds, right? And that's 2 years, if I'm not mistaken. What happens if your under construction property crosses that 2-year mark?
Right. So Alex, if I am buying this 54 says that I can buy house 1 year before or 2 years after selling the original house where I need to pay capital gain. So I'm taking an exemption. So I can either buy before 1 year or after 2 years from this transaction. Or if I'm constructing a house, the construction of that house should complete within 3 years. So that's the provision one should take care, and that's quite interesting.
So, but what happens, Nitesh? Suppose hypothetically, if I have booked a sale, right? I have sold the property, I've received the funds, and this under construction property for some reason has gotten delayed, and you make slab-wise payments, right? So, what if it has crossed that 2-year threshold? What happens to the proceeds?
Right, Alex. So there is a threshold of 3 years as we are discussing, but if, let's say, what is considered here for the tax law, because you should purchase the house or construct a house, that's the word used in the Section 54. And now, for delay which is beyond your control, because you already got the allotment letter. So there are many various judgments in the various appeal level. If you have got the letter of allotment, that can be considered as a purchase. Now, I've been promised that I get house in 2 or 3 years, but for XYZ reason, the house is getting delayed 4 or 5 years. That is still fine. Okay, there are enough judgment available and there are enough case laws available if you get a letter of allotment. So for you, the purchase transaction or a construction, even though the building under construction, if you got a letter of allotment and your significant payment is already over or your payment is already done in a slab-based manner, you are still eligible to claim this exemption of 54.
Just a clarity on the process as well, Nitesh, because a lot of people tend to use the proceeds of a purchase, of a sale rather, to pay the lump sum at the start and then they take a loan, right? So what if they, over a period of time, want to use the proceeds as the slab-wise thing is being done? Is there anything specific that I need to bear in mind? Do you need to keep it, for example, in an escrow, etc.?
Right. Thanks for Alex. Thanks for asking this because it's quite relevant. Because as we are speaking, either I can buy within 2 years, even if I'm buying, or if I'm putting into the construction linked payment mode, I have to pay in a periodic way. So I'm not paying everything upfront, like you rightly said. Then there comes the capital gain account scheme, CGAS. You have to go to bank. Most banks accept that, most PSU, and now many private banks also accept that. This is CGAS account you need to open, and you have to deposit all the funds there before your return filing due date. So Alex, if I'm selling the house right now, but I don't want to buy immediately, or it might take more number of months before I finalize the house property, or if I'm going for a construction one, okay, then before the July 26, which is the return filing due date, I have to open the CGAS account and I need to put money into that. That shows the intention that you are not paying capital gain in this financial year because you want to claim the exemption of 54.
Great. Okay, so that's clear. Now, all of these rules, one would assume, Nitesh, also apply to when you're selling shares or for example, another gold or mutual fund units, right?
Right, Alex. Many people are not aware, and there is another powerful section, or you can say a big brother of 54, which is 54F. Okay. The slight difference over here is that, Alex, that here the term used is any long-term capital asset if I'm selling. Now it can be gold, it can be, let's say, ESOP, it can be equity shares, mutual fund. If that's a long-term capital asset and I'm buying house property, then I can not pay any capital gain tax. So your capital gain can be zero if I'm using that. Two things to keep in mind here is that you have to invest not the capital gain, but whole net proceeds. So if I'm selling worth 2 crore rupees of mutual fund and the gain is 1 crore, if I don't want to pay any tax on this 1 crore, I have to invest 2 crore, which is the net proceeds, you call it, and not just the capital gain. Whereas 54 says you just have to invest the capital gain and not the whole net proceeds. So that's the major difference here. Apart from that, most of the rules are same. Like the maximum limit is 10 crore if you want to use the section either 54 or 54F. So apart from that, most rules are same. And one more rule here, 54F, if you are using, you cannot use this section or this benefit if you are having more than one house property. So let's say if Alex want to use tomorrow this section and he's already holding 2 house property on his name, then 54F cannot be used. So if you are only holding 1 property, then you can use this section, otherwise not.
Okay, so if you don't have a house or if you have 1 house, you can use this property. But I'm not able to understand, this is the last clarification that I will ask Nitesh, which is this 2 crore amount and this 10 crore amount. How these two are different?
Okay, so the 10 crore is the maximum you can utilize. Let's say if I'm selling 1 house property and I want to buy another house property and there is a capital gain of 10 crore. Can I buy another house? Yes, you can do that. But now if I'm selling a house and I want to buy a 2 house property, then there is a cap of 2 crore because I'm using to buy this 2 houses instead of 1 house. So that's a once in a lifetime, the 2 crore rule, if I'm buying a 2 house property. So one can remember like that. Now the 10 crore is the maximum. So let's say if I'm selling ESOP worth rupees 15 crore. Okay, and I'm buying a house property worth 15 crore. Can I do that? You can do that. But you can get up to 10 crore rupees of benefit only. And on rest of the amount, you have to pay the capital gain. So that's the 10 crore limit on the upper side in 54 and 54F both.
So I hope now you have explained this very well, Nitesh. I think a lot of people will be clear if they had any doubts. Thanks so much for taking the time and for speaking to us.
Thank you so much, Alex.
All right, now we speak a lot about how you should invest, but are you curious about how other people invest and how people in general are investing in the mutual fund space? Well, I was curious, and so I thought, why not ask somebody from the largest mutual fund in the country by assets under management? And I'm joined today by DP Singh, the Deputy Managing Director and Joint Chief Executive Officer of SBI Mutual Fund. DP sir, thanks so much for taking the time, and Happy New Year to you. The first question, you will have data, of course, up to December, but the official data is till November. And if you look back over the course of 2025 broadly, what are the trends telling you about how people have invested in your schemes in particular?
First of all, Happy New Year to you and all the viewers, Alex. Thank you very much for having me. See, when you have to look at the data, you have to look at the data with varying 2-3 different lenses. When I look at the overall data, what is telling me that most of the money is coming in large cap funds, mid cap funds, large and mid cap funds, blah, blah, blah. But the moment I change the lens and take out the SIP inflows, the data says something different. The incremental SIP registration and the incremental SIP lump sum inflows are coming into the funds which are not these funds, which are the hybrid funds, which are equity savings funds, which are arbitrage funds, which are balance advantage funds. So the answer to the question will be in this way, that long-term investors who have given a mandate of equity, they continue to put money in equity in a very calibrated manner. And the new investor or lump sum money which is coming is mostly coming into the hybrid funds.
Here's the thing, and interestingly, we've had certain other commentators, certain individuals have started up new funds, etc., talking about this, and this is investor behavior. Before 2025, it would be fair to say that investors were saying dil mange more, right? Where they're saying, if you're giving 18%, 19%, they were saying, why are you not giving me 23%? In your experience, have people now lowered their expectation? Is that why people are now gravitating towards hybrid funds? Because they're realizing that equity is not done very much. They want to protect their downside, but they also want that sweet spot.
Yeah. The answer is again in two ways. The SIP investors are not worried too much. They still continue to put in money in the equities because they are enjoying the benefit of rupee cost averaging, the concept which is there. Right? So they continue to hold on the mandates, and they're giving new mandates also in the same funds. But the new money, new lump sum money is coming. Yes, what you are saying is absolutely right. They are finding a multi-asset allocation fund because of the fact that people have seen a rally in gold and silver that is attracting them. And then we have got a lot of money coming into gold and silver funds itself, fund of funds, ETFs, etc. So that's another category which has but that has been general behavior. Whatever asset class does well, people want to follow that. But it's not something which is very dangerous level. This is a muted good numbers, but yeah, see that's how it is happening in this current financial year, and people have really changed their behavior from putting lump sum money into equity funds to hybrid funds, and they are enjoying the benefit of taxation also, tax efficiency also.
So now, if we were to drill into that hybrid fund category, DP, so because this is a pretty broad category, and you have schemes that are catered to very different objectives. Like, for example, you take an arbitrage fund and it's meant for your shorter term needs, maybe slightly more than your liquid fund in terms of risk profile, but it's still trying to give you your FD plus return, right? And you have your balanced advantage fund, which serves a different purpose, a multi-asset fund, which serves a different purpose, your equity hybrid schemes that serve a different purpose, conservative hybrid. So when you look at that category and you're saying that people are putting lump sums into this, what is the behavior within that subset of hybrid?
Yeah, if you talk about the arbitrage fund first, the arbitrage fund is generally now being replaced by what you call the people who have been putting money in liquid funds or the bank deposits of the shorter tenure. They find it very good that arbitrage is a good alternative to all these products. But the moment you go further, then when as you talked about anybody having more than 18 months to 24 months kind of thing, they find equity saving fund or your multi-asset allocation fund as a good fit for that. And the moment it's now, there are three things to be seen. One is probable returns. Second is the tenure to which money is can be put in that fund. And the third is tax efficiency. And all the three factors play a major role, not only the returns, and the education has reached the level where investors are aware about it. And I think that's the way it's happening. And arbitrage fund per se, people are parking money where they don't have any visibility of tenure, whether they need money after 2 months or they need money after 1 year. So generally everybody and anybody will target ODS is that category of funds. So it depends upon the investor psyche, depends upon the characteristic of the money which is available for investment, and then what is my risk appetite. So all these things are playing, and tax efficiency above all is playing a big role. because people have understood the benefit of compounding on the deferment of tax also.
Correct. Important point. Important
Very,
point
very
that you're raising. But I do want to ask you, DP sir, about specifically the multi-asset fund. And I know that you mentioned that investors have gravitated, as they normally do, towards asset classes that work, right? And gold and silver has done incredibly well. You're talking about 65% returns for gold if you look at a year-on-year comparison. But the question that I'm asking is that a little bit dangerous? Of course, you talk about recency bias. Ultimately, a large part of what you do, and I'm not talking about the fund management team, I'm talking about what you do, is managing expectations of people that invest with you, right? And so therefore, would you say that people need to curtail their expectations a little bit with multi-asset funds?
No, I think the other way around, Alex. The thing is, I think this is very, very less dangerous to put money in multi-asset fund rather than putting money in the gold fund or silver fund directly. Number one, see, the expectations can be brought down by the investment manager's behavior itself. This is the portfolio manager's responsibility to see what is the view in the market, whether you should come out of gold at this point of time or you should continue to remain. Now, anybody who has put in money in gold fund will continue to remain there, and whenever he withdraws, he will be subject to the taxation. Tax will trigger. But here, just to give you the example of SBI Multi-Cap Fund, in the recent past, after the big run in the gold, we reduced the weightage from as high as 14-15% to 3%. Now, investor is not aware about that, but we have done it. He says that we are doing it. Then we increase it to 4-5% also. And the same is the case in silver. We decreased in gold and increased in silver. Now we have brought it there as well. So this is the behavioral thing which we are taking care of. It is less dangerous than putting money directly into those classes. And see, the best part is, while doing so, investor is not bothered about the trigger of taxation.
Yeah.
That's the beauty of these funds.
Yeah, absolutely. I want to ask about the demographics as well, because I find this fascinating, DP sir. And of course, a lot is said about the penetration that you have specifically because of the fact that you come from the stable of State Bank of India, right? And so therefore, you'll be able to tell us what the demographic of the investor for you is. Are there more female investors coming through? What about the tier 2, tier 3 towns and cities? What are the kind of ticket sizes of people investing? All of that, if you can tell us.
No, it's continuing to be stable. 33, one-third of the investors are coming through this by females, and 67% overall. But when we look at when again differentiation between the top cities and the below 30, the difference is there around 4 to 5%. Like for metros, it is around 37-38%. And for the smaller towns, it is around 30-31%. So both ways. Now again, looking at the demography, we don't get bogged down by just by the data, because we know in so many cases, especially in the smaller towns, investments are being kept in the name of the female, but is being managed by the male. Whereas in the case of the metros, the independent female are managing their own money, and this is so in smaller towns, but we can't have any data. This is a behavioral thing. This is out of our just experience or talking to somebody or doing some little survey, which comes into play that some women investment is there in women's name.
Sure.
But the details are known to the male members in the family.
Understood.
But yes, the data is like this only.
Sure.
When around one-third of the money is coming from female investors, out of which a little higher bias towards the major towns. But the smaller towns are also not far behind.
Okay, but let me ask you this last point, which is SIP behavior. And I've talked about the fact that durable money continues to come through in equities. But are you seeing any other trends within that about who is investing through SIPs?
Yeah, no, there's another trend, very, very interesting trend we have seen. The cancellation is also very, very large.
Okay.
But new registrations are more than that, so that the stability is continuing. It's not that today, this month, the money coming from the accounts of these investors is same, 28,000 crore, 29,000 crore. But the 20% of the investors, 25% of the investors are different. It's coming from a different set of people. The earlier set of people, either they're removing, they're redeeming money, they're cancelling their further SIP. But the new investors who are coming are much bigger in numbers than the previous number. So there could be some same investors coming in some different fund. There could be some, and again, we can't get that kind of data. But yes, the gross numbers and the net numbers, the differential is as high as the net numbers are around 35-40% of the gross numbers as a registration number.
Interesting. And a lot of young people also coming into the fold. Thank you so much, DP sir, for taking the time. Pleasure speaking with you as always, and wish you all the best in 2026.
Thank you so much. Thank you, Alex. Always a pleasure talking to you.
It's my pleasure. Well, that brings us to the end of this edition of Your Money Matters. Thanks so much for tuning in. Do stay tuned. This is NDTV Profit.
Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
3, 2, 1. 0, ignition, liftoff.
We want to become the Uber for space. What we do is that satellite companies book the rocket, just like you book a cab, and then go to wherever they want.
So tell us the origin of this entire journey.
Just quit my job, start the company along with my friend Bharat. We both were at ISRO, joined together, so we were flatmates.
So these roommates decide to start their own company. Are you a big fan of the Big Bang Theory?
Of course, who is not?
Who do you identify with most?
I think Sheldon is good.
Do you want to be the Elon Musk of India?
I've been a big fan of Elon. He's a phenomenal, human being, great achiever, wonderful engineer, right? So I was really inspired by him.
How did your family and your ecosystem react to your decision that I'm going to quit my job in ISRO and start a private space company?
When we started the company, there was no policy, there was no funding environment. Like every family, our family is shocked, what's happening to my son.
What do your parents do?
In fact, I told them after resigning the job.
How do you go about looking for funding?
He messaged Mukesh on LinkedIn.
Are you kidding me?
Yeah.
Your first pitch was on LinkedIn. There be room for people in your space cabs?
Yeah, aspiration is 5 years down the line. So we want to make space flight as easy as air flight.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
The nerve center of the maximum city, the BMC, a contest that will shape Mumbai's next decade, its identity, its legacy, its future. NDTV brings you the battle for Mumbai, asking who will hold the keys to India's richest civic body and what would it mean for Mumbaikars. BMC Power Play, only on the NDTV network. New year, new power panel, India Market Open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned. Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit. Everybody who's been a gold bull or a silver bull have been fabulously rewarded in 2025. In fact, over the last 15-20 years as well. The question is, after such a mammoth rally in 2025, are we looking at an encore in 2026? Could we see a subdued return in 2026? Or could something completely dramatically different happen? Two men who 9 months ago predicted this happening are joining us yet again. Viewers, if you remember, Dr. Edward Yardeni and Naresh Kataria spoke to us 9 months ago and mentioned when gold prices were at $2,950 odd that we might actually see 4,000 by the end of the year. A lot of people may have thought, oh no, they're smoking something, But boy, have they turned out to be true. The advice was prescient. Gentlemen, both of you, thank you so much for joining in yet again on this very important conversation, because for India and arguably for the world now, gold and silver are becoming central holdings in the portfolio. So Dr. Yardeni, you joined us so late, so take a moment to thank you for joining and doing that. Sure. But you were amongst the earliest bulls, right? Along with Naresh on gold and silver, way back in starting 2025. Right. And the reasons that both of you had were similar, amongst other things, that central banks are buying. What is your view now?
Well, I think central banks are still buying, but other factors are also playing a role here. I think we're seeing a lot of investors who haven't done so well in 2025 realize that gold has been a more stable place to be. So, for example, Chinese investors that have basically lost a tremendous amount of money in the property market and have been whipsawed in their stock market, I think you're seeing more buying of gold in China. India has long been a traditional buyer of gold. But I think also the geopolitical situation remains unnerving, to say the least. And so I think that's also helped gold.
It certainly has. Naresh, can I bring you in this conversation as well?
Absolutely.
Again, we didn't plan this, but your reasons and Dr. Yardeni's reasons almost resonated back then. I wonder if you think there are added factors to gold. We'll come to silver as well, but let's start with gold.
So something still more important has happened in the last, I would say, 3 months. In September, Morgan Stanley CIO recommended believe me or not, 20% allocation to gold. And Goldman Sachs last week assessed that combined gold allocation by all US investors is 21 bips. And so you can see the contrast. And so I think central banks drove or started the rally, but there are other legs which are emerging. And outside India, gold is actually under-owned. Indians own a lot of gold, but rest of the world, I think the allocations are in bips, not in percentages. And markets and investors are understanding the role of gold as a diversifier, as a hedge, and also due to the reckless policies which US is undertaking. And hence, I think there are more legs which have emerged and the rally continues.
Yeah, one of the points that you mentioned in your presentation to me as well, Naresh, is that central banks don't just want an allocation, they want to own gold. You reckon what we've seen in 2025 is a, if not a teaser, but something that will get repeated in 2026 and beyond from the central banking perspective?
So central banks, before that, we spoke about central banks possibly not reporting their full purchases.
Yeah.
So Financial Times a month back or two back took out a report and actually agreed to that a lot of central bank purchases are not being reported. Having said that, the pace of central bank buying in 25 has been little lower than the previous 3 years.
Okay.
From about 1,000 tons a year, it's about 800-900 tons. So I think the primary driver now could be the large portfolios, the financial institutions, the non-India HNIs, family offices, which are coming on board and understanding the role of gold. Central banks are continuing to buy. By the way, central banks were net sellers of gold between 1988 and 2008. For a full 20 years, every year central banks de-hoarded gold. And the last point is not only having gold allocation, central banks are wanting control of the gold. For example, India has got more than 300 tons of its gold in the last 5 years back on shore, onto its vaults. That's also a geopolitical risk central banks are not wanting to take. So overall, yeah, I think the role of gold as a strategic asset, as a diversifier, as a hedge is looking increasingly strong.
Yeah, and I think as both you and Dr. Yardeni will say that the buying of central banks in 2025, the 800-900 tons is the disclosed one. Whatever has not been disclosed might be something completely different. Dr. Yardeni, Naresh made an important point which I would want you to dwell on, that Indians may hold a lot of gold, but globally gold is not that well owned from a retail investor's perspective, if I can classify that loosely. Do you see that changing, and can that have a material impact on gold price movement?
Yeah, well, I think he made an excellent point about that. Gold is under-owned around the world. And I think the reason for that is in most of the major countries with major stock markets, most of the action has been in the stock market. That's where the interest has been. And I think when you look at asset classes, investors generally have looked at stocks, bonds, and occasionally commodities, and very, very rarely looked at gold. And gold was sort of asleep there for quite some time. It was a real sleeper. And then I noticed in 2024 that it broke out to a new high above 2,000. That's when I turned bullish on gold. And when it got up to 3,000 at the beginning of this year, I looked at the charts. I said, look, I think this could go to 4,000. And I think now that it could get to 6,000 by the end of this year and 10,000 by the end of the decade, by 2029. And, the problem with gold is it's kind of like Bitcoin in the sense that it's got no earnings, it's got no interest, it's very hard to value, and it is sort of a psychological asset in terms of uncertainty and risk-off characteristics. But I have noticed that there's a pretty interesting relationship between the S&P 500 and gold. If you put them on the same chart, you'll see that they're inversely related, which means that gold is, in fact, a very good diversifier for a stock portfolio. You get less volatility in your overall portfolio. But what's fascinating is that the long-term trend seems to be almost the same. And I can give you some pretty good fundamental reasons why the S&P 500 should get to 10,000 by the end of the decade. And if that happens, I think gold, sort of from a portfolio balancing view, can very well get to $10,000.
So, Dr. Yadeni, and just one quick follow-up. So, I heard you say 6,000 by the end of this year and 10,000 by the end of this decade, right?
Correct.
So, that's a substantial uptick from your view that you held 9 months ago. The question that I have is, so the question that I have is, does the central banking policy, if Fed were to loosen a bit more because of political reasons or otherwise, does that have any bearing negatively on gold prices?
Well, I mean, there's always possible surprises here. I mean, I presume that if gold really exploded the way Bitcoin did, that President Trump would see that as a great opportunity to say, hey, we really don't have a federal deficit anymore because our gold is worth so much. And suddenly people would start to worry that the United States might actually sell gold as a way to reduce its debt outstanding. So there are sort of kind of out there scenarios that we don't want to completely ignore with all the excitement here. We just recently saw a decent correction in both silver and gold on margin increases, which for some reason the market didn't anticipate, but should have. So we do want to be on guard here. But I think the fundamental demand-supply situation remains quite bullish for the precious metals complex completely, not just for gold, but silver, platinum, palladium. And I think there is sort of a nervousness about excessively stimulative monetary and fiscal policies around the world, potential debt crises around the world. I mean, Japan has a debt crisis right now with what's going on in their bond market. The UK has a sort of a debt crisis. And so it's very likely that investors in Japan and the United Kingdom are suddenly realizing that they don't own enough gold.
I heard some troubling numbers for France as well. But Naresh, coming on these factors and beyond just this, I mean, I think Dr. Yadini made an important point. It's not just gold, by the way. The last 1 month of calendar year 25 saw silver come into a lot more limelight than gold, right? So one is gold, and how can people play that? But two, some of the other precious metals, because you must be invested in maybe some of them or maybe just a couple of them. How do investors get access to this? Is it via ETFs or are there some other means as well? But of course, give your view as well, by the way, on gold and silver.
Gold, of course, in gold we have, apart from the regular ETFs or sovereign gold bonds, which are traded on NSE and BSE, you could also play via gold financiers. That's a very unique play India has because Indians have a lot of gold. And by the way, compared to a credit growth of about 10-12% for India as a system, gold loan growth in the last 1 year is 100%. So there's clearly benefit, tailwinds for gold loan companies from rising gold prices and also relaxed regulations. And silver, of course, you have silver ETFs. On silver, gold is, I would say, I'm saying that it's probably structurally under-owned. I can't say that for silver So silver today is about 70% over its 200 DMA, if people who are inclined technically. So it is stretched, and people who are giving reasons for silver's rise, the same reasons existed 3-4 months back when silver was probably half of or 30% lower. There's just one important development which I'm researching, I don't have conclusive view, is news that Samsung is building a silver-based battery with a 600-mile range. And apparently, if that comes through, then that takes up 30, 40, 50% of annual silver production.
Wow.
So I'm still on various AI engines and trying to make sure that that's real. Even if it comes a few years later. But otherwise, silver looks a little stretched to me. In the last 20 years, whenever it's gone 60, 70, 80% above its range, 200 DMA, I think it's struggled or consolidated.
Okay. But what's your goal thesis then? Dr. Yardeni is saying 6,000 by the end of the year, 9,000 or 10,000 by the end of the decade. Are you in the same camp?
So, last time you had probed me on what the targets are. I said I don't give a target, but what I mentioned was it will surprise the most bullish estimates. I think the bull market is very much on. It looks very, very solidly behaving. There are small corrections. Corrections are being bought in. And it's very different from the previous bull market when central bankers were sellers in the first 7 years of the bull market. And it's now the real big money, which is the non-central bank portfolios. Like, for example, Morgan Stanley CIO recommended a 20% allocation. Morgan Stanley wealth AUM is $7 trillion alone. So there are just real big money which are underexposed to gold. And I'm reasonably sure they will look at it, as even Dr. Yardeni mentioned, as a diversifier or as a hedge, and not just for returns. So, and not just the past returns. So I think it looks well placed. It may consolidate because they've all run up too fast. I would personally not buy now because I have allocated earlier, but I don't feel like it's the end of the bull run.
Okay, Dr. Yardeni, final question to you. For somebody who has missed out on this, the question therefore would be, if there is a pullback into gold prices, how likely is that? And is that a pullback something to be used? I presume your answer is a yes, but I still want to hear it from you.
Yeah. Well, I think I agree that silver is stretched for sure. And it's, the old saying that the best cure for high oil prices is high oil prices. Well, I think the same can be said for other commodities, particularly silver. At these prices, there's tremendous incentive to sell the silver forks and knives that we have at home, and there's a tremendous incentive for people to mine more silver. So I wouldn't be surprised if silver does have a pretty significant correction, much more so than what it had a few days ago. And what will be very interesting to see is how gold reacts. And I won't be surprised if gold actually holds up reasonably well. But yeah, I think the gold market has in fact demonstrated a tremendous amount of stability in this bull market, in the sense that sell-offs are bought, and there seems to be a substantial amount of money looking to get in. So I would say, at this point, buying in the dips still makes sense to me, and I think there's still plenty of upside in the gold market.
We are at 4,300 if indeed the prediction is 10,000 in 4 years' time. I see no reason why the dip shouldn't be bought. Dr. Yardeni is so correct. But, well, both of you, viewers, I hope you got a sense of the reasons behind the continued optimism that both our experts have. And I hope it helps you in some fashion in your overall portfolio allocation, whatever part precious metals play in that. But Dr. Yardeni, Naresh Kataria, gentlemen, thank you so much for taking the time out and being with us today on the show. Really appreciate your time.
Real pleasure.
Thank you, Naresh. Thank you.
Thank you, Dr. Yardeni.
Anirudh Sarkar, co-founder and CIO of Equinova Investment Managers. His new outfit is with us in the studios. Anirudh, great having you. Thanks for taking the time out.
Okay, thank you, Neeraj.
I know the pleasure is ours, and wishing you a happy 2026. Could it be a happy 2026? And the two men who look at gold, silver very actively are saying that the returns could be good. Investors will say, "Aur kyun paisa kyun dale equities mein?"
No, I think it's good to begin. I would say it's good to begin the year on a very kind of expectations being extremely low. But I think after seeing the last year, I think what I can say is that definitely equities and all the specific Indian equities is going to outperform the global markets. And the reasons are not like, I'm just making a statement in the air. I think they're enough kind of the foundations which have been put in the last year. When you talk about the tax benefits, you talk about the GST cuts which have been taken place, also the labor reforms which has happened. I would say definitely after seeing the mid-single digits to high single digits kind of an earnings growth the last year, expecting mid-teens to high teens kind of a growth in this year is what will drive the equity returns in Indian markets.
In your opinion, from this stage, if you were building out a portfolio right now, do you think going broader and having a larger number of stocks would be better than having a concentrated number of stocks, because you're not sure at what point which sector and which stock is going to take off?
I think this debate of, the number of stocks ideally you should have is something I've been having with investors for ages. So there is no ideal number, what is the right number.
But I was asking for your opinion.
Yeah, so I always believe in having anywhere between 18 to 25, I would say, the ideal number of stocks to have in the portfolio. So that takes care of your concentration as well as the diversification. Now within this 25 stocks, I would say bet more on the names where conviction is high. So your top 10 can make up like, 45 to 50%. The remaining 15 to 18 stocks can make up the rest. So that takes care of your concentration as well as your diversification.
And how are you constructing that 25 right now?
So in my concentration portfolio, if I'll talk about my top 10 stocks, that would make up like roughly around 52% of the portfolio at this point of time. And more important is which sectors you're betting on. And that is something which I always keep telling investors, and that gets reflected in my portfolios also. Sector selection is very, very important. Then comes which company you buy within that industry, because you might be buying an excellent company, but if that sector is not going to see the upside of an overall earnings upcycle, very difficult to make money over there. You will have some outliers always, but then it's much easier to pick the sector right, then pick up the company in that industry. So we talk about the sectors I'm betting on. I think, in fact, that's my view for the year. In fact, most of the time last year we used to talk about being optimistic, but very kind of the cautious optimism. That was a very kind of a statement we used to hear, cautious optimism. This year I'm saying it's good to be a bit selective aggression. Selective aggression is required. Where do you bet on? I think industrials and capex is one big theme which will play out. It's been my top bet for, I would say, the last 8 quarters, but I think you'll see the earnings momentum much bigger in the industrials and the capex. BFSI is something, if I see post-COVID, a large part of my portfolio used to always underweight of banks. I used to be more overweight on the other financial services linked to the capital market play. This time around, I'm getting a bit overweight on BFSI, which includes capital market play and banks and NBFCs. NBFCs is something I used to avoid, but I think with the rate cuts which has happened, I think you are going to see a lot of growth happening there. So yes, industrials and capex making a big part. Second is BFSI, and the third is urban consumption, urban and rural consumption. So these three will make up roughly, I would say, 90% of my portfolio. Very underweight on IT, and I've been underweight on IT for a long time. In fact, for almost 6 to 9 months, I didn't have a single IT stock in my portfolio. And though index had like, 14% exposure, but, not having a single IT stock, definitely you're betting against the index. But that helped. I'm more bullish on the mid and small cap IT, and that is where I'm allocating as of now. That's done well. And I think you're seeing a lot of management changes in many mid and small cap IT. And typically, if you pick up any mid and small cap IT, management changes leads to a good earnings upcycle. So these are the broad areas where I'm allocating, and I would say again that, you have to get a bit aggressive in this year.
Yeah, so this selective aggression, I like that term, might just be the theme for 2026. What are the kind of returns that you have sort of penciled in? At the end of the day, and we were having this conversation off cam before we started, that's what investors will come and ask. Okay, so what are the returns that we can expect? And I think we've gone through now a couple of years of expectation management.
So I think the good part of the last year is that, expectations have been brought down drastically. So there used to be a time, post-COVID again, that, when you talk about, making 18-20%, people say, okay, at least 25 to 30% return should be there. This time around, I think after the last year's return, people are expecting anywhere between 12 to 15%. But I would say I always link the return expectation to the earnings upside, which is possible. So typically, if your headline index, if I talk about the large cap index, 14 to 16% is what I would say the broader consensus is, earnings growth. 4-5% alpha over the earnings growth, I think one can expect in this year, which if you add up anywhere between 18 to 20%, I think one can make up in this year. But yes, that is again, if you're selectively picking the right sectors and the right companies in that space. Other view which I am very confident of is that, I don't know if that's a consensus at this point of time, but I'm sure it's the other way around. Mid and small cap will outperform the large cap. And this is one space where I see again, earnings growth in the mid and small cap will be much, much higher compared to the large cap. Like if I just look at a headline index, large cap index can give you around 14 to 16% earnings growth. Mid cap index can give you around 20 to 22% earnings growth. Whereas the small cap index has the potential to give you around 24 to 25% earnings growth. So a portfolio which is actively selecting the right mid and small cap can massively outperform the headline, the large cap index in this year. So that answers your question about the returns expectations.
Within that, and I'm just going to, you talked about all of the sectors where you are selectively aggressive. You didn't quite mention consumption and specifically internet companies or platform companies, more and more of them to select from. None of that interests you?
No, definitely. So I have been a investor with Eternal for a long time. And I think if I talk about consumption, that's one name which comes to the mind.
Of course.
And when I talk about consumption, I'm betting on both urban and the rural consumption. Within urban consumption, one part is the new age companies, like your Eternals, the new age companies which are there. The other space where I'm betting on in a big way is auto and auto ancillary. Because I think if you go by all the numbers which has come out from the auto industry, I think it's giving you a picture that this is not just a pent-up demand.
Is it PV or CV though?
I am betting more on the passenger vehicles and the bikes and the scooters, because I think if you look at the benefit of the tax cuts, is going to go to that segment which is going to be a big consumer of your bikes and the scooters. And if you go with the auto sale numbers of your Bajajes and the TVS and the Heroes of the world, I think that's giving a picture, a type of growth.
No, but just a follow-up there. The monthly numbers that we see, Anirudh, commercial vehicles, tractors numbers have been rock solid.
Yes,
so why are you omitting that bucket?
No, I'm not omitting. So basically, I'm playing the CV space with auto ancillaries.
Okay.
With auto ancillaries, and the OEMs I'm playing with the passenger vehicles and your the two-wheelers.
Wow. Anirudh Sarkar, it's been a pleasure speaking with you and having you here.
Always a pleasure.
Ignition. Liftoff.
We want to become the Uber for space. What we do is that satellite companies book the rocket, just like you book a cab, and then go to wherever they want.
So tell us the origin of this entire journey.
Just quit my job, start the company along with my friend Bharat. We both were at ISRO, joined together, so we were flatmates.
So these roommates decide to start their own company. Are you a big fan of the Big Bang Theory?
Of course, who is not?
Who do you identify with most?
I think Sheldon is good.
Do you want to be the Elon Musk of India?
I've been a big fan of Elon. He's a phenomenal, human being, great achiever, wonderful engineer, right? So really inspired by him.
How did your family and your ecosystem react to your decision that I'm going to quit my job in ISRO and start a private space company?
When we started the company, there was no policy, there was no funding environment. Like every family, our family is shocked, what is happening to my son.
What do your parents do?
In fact, I told them after resigning the job.
How do you go about looking for funding?
He messaged Mukesh on LinkedIn.
Are you kidding me?
Yeah.
Your first pitch was on LinkedIn. There'll be room for people in your space caps?
Yeah, aspiration is 5 years down the line. So we want to make space flight as easy as air flight.
Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network. New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. The nerve center of the maximum city, the BMC. A contest that will shape Mumbai's next decade. Its identity, its legacy, its future. NDTV brings you the battle for Mumbai, asking who will hold the keys to India's richest civic body and what would it mean for Mumbaikars. BMC Power Play, only on the NDTV network. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
A very special moment for us as we announce NDTV Masterstroke, the NDTV Art Awards.
NDTV presents the Masterstroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned. Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate.
Good evening. Welcome to The Big Question on NDTV Profit. I'm Vikram Oza. You know, for years now, many of us have done something that we don't always admit out aloud. We've typed our symptoms into ChatGPT before we've called a doctor. It's not something that we admit, but we do it a lot. Now, what does this blood test mean? Should I be worried about the number? Is this diet actually good for me? All these questions we ask ChatGPT. Now something is changing because OpenAI is formalizing that habit of ours. It has launched what they are calling ChatGPT Health. Now, this is a dedicated space that doesn't just answer health questions, but it can actually look at your medical records. It can connect to wellness apps like Apple Health and MyFitnessPal, those kind of apps, and also respond with personal context. So the promise over here is simple. Help people understand their health better and play a more active role in managing it, while insisting that this is meant to support doctors and not replace doctors. The scale of this shift seems to be quite enormous. Over 230 million people already are asking health and wellness questions on ChatGPT every week. For many, it has become that first stop to decode lab reports. When you're preparing for doctor visits, you refer to ChatGPT, you plan your diets there, even compare insurance options. But here's where the questions begin. OpenAI is saying that health conversations sit in a separate, more secure universe. They're not used to train their core models, and they have enhanced privacy protections as well, is what they claim. Yet this is still some of the most sensitive data that any of us will ever share. Our medical history, our mental health, our fears as well. In India, this debate carries extra weight. We have a chronic shortage of doctors. Our healthcare access is quite patchy. There are high out-of-pocket costs that are involved when it comes to healthcare, and a growing generation that already turns to AI, not just for information, but they're turning to AI for emotional support. Many young Indians admit that they tell AI things that they would not tell another person, even as they worry about becoming more isolated. So now the question is AI stepping into a domain, healthcare as such, which is of course something that we've treated differently in the past. Now, is there going to be that much more focus on what AI can bring to the table? And that's what we're discussing to the panel. Would you trust AI with your health? Let's ask our panel, and let me introduce you to them. Joining us on this discussion is Mickey Mehta, holistic health guru, joining us with Dr. Ashutosh Tiwari, the senior consultant, critical medicine at Regency Hospital. Mehzabeen Dordi is also with us. She's a clinical psychologist at Sir H.N. Reliance Foundation Hospital. Ritesh Bhatia is a cyber expert, and Arpit Agarwal is investment partner with Bloom Ventures. Thank you all for joining us and making the time for this important discussion. Now that this question has come up, it's important to ask, and let me begin by asking Dr. Tiwari. I remember just a year ago reading this report where a pregnant woman in the US said that ChatGPT actually flagged a life-threatening condition for her, and it saved not just her life, but that of her baby as well. And this was about a year ago, maybe even less than that. But also in a poll that we've conducted here on NDTV Profit social handles, you're seeing over there more than 61% are saying that they already ask AI health-related questions. So I want to ask you, as a critical care specialist yourself, how are you seeing AI's role in healthcare today?
Very good evening to all of you. And this side, Dr. Ashutosh, a very valid question has been raised by the team. And I would like to say that people nowadays are using AI and chat GPTs for coming to any conclusion of their health reports, including even minor ailments. And the example which you have given is well known to everybody. But to add to this fact, I would like to say that AI or a chat GPT is not a conclusive tool. It may help you to narrow down your diagnosis. It may help you to come to from a broad spectrum to a narrow spectrum, but it cannot give you an exact treatment. For treatment, you always need to have a consultation with your doctor, because it cannot conclude. It can just guide you. The example which you have given is very known, but I would like to add a new example to the ongoing debate. A lady came to us 2 days back and she was bleeding from her nose. And she was a known case of cardiac disorder, and she was an antiplatelet. And the PTCA, the angioplasty, was done few days back. Ideally, it should have been continued on dual antiplatelet, but because of the bleeding, we have stopped. But if such a question will be asked to chat GPT or AI, they would say, no, if the angiography and angioplasty has been done, then the dual antiplatelet should be continued. Having said that, what I want to convey is the decision should be as per the specialist, not as per the chat GPT or AI. So you can use chat GPT and AI for taking help, but not coming to a conclusion.
So that is the situation today, doctor, and we are seeing that change very dramatically with all the strides that AI is making, which is why I want to turn to Mickey Mehta. If you consider holistic health, There are tools, and you're seeing them as empowering. At least to some, it is empowering. ChatGPT Health would hope it is to individuals to take charge of their well-being. How do you see it as a holistic health guru?
So medical care is very different from healthcare. We always tend to mix up healthcare with medical care. Healthcare is all about healing and wholeness, and it is about therapies. Therapies are very customized, individualized, and personalized. We understand that health and healing has to be done in a way which is very specific to your constitution. So individualistic constitution, individualistic biology, and very, very important that it has to be very personality driven, which means that what's your personality like? Are you the angry kind? Are you the energetic kind? Are you the lethargic kind? Are you the sulking kind, the depressed kind? And accordingly, we give therapies. Now, to seek medical options for knee surgeries, it's good to have a ChatGPT. But to have options to recover post-surgery, ChatGPT may not be the best bet because you might lose out on the best of the best understanding of a face-to-face consultation with an understanding of the persona, lifestyle, environment, objectives, medical concerns, so many things put together. So best is...
Yes.
Sorry.
No, but Mickey, this entire debate about outsourcing perhaps intuition or self-awareness to AI, some would argue that it weakens the mind-body connection. You're saying that this doesn't help to push them into better health, even if it is something that AI is suggesting that perhaps you need to have a holistic health consultant to go to be able to get a better mind-body connection?
100%, because of face-to-face, emotions to emotions, prefrontal cortex consonance, resonance, coherence of two beings gives birth to solutions. You just cannot have solutions as a formula because AI depends on statistics and life is beyond statistics and data. Individualistic health cannot depend on the statistics of generalized understanding of the medical science.
Okay, fair enough. That point is well taken, Ritesh Bhatia. Now this ChatGPT Health that we are talking about, they are claiming that medical data is sitting in this separate, secure space. It's not being used to train core models for AI. From a cyber perspective, from a data security standpoint, is that kind of assurance strong enough, you think, for health data? Can we really believe these safeguards?
Not at all. Vikram, not at all. We've also seen the kind of breaches that have happened with OpenAI earlier also. And with this kind of over-reliance, on AI platforms, whether it is OpenAI, whether it is Grok or anything, I think, we are just risking out a lot over here in the name of convenience. As far as when you're talking about security, no security is foolproof, no security is enough. And let's not forget, Vikram, we are talking about over here is something that is like a personal health information. This is like the most sensitive information. And, the drug makers, all the pharma companies and everybody would be like wanting to have this data as such. So what is the assurance that this data won't be sold, like, for marketing or something like else, for some sort of research to these pharma companies? What happens when it gets breached? Well, they're talking about encryption and all, but then, there needs to be something as such. But most importantly are two most important factors for me over here. One is data hallucination. So what is data hallucination in AI? When AI says, okay, this is what it is, and you tend to believe it, that is hallucination because that is not correct. And, in such a short period of time, they've just, contacted they had some 260 physicians on board to help them with this particular thing. So this data hallucination is bound to be over there. And, the kind of trust that we have on the ChatGPT nowadays, so we are going to say, okay, if this is what it is, if it is saying that, okay, I need to let's say have methi seeds in the morning to reduce my sugar and even if it's a fact, but if it starts giving you certain other kind of information and you will start believing it. And that is what is data hallucination. The second most important thing is about the data bias. Now, what may work for the Western people may not work for the Eastern people. What may work for the people who are there, like, let's say, in the cold countries may not work for things in the, southern countries. So there could be a lot of such biases. But overall, from the cyber perspective, if you ask me, even from the data privacy point of view, I think it's like a big no-no.
Mezzabeen, where do you stand on this? Because this is a question of trust, whether there are privacy issues or whether you can rely on the kind of advice that comes through AI, which Mickey Mehta is saying is all driven by algorithms. You're talking about statistics over here. There is medical healthcare. You have mental health over here, and that's your space. It's rapidly growing. And our poll is actually showing that 44%, all of them, 44% are saying that they would trust ChatGPT Health only if a doctor is involved. So that's an important statistic to bear in mind. When AI begins to mediate into emotional and mental health conversations, where do you see the risk, the biggest psychological risks over here?
I think first and foremost, the biggest, most important factor for us to consider is that psychologically speaking, trust needs to be on a spectrum, which is often shaped by fear, uncertainty, urgency, and perceived authority. A lot of times what is said with sheer confidence is taken at face value, and that's what ChatGPT often is been doing. Now, ChatGPT doesn't have any ethical duty of care, it doesn't have any legal responsibility towards the client or any actual clinical risk assessment. When we are in a therapeutic setup, what happens is that there is so much more that goes on beyond just the conversation. There are personal cues, there are interpersonal dynamics, there are ways, tones, intonations, which we pay attention to. Body language plays a big role. All of those factors are completely ignored when we are talking to an AI bot. And that becomes a very big lacuna. That becomes a very big area where it's actually not paying attention. So that is why, from a psychological standpoint, from a health perspective, from a mental health perspective rather, it's good to use ChatGPT, to use it for information, to organize some data, and for some degree of support. But when we're looking at diagnosis, when we're looking at treatment, or when we're looking at actual responsibility for a condition and for treatment, I think it's an absolute no-no. That needs to be left to the professional healthcare providers itself.
Which is what a majority of you are saying. Arpit Agarwal, now you weigh in on this on the business perspective, because now you're seeing ChatGPT Health come in. There is personalized healthcare and it's happening at scale. So what do you think is going to happen to the smaller health tech, the smaller wellness apps? Do they need to fundamentally recalibrate their business models now at this stage?
See, what is like... Thank you for having me on the panel, and I agree with most of the comments made about the technology itself, Yutesh, Dr. Tiwari, and Mezzabeen. The challenge is each company, when they are bringing a new product to the market, will need to show differentiation. And if the base model is built by a large company like an OpenAI, ChatGPT, you will have not much differentiation to be built. However, if you are looking at tiny slices of the data, for example, someone looking at women healthcare, or mental health, or chronic diseases from an Indian context, there is a lot of contextual information that can be piled on to the simple base models that are available out there. All of this put together create a unique differentiation that one can expect from a company, from a healthcare service, which is also very targeted and accurate. The challenge, as Pana has already pointed out, is hallucination. Information cannot be relied upon. Even Google cannot be relied upon with the information, and ChatGPT only accentuates it because that's the nature of the beast. It is not accurate. It's not meant to be that way. And hence, it doesn't replace, and it says so in the disclaimers, unfortunately, it doesn't stop people from believing in it, that it doesn't replace an actual physician. Correct. And the advice the physician would actually give you.
Yes.
I don't believe that it automatically takes the advantage of smaller companies away. Okay. At the same time, the companies will have to work around this elephant in the room.
So how they're going to work next, Arpit, is going to be an important ask. So you think businesses will need to be realigned with how OpenAI is going to treat ChatGPT Health and the size and scale that it grows to?
Yes, and every business actually will have to realign, because this is now the baseline. Whatever you could do earlier on a chatbot can now be done on ChatGPT from scratch. You could have taken 2 years to get there.
Correct.
But now it is off the bat. So a lot more work will need to be done in contextualizing it, in making it narrower, making it more accurate, and making it available in a business model, plus distribution, which continues to be a challenge. I don't think ChatGPT automatically will get adopted by enterprises or consumers alike. There's a lot of work that can happen on these platforms. However, are we going to replace the platform? I suspect not. We will have to find a way to work around it.
So working around it, now questions have been raised about accuracy, Dr. Tiwari, and OpenAI by themselves are insisting that ChatGPT Health is not for diagnosis, that it's not for treatment, it's only meant for interpretation and preparation. Would you concede that they do a good job of that or not? Yet nearly we are looking at these respondents in our own poll, they are already trusting AI tools for a first opinion, a good majority of them. So in real world practice, if I were to ask you, is that distinction meaningful, or do you think it dangerously blurs things for patients when they're looking for that, even that first interpretation or prepping for a visit to the doctor? Are they doing it well, or do you think that they're not really painting the real picture, as it were, of what they can offer patients?
Well, Vikram, I would like to add that the information which is given by ChatGPT and AI are helpful, but many a times the people who are using it doesn't universally apply to everybody. For example, one of my panel member told that the information is generalized for all the countries all around, but it cannot be hold true for every person around. For example, if you talk about the BMI, now in India, the average BMI and the definition of obesity is different from what we get in the Western countries. So ChatGPT, AI, they will definitely help you, but they cannot help you in treating. They cannot help you in rehabilitation. Moreover, there is something called as empathy, touch of the doctor. So you won't be feeling satisfied until unless you have not walked inside the OPD, you have not been given attention by your physician, you have not been touched, your problem has not been treated adequately, and you have not been given time. For example, I'll give you a very good example which recently has happened in my OPD. A patient came with a pain abdomen and he was searching what are the reasons for pain abdomen, and the first thing which was shown was a cancer. And that has created apprehension in the mind of the patient. And then that lady became very panicked. She came to my OPD, and after initial evaluation, it was a simple stone. My point is, you can use AI ChatGPT for having a very good inquisitive status of your disease, but you cannot decide, you cannot treat based upon just the symptoms. So you have to go to a physician, to a specialist for narrowing down your problems and getting it treated in a nicer way.
So you don't have a fundamental problem about patients using AI to understand their situation, as it were, or getting more information about their situation after they've consulted with a medical professional like yourself. Ritesh Bhatia, when you're talking about people uploading all this long-term medical history, their lifestyle data, when you talk about the risks involved in this, what are they? When it comes to secondary use, perhaps with insurers, with employers, with future policy changes as well, do you think these privacy promises that are being made today, those can be challenged and those risks stand? What exactly do you see as risks there?
Yeah, Vikram, as I told you earlier also, the risk is this is the kind of data, even as when they are saying it is going to be encrypted, which it may be encrypted, but we've already seen many breaches happening. You also spoke about those insurers and, other kind of people who are going to do it. As I told you earlier also, so just imagine the insurer, he getting hold of a lot of data. Like I am diabetic. So, I was testing out ChatGPT and I was testing out 3 other different platforms like Grok, Perplexity and other kind of things. Now this data goes out over there. Dr. Tiwari was talking about when you asked the question, can I just give my reports over there? So we are actually telling them that these are the diseases we have. And once that is there, with these particular people, it can be misused in a variety of ways. Like for example, the insurance companies coming to know what are the kind of diseases we have, because we don't disclose everything to them. Secondly, it could also be now these particular pharma companies understanding, okay, these are the majority risks. Now the thing is, Vikram, I have not given my consent for this.
Sure.
And when these guys talk about security and privacy, I think that's just on papers. It's just not proved over there that this is how it is as such private. And most importantly, what are the data sets that you have used as such?
Yeah.
So now you're building the data sets using our data. Vikram.
Yes, indeed. So now that we're talking about how far this can go, the risks that are involved, Mickey, I want to ask you, because in India, we have specific kind of challenges. There are gaps in access when it comes to healthcare. Affordability is an issue. There is preventive care, of course. But do you see AI as a bridge, at least, that in some way democratizes health knowledge, or even a shortcut that risks superficial solutions to deep health problems that people may have? Between those two, where do you think India is going to be able to capitalize on what AI brings to the table for healthcare?
I think allowing good options for access to medical science and to understand what is prevalent today in the modern medical science frontiers. Number two, what is most important is that if some doctor tells you to walk a certain path for a certain treatment, you can go to AI and begin to understand and have a broader perspective of that, because doctors generally don't give you more than 10, 15 to 20 minutes. So at least you can read up a lot. So let's say a doctor tells you got to do angioplasty. Let's say your doctor tells you got to put up some stents, and many a times these are not required. So you can certainly access AI to broaden your perspective and understand. Of course, you will take second, third, fourth opinion, but AI gives you a very comfortable, deep dive insight for you to have some knowledge and information. So this is all one can do. Now, you gave an example earlier.
Yes.
That one lady saved her life.
Yes.
But at the other hand, there could be hundreds of lives at stake using AI.
Sure, and those are the risks, yes. But Arvind,
so let's not glorify that one life.
Let's not glorify that one incident. So the anecdotal evidence that is being cited in favor of AI, you're saying we should not mistake that for a holistic, a more universal picture on how AI can tackle healthcare in the future. But Arvind, then how should we look AI in healthcare? Should we treat it like a regulated medical device? Should we look at it as a consumer tech product? Or do you think it should be treated as something entirely new? How do you think we should look at it?
See, healthcare is a trust business. If I go to a Dr. Tiwari and Dr. Tiwari does well, it is baseline. But if Dr. Tiwari does not do well, then I can hold him or his organization to task. And that is how trust gets built. There is a full governing mechanism on healthcare. If I'm trusting someone's advice, they should be held responsible. The challenge with any ChatGPT or GenAI or even Google for that matter is that it's not responsible. The loop is not closed. The feedback loop has to be closed. And until that happens, one cannot replace real doctors, people who are building reputation over decades actually, and institutions get built over a period of time. Until that happens, it can only be an allied use case where you can say, I have this, give me more information, help me learn better, as Mickey is already saying. Or you can say, I have this indication, tell me what are the possible solutions, and that helps you educate yourself better.
So
more than that, I don't think you can replace real people or hospitals or doctors.
Yes, but the real point that you're making is about accountability. When AI advice goes wrong, where should the buck stop?
Yes. And the challenge is, if you go to a hospital, the accountability is already taken care of.
Yes.
And hence hospitals are not going out of fashion. The challenge is, I wish I could just use this as a magic wand and give it to rural areas where there are not enough doctors. Unfortunately, the advice is not 100% reliable as yet.
Right.
It may get there in 2-3 years,
yes,
but it is not there as yet. And until that happens, one should take it take it very slow.
So here's what this debate is telling us. AI in healthcare is no longer this idea of the future. It's already shaping how people understand symptoms and mental health as well. Medical choices are being made. It can inform, it can assist, it can sometimes alert as well. But like everyone over here is saying, it cannot replace clinical judgment, not even human empathy, or for that matter, accountability. In fact, our poll is reflecting the kind of tension that exists over here. Many people already turn to AI for health queries, yet most are still keen on the involvement of a doctor. And that's evident. That may be the balance as of now. AI as a tool, but not as a substitute. My thanks to our panel, Mickey Mehta, Dr. Ashutosh Tiwari, Mehzabeen Dodi, Ritesh Bhatia, Arpit Agarwal. Thank you so much for joining us with your insights. And that's about all we could pack into this edition of The Big Question. Of course, the important questions keep rising, and we're going to keep finding you the answers. I'm Vikram Oza from me and the team. Thank you so much for joining us on NDTV Profit. Good evening.
Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
3, 2, 1. 0, ignition, liftoff.
We want to become the Uber for space. What we do is that satellite companies book the rocket, just like you book a cab, and then go to wherever they want.
So tell us the origin of this entire journey.
Just quit my job, start the company along with my friend Bharat. We both were at ISRO, joined together, so we were flatmates.
So these roommates decide to start their own company. Are you a big fan of the Big Bang Theory?
Of course, who is not?
Who do you identify with most?
I think Sheldon is good.
Do you want to be the Elon Musk of India?
I've been a big fan of Elon. He's a phenomenal, human being, great achiever, wonderful engineer, right? So really inspired by him.
How did your family and your ecosystem react to your decision that I'm going to quit my job in ISRO and start a private space company?
When we started the company, there was no policy, there was no funding environment. Like every family, our family is shocked. What's happening to my son?
What do your parents do?
In fact, I told them after resigning the job.
How do you go about looking for funding?
He messaged Mukesh on LinkedIn.
Are you kidding me?
Yeah.
Your first pitch was on LinkedIn. There'll be room for people in your space cabs?
Yeah, aspiration is 5 years down the line. So we want to make space flight as easy as air flight.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Sandhar Sharma and I am your automate.
The nerve center of the maximum city, the BMC, a contest that will shape Mumbai's next decade, its identity, its legacy, its future. NDTV brings you the battle for Mumbai, asking who will hold the keys to India's richest civic body and what would it mean for Mumbaikars. BMC Power Play, only on the NDTV network. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. Every Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
A very special moment for us as we announce NDTV Masterstroke, the NDTV Art Awards.
NDTV presents the Masterstroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned. Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Hello, good afternoon and welcome to Market Express. I'm Himakshi Bahugna. Markets have wrapped up trade for the day and we are now bringing you a clear snapshot of what really moved the Dalal Street, the key stocks in action and also the global cues that could shape tomorrow's session. Let's get straight to the top stories and let's see how the markets have fared today first. So US-India tariff concerns have impacted the markets as the Dalal Street extends fall for the fourth straight session. Nifty has ended below the 25,900 levels while Sensex has slipped around 800 points today amid the heightened volatility. And looking at the sectors, it was a sea of red across the sectors today, led by metal stocks, which has witnessed a technical sell-off in trade today. IT and export theme stocks have also tanked in trade on tariff concerns. And metals have lost their shine in today's trade, with the Nifty Metal Index slipping 3.35%, its steepest intraday fall since April 2025. Now, the index is now set to snap a two-week winning streak. Now, pressure is also mounting on the ferrous metals as expectations for the third quarter earnings remain weak. Analysts are seeing EBITDA declining for the steel companies, weighed down by a $5 per ton rise in the coking coal cost quarter on quarter. So on the flip side, the outlook for non-ferrous players appears strong, offering some sort of respite to the sector. And if you talk about the defense sector, so that was in focus as India is planning to scrap the restrictions on Chinese firms bidding for government contracts. Now, the move is, coming after ministries have flagged shortages and also project delays under the current curbs. Now, report is indicating that projects awarded to Chinese bidders have fallen 27% year on year in 2021. And this is easing the restrictions, that could really accelerate the stalled defense and infrastructure projects, though it may raise some sort of strategic and security considerations. Now let's talk about a few stocks that were in the spotlight. TRIL has tanked despite a strong third quarter. Now, in a major leadership shake-up, Mukul Srivastava has stepped down as CEO, with Satyen J. Mamtora taking charge as the managing director and also the chief executive officer. So on the earnings front, the company has delivered a robust performance and revenue has jumped 31.7%, which is nearly 32% to 737 crore rupees from 559 crores. And EBITDA has also soared 47.4% to 125 crores. And this is lifting the margins to 20% from just 15.2%. So net profit has also climbed 35% to 73.9 crores against 54.7 crores last year. So strong numbers there, but the stock is under pressure as investors are weighing the impact of the top level change. And Balaji Amines has secured major incentives from the Maharashtra government for its unit expansion under the mega project scheme. Now, the company has received an eligibility certificate paving the way for benefits including an industrial promotion subsidy of 258 crores, 50% SGST refund on eligible sales within the state, complete stamp duty exemption and also electricity duty waiver. Now, these approvals significantly strengthen Balaji Amines' expansion plans and also reinforce its position as a key player in the specialty chemical space. Next up, we have Gland Pharma that has received US FDA approval for olopatadine hydrochloride ophthalmic solution, which is a generic equivalent of Pataday One's daily relief by Alcon. Now, the product is indicated for treating ocular itching caused by allergic conjunctivitis. Now, this approval strengthens Gland Pharma's ophthalmic portfolio in the US market. Now, the drug had an estimated annual sale of $22 million in the US as of April 2024. Next up, we have Larsen & Toubro that has secured an order from the Indian Army for Pinaka multi-rocket launcher systems. Now, the contract includes supplying spares, supporting subsystems modernization at army bases and also undertaking a pilot overhaul of the Pinaka launcher. Now, this move strengthens L&T's defense manufacturing footprint and also supports the army's efforts to upgrade its artillery capabilities for enhanced operational readiness. In fact, let's look at some brokerage notes. So Citi has maintained its sell rating on Dr. Reddy's Laboratories with a target price of 990 rupees. The brokerage is seeing growth and also margin risk ahead, citing limited generic opportunities due to lower price innovator brands. It also flagged negative implications for Dr. Reddy's generic semaglutide and noted a complete response letter in Canada delaying the approval. Now, Citi is estimating only $50 million revenue from the semaglutide in FY27 to 28, well below the street expectations. In fact, HSBC has also maintained its buy rating on UPL while raising the target price to 925 rupees from 850 rupees. Now, the brokerage is seeing Advanta, as a long-term value creator with strong delivery and also growth delivers in place. Reports are suggesting that the company is also exploring capital market options for Advanta, which could unlock value and also help reduce the debt. Now, HSBC is expecting these moves to support sustained growth and also value creation for the shareholders. In fact, HSBC has maintained its buy rating on Tata Steel with a target price of 215 rupees, and the brokerage highlighted the stock's surprising underperformance compared to European peers, especially after the implementation of CBAM, which drove a sharp rally in European steel companies over the past 6 months. Now, HSBC is expecting European steel prices to rise further, creating upside risk to Netherlands estimates. Now, the underperformance is notable given Tata Steel's significant European footprint of 7 million tons. Now, D Development Engineers has delivered strong execution and healthy inflows. The company's order book stood at 1,302 crores as of December 2025, with cumulative orders worth 793 crores already executed. Now, for the first 9 months of FY26, overall order inflows came in at 867 crores, reflecting robust demand and also execution momentum. Now, these numbers underscore the engineer's solid positioning in the engineering and infrastructure space. In fact, Panacea Biotec has hit a major milestone in its dengue vaccine journey. Now, the company has successfully completed phase 3 of clinical trials for its indigenous single-shot dengue vaccine, enrolling over 10,000 participants across 19 sites in India with ICMR support. So this breakthrough positions Panacea Biotec to target a 2027 launch, offering a potential game changer in dengue prevention. Let's look at some brokerage notes again. Citi has maintained a sell rating on ICICI Lombard with the target price of 1710 rupees. Now, the brokerage cites risk-adjusted growth amid elevated competitive pressures as a key concern. Now, while it expects a motor third-party rate hike in FY27 and remains confident on reinsurance pricing, Citi believes that these positives are not enough to offset the near-term challenges in the general insurance space. In fact, Citi has maintained its sell rating on InfoEdge with a target price of 1300 rupees. The brokerage is noting steady billings growth in the Q3, but highlights that non-recruitment verticals remain more competitive compared to recruitment. Now, while there's modest improvement in these segments, Citi is saying that cautious, given the weak outlook for, its hiring, which continues to weigh on the overall growth prospects. In fact, Macquarie is remaining cautious on India's restaurant sector, flagging a back-ended demand recovery and also weak near-term trends. Now, the brokerage is noting subdued demand across the industry, with delivery continuing to outperform the dine-in formats. Now, it has also cut the EPS estimates by 7 to 23% on the delayed recovery expectations, but stays hopeful for a rebound in the second half of calendar year of 2026. Macquarie is saying that demand uptick remains the key driver for sector performance going forward. Next up, we have GR Infra's arm that has successfully completed its road project in Chhattisgarh. Now, the project has been declared fit for operation, and this is marking a key milestone for the company. Now, the bid cost for the Chhattisgarh project stood at 1,527 crores, reinforcing GR Infra's execution capabilities in the large-scale infrastructure development. Next up, we have Meesho, and its shares have slid 5% as the post-IPO lock-in period has ended. Around 11 crore shares, representing 2% equity, became tradable, taking the total, free float to 39.1 crore shares. Since listing, average daily traded volume has been 1.4 times, the free float, and also that's fueling the volatility. In fact, multiple intraday trades have driven sharp prices swings, with daily moves averaging 7% between the high and low. For context, free float refers to shares available for trading in the open market. And next up, we have HUDCO. So, Housing and Urban Development Corporation has signed an MOU with Chhattisgarh government to provide financial assistance worth 11 lakh crores over the next 5 years. Now, the funds will be used for executing various housing and infrastructure projects across the state. Now, this partnership aims to accelerate urban development and also improve the housing availability in the state. Now on to some more corporate action there. India's market regulator, SEBI, is alleging that employees at Bank of America has shared non-public information internally linked to a block deal in 2024. Now, according to sources, SEBI has sent the bank a show-cause notice, also flagging that BOFA allegedly, provided incomplete details when the regulator first sought the information. The notice outlines the allegations and also seeks the bank's response. Now, Bank of America, meanwhile, is preparing its reply but has declined to comment publicly. SEBI hasn't responded outside the business hours. Now, viewers, from regulatory scrutiny to worker safety concerns in the gig economy, a tragic accident in Hyderabad has once again spotlighted safety risk faced by the gig workers. A 25-year-old Zepto delivery partner, K. Abhishek, has lost his life late Monday night while rushing to complete, a delivery. Police is saying that Abhishek lost control of his two-wheeler on a busy stretch near Mehdipatnam. So, after which a private bus ran over him. Now, the incident has triggered outrage among the gig worker unions, who blame the high-pressure, ultra-fast delivery timelines. And police is saying that an investigation is underway and have urged the delivery partners to prioritize safety. In fact, turning to global tech giants and a reshuffle at the very top, Google parent Alphabet has overtaken Apple to become the world's second most valuable company. Alphabet's market capitalization has climbed to about $3.89 trillion after its stock has jumped over 2%. Now, Apple now slips to third with a valuation of roughly $3.85 trillion, while the Nvidia continues to lead the pack. Alphabet's sharp rise has been powered by its aggressive push into AI, especially with its Gemini assistant, even as Google search retains its dominance. And Apple, meanwhile, continues to face investor skepticism over delays in its AI rollout. Now, staying with the big tech, but this time on the jobs front, Microsoft is reportedly preparing for another major round of job cuts, with estimates ranging between 11,000 and 22,000 roles later this month. Now, if confirmed, this would be the company's largest layoff exercise so far, and the 4th January in a row with, workforce reduction. So these cuts are being linked to soaring AI-related costs, including the massive spending on data centers and chips. Microsoft has spent over $80 billion on AI last year alone. Now, analysts are saying that the headcount reductions may be needed to offset the rising depreciation expenses. Now, from AI cost to AI capabilities, OpenAI rolls out a new health-focused feature. OpenAI has launched a new ChatGPT Health tab, following users to ask health-related questions, upload the medical records, and also connect wellness apps like Apple Health and MyFitnessPal. Now, the company is saying that the health and wellness is already one of the ChatGPT's most popular use cases, with over 230 million users globally seeking such information every week. Now, the new feature aims to help the users understand the test results, also prepare the doctor for visits, and manage diet or fitness goals. Now, the launch is coming even as regulators are reassessing this oversight of health tech tools. Now, viewers, Samsung Electronics has projected a 208% rise in fourth quarter operating profit from a year earlier, significantly beating the analyst expectations here. The South Korean tech giant's forecast reflects sharply higher memory chip prices driven by strong demand for artificial intelligence hardware. And Samsung has estimated its operating profit for the October-December period at about 20 trillion won, which is the highest quarterly figure on record. Now, revenue is also expected to climb around 23% year on year. So the company will release the detailed quarterly results later this month. Now on to some national news. External Affairs Minister S. Jaishankar has said that he can fairly confidently predict a major upswing in India's relationship with Europe in 2026. Speaking during an interaction with the Indian community while on a visit to France and Luxembourg, Jaishankar has said that global volatility is forcing the countries to rethink the partnerships. He has added that it's no longer just about de-risking and about building deeper, trusted relationships, something that is bringing India and the European Union closer. Jaishankar has said that New Delhi will invest far more time and attention in Europe going forward. And from diplomacy to justice, a key development in a Manipur violence case. A special CBI court in Guwahati has framed charges against 6 men in one of the most horrific cases linked to the Manipur violence of 2023. Now, the case relates to the incident on May 4 where 3 women were stripped and paraded naked, and 2 were allegedly gang raped in public view. Now, the charges also include, the alleged killing of 2 relatives of one of the victims. The CBI has told the court that there is sufficient material to establish a strong prima facie case. Now, defense lawyers, however, have contested the charges. Now on to some election-related updates from Maharashtra. The Maharashtra government has declared a public holiday on January 15, 2026 across areas voting in municipal corporation elections. Now, the move is aimed at ensuring voters can cast their ballots without work-related disruptions, and the holiday will apply in 29 municipal corporation jurisdictions covering government offices, banks, semi-government bodies, and also undertakings in the notified areas. Importantly, the order also applies to the registered voters working outside their voting jurisdictions. And political temperatures are also rising in West Bengal. The Enforcement Directorate has conducted raids at the Office of Political Consultancy IPAC in Kolkata as part of a probe into an alleged fake government job scam. Now, the searches are underway at multiple locations across the country. West Bengal Chief Minister Mamata Banerjee has reacted sharply, alleging that Trinamool Congress party documents were taken during the raid. Now, accusing the ED of targeting her party ahead of the elections, Banerjee has questioned the seizure of what she called party files and data. And now news of a major loss to India's environmental movement. Renowned ecologist Madhav Gadgil, known globally for his work on the Western Ghats, has passed away in Pune at the age of 83. Gadgil has shared Western Ghats ecology expert panel and also played a pivotal role in shaping India's environmental discourse. Last year, the United Nations has honored him with the Champions of the Earth Award, its highest environmental recognition. And Gadgil's work has highlighted the fragile balance between development and conservation in one of the world's richest biodiversity hotspots. And the Supreme Court has postponed its hearing on petitions challenging the Election Commission's special revision of electoral rolls. The matter will now be taken up on January 13. Petitioners argue that the revision violates established norms and also could impact the voter list ahead of the upcoming election. The EC has maintained the process is routine and necessary for the accuracy, and the court's decision could influence the electoral preparations in several states. Now on to some global news. A controversial US sanction bill that could hit countries buying Russian oil, including India, has received President Donald Trump's backing. Now, Republican senator is saying that Trump has greenlit the bipartisan Graham-Blumenthal bill, which allows the US president to impose tariffs on up to 500% on nations that knowingly purchase the Russian oil or the uranium. Now, the bill is aimed at economically squeezing Moscow as Washington pushes for an end to the Ukraine war. Graham is saying that a vote could come as early as next week, though the timing remains uncertain given the US legislative calendar. And staying with the Washington, the Trump administration is also pulling the US out of major global bodies. Donald Trump has signed a memorandum directing the United States to withdraw from 66 international organizations and United Nations affiliated entities it says are contrary to US national interest. Now, the list includes 35 non-UN groups and 31 UN bodies such as the UN Framework Convention on the Climate Change and agencies focused on gender equality. And this development, the White House is saying that the move will end US participation and also funding in these organizations. And this reflects Trump's broader strategy of prioritizing sovereignty and reducing the engagement with multilateral institutions. Critics are warning that this step could diminish the US influence in key global areas like the climate negotiations and humanitarian programs. And now to the Arctic, where Washington's interest in Greenland is back in focus. US Secretary of State Marco Rubio is saying that he will meet Danish officials next week amid renewed US interest in Greenland. Now, the talks comes as the Trump administration doubles down on its view that controlling the strategic Arctic island is critical for US security, particularly with growing Chinese and Russian presence in the region. Now, Denmark's foreign minister and Greenland's leadership had sought the meeting after earlier requests went unanswered. Now, Rubio has also told the US lawmakers that Washington prefers purchasing Greenland rather than using military force, which is a stance that has already stirred the diplomatic unease in Europe. Now on to some sports news. Australia has sealed a 4-1 series victory by beating England by 5 wickets on the 5th day of the 5th Ashes Test in Sydney. Chasing 160 for victory, the hosts have reached targets with 5 wickets down, ending England's resistance late on day 5. Travis, the head, anchored the chase, complimenting the contributions from Weatherland. And earlier, England were bowled out of for 342 after resuming at 302 by 8, with Bethel's 154 failing to prevent their defeat. Now, the victory is marking Australia's 4-1 Ashes triumph and also brings Khwaja's Test career to a fitting farewell. And with that, viewers, we wrap up Market Express. We'll keep tracking all the developments that could really set the tone for next trading session. Thanks for watching. I'm Himakshi Bhogna. Stay tuned.
Ignition. Liftoff.
You want to become become the Uber for space. What we do is that satellite companies book the rocket, just like you book a cab, and then go to wherever they want.
So tell us the origin of this entire journey.
Just quit my job, start the company along with my friend Bharat. We both were at ISRO, joined together, so we were flatmates.
So these roommates decide to start their own company. Are you a big fan of the Big Bang Theory?
Of course, who is not?
Who do you identify with most?
I think Sheldon is good.
Do you want to be the Elon Musk of India?
I've been a big fan of Elon. He's a phenomenal, human being, great achiever, wonderful engineer, right? So really inspired by him.
How did your family and your ecosystem react to your decision that I'm going to quit my job in ISRO and start a private space company?
When we started the company, there was no policy, there was no funding environment. Like every family, our family is shocked. What's happening to my son?
What do your parents do?
In fact, I told them after resigning the job.
How do you go about looking for funding?
He messaged Mukesh on LinkedIn.
Are you kidding me?
Yeah.
Your first pitch was on LinkedIn. There'll be room for people in your space cabs?
Aspiration is 5 years down the line. So we want to make space flight as easy as air flight.
Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network. New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. The nerve center of the maximum city, the BMC, a contest that will shape Mumbai's next decade, its identity, its legacy, its future. NDTV brings you the battle for Mumbai, asking who will hold the keys to India's richest civic body and what would it mean for Mumbaikars. BMC Power Play, only on the NDTV network. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
NDTV presents the Master Stroke Art Awards, an odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
Honoring the masters who define our creative landscape. Coming soon on the NDTV network.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Sandhar Sharma and I am your automate.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned. Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most.
Market ends lower for fourth straight session, with Nifty falling below 25,900 and Sensex losing over 3,800 points. All sectors closed lower. Mid and small cap indices underperformed the benchmarks. Metal index bleeds as a top sectoral loser to close over 3% lower. Jindal Stainless, Hindustan Copper fall over 5% and Hindustan Zinc loses over 6%. IDFC First Bank gains close to 3% after cutting its savings account interest rates, lowers headline rate by 50 basis points and reshuffles balance slabs. Bajaj Finserv ends insurance joint venture with Alliance after acquiring 23% stake in insurance arms for 21,390 crore rupees. With this, Bajaj Finserv's shareholding Bajaj Life Insurance and Bajaj General Insurance goes up to 75.01%. PVR expects Q3 to do well on the success of Dhurandhar. Executive Director Sanjeev Bijli tells NDTV Profit plans to expand premium screens in other cities. Russia slams US over seizure of oil tanker in the Atlantic Ocean, says no state has the right to use force against vessels lawfully registered under another state's jurisdiction, adds it received temporary permit to sail under the Russian Federation flag in accordance with the international law. Trump allows a bipartisan Russian sanctions bill. It targets the countries doing business with Russia, is expected to impact China, India and Brazil. Republican Senator Lindsey Graham says the Congress will vote on it next week. US withdraws from 66 international organizations. Secretary of State Marco Rubio calls them anti-American, useless or wasteful. Says the administration will stop subsidizing globalist bureaucrats who act against America's interests. Good evening, viewers. I'm Malika Mishra on NDTV Profit and you're watching Profit 360, a show that gives you well-rounded stories from the realm of markets, national and international news. Today we begin with focusing first on layoffs, job cuts. Microsoft may announce major job cuts soon. Reports suggest between 11,000 and 22,000 roles could be eliminated in the third week of January 2026. Now, this would be the company's largest layoff round yet and the fourth straight January with reductions. The main reason? Soaring costs from heavy AI investments. Microsoft spent over $80 billion last year on data centers, chips and AI tools, and is shifting spending from salaries to long-term tech assets. Analysts had earlier projected that Microsoft may need to eliminate at least 10,000 roles annually to offset higher depreciation expenses stemming from data center expansion. In 2023, Microsoft cut 10,000 jobs, or around 5% of its workforce. In January 2024, the company laid off around 1,900 employees in its gaming division, roughly 1% of staff. In 2025, job reductions continued. Slightly less than 1% of employees were let go in January in what were termed performance-related cuts, followed by a 3% reduction in May and another 4% in July. So the point is, many job cuts were seen through the course of these 2 years. And it's not just Microsoft, Amazon, TCS and Salesforce too have laid off a significant portion of their employees due to AI. Now, what does this mean for India? How do we upskill and protect our jobs? What does the future of the job market look like where companies are heavily investing on AI? To help us figure out these answers, we have Neeti Sharma, CEO, Team Lease Digital, and Ravi Kaklasarya, co-founder and CEO at Edforce. Thank you so much, Neeti and Ravi, for joining us in this conversation. I'll start with Neeti. Given Microsoft's reported shift from payroll to heavy AI capex, how likely do you see Indian development centers, GCCs, or offshore teams being affected by the rumored January 2026 layoffs? And number one, is this more about optimizing global structures, or could it accelerate offshore or nearshoring changes?
So, Malika, I think the answer is in between everything that you've kind of put together, right? I think the layoffs are primarily happening in places which are not long-term in nature for any organization. Given the AI investments, data investments, all these companies are making, the skill set requirement for the future is very different than what it had been previously. And whoever has not been able to either upskill themselves, is not mobile enough to move to newer geographies, newer projects, newer roles, and or are just not fitting into the new org structure, which is for the future, they are the ones that are getting laid off. Of course, the biggest reason is that there's a skill mismatch, and that's primarily because with the whole AI adoption, generative AI, agentic AI requirements that are coming in, the skills needed are very, very different. So far, we hadn't seen such a big impact in India, but I think in the future, we will see such impacts because people who are not able to upskill themselves and be relevant to the future world of work, their jobs are going to be questioned, and their productivity is going to get questioned, and thereby layoffs will happen. How do we offset it? I think we need to make a lot of investments in skilling ourselves, be ahead of the curve, not just in current way the way AI is getting deployed, but even for the future. So I think a lot of innovation, a lot of R&D, a lot of investments need to be made to be relevant to the global environment, so that our IDCs, our GCCs, and our services, companies kind of continue to stay relevant.
Okay, so the question about relevance, you actually give me a very good segue point to ask Ravi this question. Ravi, when I was noting down some points to discuss tonight, one question that really lingered in my mind is often, we are told that we need to upskill in order to match the demand of AI, and that's why maybe job cuts are happening, as highlighted by Neeti as well. She said there's a mismatch in the skill, and that's the core reason behind why we're seeing these layoffs in the past couple of years. What kind of an upskill? And do you think, because it matters to our viewers, especially those who reside in India, does the Indian education system currently cater to the upskilling, to the kind of academics that's needed to match these AI skills? Because I don't see it happening now at school levels. When do you think that would happen, and by when can we actually come to that point where Indian education is empowered enough to support this kind of demand in the market?
So, echoing what Neeti just said, I think there definitely is a gap between what is available right now in the market in terms of upskilling and reskilling and what industry really needs. The gap is not that there is not enough scale or not that there is not enough talent or learners, but the gap is ensuring that the learning or the skilling is aligned with the industry. Now, you specifically pointed about the education that is available, whether it's in universities or in schools. Definitely, we being in the skilling industry, we are seeing there is an obsolescence that's happening in terms of the skills that is available right now and what actually the industry needs. And before it becomes a news or we see those numbers in the HR or recruitment, which might happen 6 months or 12 months down the line, we are seeing those patterns in terms of there is a threat. It's not a crisis as yet, but there is a threat. What will happen? And the kind of education that is available in the colleges or universities, definitely it needs to be revamped. aligned with what industry is looking for. There are a lot of various roles that are evolving in the AI itself. People talk about, jobs getting slashed and, jobs being taken by AI. I would personally say that is a very unfounded fear. The jobs are not being taken away. It's the tasks that are being taken away and new roles are being defined.
Okay.
So the number one, yeah, sorry.
No, I get your point. The thing is, I wanted to interfere and break down what you're saying in different points. I'll get a Niti also in this conversation. Niti, Microsoft's massive AI investments appear to involve reallocating budgets from people costs to capital expenditures like data centers and tools. In the Indian IT context, where many roles support global clients, do you see this trend pushing similar reallocation across Indian IT services firms? And what does it mean for overall headcount sustainability in the near term at least?
Yeah. So I think in the near term, Malika, we will see a dip in the overall headcount growth. But as you also hear other services companies talk about, that the growth is not going to be just headcount in the future, it's also going to be how revenues and profits and productivity of employees is going to grow. So I guess the way we are now looking at growth is pure headcount driven. In the future, the growth parameters and matrix will also start getting diversified. To what Ravi was saying, that how is it going to impact us as a country, and you asked this question, Malika, that what is it that we do as a country to safeguard ourselves? There are lots of new jobs getting created that are, by the way, moving to India. Whether it's AI developers, whether it is prompt engineers, whether it are data work, data engineering, analytics, data security, data annotation. So there are a lot of new jobs that are getting created, and those are moving to India. So if we are prepared enough, I think we have a lot of opportunity to continue growing the way we have done in the past. Of course, in the short run, there are these layoffs happening. The number of new people getting into the workforce is not going to be as high as what it used to be in the past few years. But I guess in the long run, this is definitely going to be beneficial for us. But we have to capitalize and we have to take charge of what's going to be in the future.
Okay, I take your point very well. But something that does not answer my question is, and I'm thinking from that perspective where, say, from a first person perspective, I'm an employee working in an IT services company, and I'm suddenly told that whatever my KRAs are, they don't really match the requirements of the job. Now, where do I go? Do I leave the company, resign, spend about 6-7 months or 1 year or 2 years into a course that helps me upskill into some AI related skilling? Or do I search for a job maybe for less pay? Because that's a reality of many people who are already embedded and working in this domain. We need to understand that, of course, there are job openings that are opening. There are fresh opportunities that are available in the market. Of course, as Ravi highlighted, that we have fresh courses that are coming also. We're taking baby steps. But in the process of it, it's the men it's the labor who's already in the workforce that perhaps is the most vulnerable at this given point in time. And Ravi, this is where I'm actually, losing time in this conversation, but I would like to get your comment on one last question. With NASSCOM estimating India needs 1 million AI professionals by 2026, but the current skilling lagging, does India have the infrastructure? And how long do you think we would take to build that?
Right. So I think infrastructure is definitely not an issue. The issue is the velocity at which we are able to upskill our workforce and how well that upskilling curriculum or the programs are aligned with what industry is asking for. Scale in India I don't think it has ever been an issue. I think even if we look 2 decades back or in the last decade or even currently, scale or the numbers are never a problem for India. In fact, those are the strengths of India. That is where the global IT industry looks at India for those numbers. One of the major gaps that we see all the time is how fast we are able to take the feedback from the industry and inculcate it back in the various upskilling programs to ensure that upskilling programs are aligned with what industry is looking for. And I think that is where, while we are doing a lot of intervention at the private level, an intervention at the government level, at the policy level will help that we are able to accelerate the upskilling programs and reduce the gap between what is available in the upskilling and what the industry is asking for. I think that one policy push is really going to help in ensuring that people are aligned.
Understood. So I take two key takeaways. Thank you so much, Niti and Ravi, for giving us your perspectives from the point of employment as well as our education system. And as you highlighted, it's not the scale that is an issue, but perhaps the velocity of the velocity at which things are running at this given point in time. Thank you so much for joining us.
Thanks.
And moving on, viewers, the government has taken a big step towards smarter and safer roads. Union Minister Nitin Gadkari has launched vehicle-to-vehicle communication technology, a system that allows cars to communicate directly with each other without needing a mobile network. The technology is designed to prevent accidents, especially in low visibility conditions like fog or when vehicles are parked on roads and fast-moving traffic approaches from behind. The project is estimated to cost around 5,000 crore, with the Department of Telecommunications providing spectrum free of cost. Officials say this kind of technology is currently used by only a handful of countries worldwide. Let's listen in to what the Road Transport Minister Nitin Gadkari had to say on this news.
इसमें ये रोड सेफ्टी जो एक्सीडेंट्स हो रहे हैं, इसके लिए जो 100 डिस्ट्रिक्ट के कलेक्टर, एसपी, वहाँ के गार्डियन मिनिस्टर अगर होंगे तो, और उसके साथ साथ इसके लिए वहाँ के मेंबर ऑफ पार्लियामेंट, क्योंकि हमने हर डिस्ट्रिक्ट में मेंबर ऑफ पार्लियामेंट की अध्यक्षता में एक्सीडेंट निवारण कमेटी अपॉइंट की है। तो ऐसा करके हम यही भारत मंडपम में इन सबको एक समय बुलाएंगे। कुछ समय काम शुरू हुआ है और ये 100 जिले में अगर हम सुधार पाएंगे तो ये मरने वालों की संख्या हम काफी कम कर पाएंगे।
It's now time to look at how the Indian stock markets performed. Well, they closed lower for the fourth straight session today. The Nifty slipped below the 25,900 mark, ending around 25,877 after falling over 260 points. The Sensex dropped sharply by 780 points to close near 84,180. You can see that on your screen. A combination of factors such as tariff pressure and consistent FII selling seems to be dampening investor sentiment overall. Heavy selling hit metals, oil and gas sector, dragging those indices down. And next up, Bajaj Finserv has completed the acquisition of a 23% stake in its insurance joint ventures from Alliance SE for 21,390 crore rupees, marking a major shift in the group's insurance strategy. Now, with this transaction, Bajaj Finserv now gains greater ownership and control over its life and general insurance businesses. The move effectively ends Alliance's long-standing partnership with the Bajaj Group in insurance, even as Bajaj Finserv doubles down on the sector's long-term growth potential. The company says the acquisition strengthens its strategic flexibility and positions it to scale its insurance businesses independently going forward. We also are focusing on IDFC Bank as it has changed its savings account interest rates, and the new rates start from January 9th, 2025. That's tomorrow. The bank has lowered the top rate to 6.5% from the earlier 7% rate, and now interest works on a progressive basis, meaning different parts of your balance earn different rates. For balances up to 1 lakh rupees, you get 3%. Above 1 lakh to 10 lakh, it's 5%. Above 10 lakh to 10 crore rupees, you earn 6.5%. For even higher amounts, above 10 crore to 25 crore rupees, the figure is 6%, and then 5% up to 100 crore rupees and 4% beyond that. Now, this change mainly affects larger balances, while smaller savers up to 10 lakh rupees see little difference. Upgrad's potential acquisition of Unacademy has fallen through due to valuation differences, confirmed co-founder Ronnie Screwvala. He said that the companies could not arrive at a mutually agreeable valuation, leading to the decision not to proceed with the deal. While specific financial terms were not disclosed, Screwvala emphasized that discussions ended respectfully. And moving on, we have Sanjeev Kumar Bijli, the Executive Director of PVR Inox, in conversation with my colleague Rishabh Bhatnagar. He said that the Q3 performance was supported by Dhurandhar and other well-performed films. He added that while Q4 is typically slower, the upcoming film slate looks encouraging, with premium recliner screens continuing to see higher occupancies.
Q3 has just ended now. Of course, Dhurandhar was a big success. I think in the last quarter, which is normally a slightly lower quarter. But this year we have Border 2, which is coming out on Republic